Oh, where is it? Oh, there it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're a mobile press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream a Large Boat Campaign real estate course. But, ladies and gentlemen, welcome to Friday, Junior. We got a lot on our hands, and honestly, it's kind of like a wait-and-see mode leading into the non-farms tomorrow. We're kind of moving here, got a little bit of relief. There was actually a lot of data. You had good China export numbers, and that was a surpriser, even though China is trading lower. You just had the ECB right now, Christine Lagarde. She's talking. She's not saying anything about raising rates. And then you had a little bit more movement with gold. You had gold and oil, and then there was something out there with NVO, and there's one more thing I'm missing. Oh, I'm missing one more part. Oh, Japan. The wages and comments from the Bank of Japan, that got the yen moving up a ton, I believe the most in a month. So we got a lot of things that we're juggling today, but it's still kind of this wait-and-see mode for the non-farms. You did get jobless claims. They did not move us that much, but all in all, we are getting ready for tomorrow. Markets are up. We got Powell 30 minutes after the bell. Shouldn't bring much, but either way, we should see some fireworks to the end of the week. But Chad, I hope you're locked and loaded. I hope you're ready for all of it. But now it's Friday, Junior, and you're here. Good morning, baby. What's going on? How you living? What up, Battleboard? What up, Lori, Matthew, Brian, Tim, Zorad, Dirty Bird, Burrito, Benny Silverio, baby. Good morning. What up, Marcus? What up, Mark? Battleboard again, baby. Christina, Monica, Candy, CYB, baby. Jeff Kent, Mark J, baby. Carissa Hines. Good morning. What's going on, Fighting Bear? Ted Kingsley, Ben Stone, baby. Laker J. Good morning. Humble Business. Mr. Spriggs, Devlin, Johnny.com, baby. El Chapato, El Araya, baby. Kurt McGart, Rodney Gibson. Good morning. What up, Jerry? What up, JD? How you living, Harmony? What up, David Tello? Carlos, Jamar, Winnie Lozar. Open Face Sandwich in the house, baby. Good morning. Oh, what up, Inland Empire? How you living, Patrick? What up, Kenny Miranda? What up, Greg, John Riley, baby? Lay 'em down, Sean Moose, baby. Good morning. Stealth, Trey, Kenny, D-Sane, Can. Good morning. Happy Friday, Junior, baby. What up, John Mark? What up, Humble? What up, Ari? What up, 10% Alex? Good morning. Oh, Light Abyss in the house. Peso at home, ready to go. Remixable, ready to go. I know Ken San got that law term. Sarah Sosa got the law term. I know Patrick got it too, baby. Good morning. Happy Friday, Junior. What about the Twitch? What about Sidonian, Slizzin, Damn Royalty, baby, Mr. Belvedere, Kuva, Cuba, Mr. Sencal, Disappointment, KJ Lemur, Universe's Favorite, Tummy, Brexton, 8012, Most Dope Andy, El Coyote, Vasily Wolf, Brexton, Pingo, Preforms, 8012, Blowing Doll, S. Jones, Jags, baby, Blazing Bob, Danny Belvedere, Hailstone, Feed Me, Seymour, Ryan A., Brexton, Pickle Pickler, and El Coyote, Wavy Bone, and who else? Robo Handtech and Uncle Nick. Don't forget about him, baby. What up? What up? Good morning. So, Chattadonia, I hope you're ready. You still got Lagarde. She's talking right now. We're going to get a little bit of that. We have Powell 30 minutes after the bell. Not that much data, but again, tomorrow morning, we are going to be getting the big stuff. So, let's see what this setup takes us into. But now, before I give you any more, it's time that my assistant steps in and explains to you in about 8 minutes everything that went on this morning. I will have follow-ups for you. The idea here is to get as much info as possible, as fast as possible. So, Chad, here it is. I will BRB.
Stocks rise ahead of Powell, Euro falls after ECB. Wall Street traders refrain from making big bets ahead of Jerome Powell's testimony and Friday's jobs data. The euro fell as the European Central Bank kept rates steady and lowered its inflation forecasts. Stocks saw small gains, while bond yields edged lower after jobless claims were unchanged at 217,000, with investors now gearing up for the final payrolls report before the Federal Reserve decision. Traders will once again be glued to their screens as they await to hear further insights from the Fed chief, who signaled Wednesday no rush to ease policy. Fed Chair Powell's congressional testimony did not meaningfully alter current policy expectations, said Thomas A., founder of the Sevens report. Powell largely repeated what has been consistent Fed messaging: rates have peaked, they will be cut, but it's not happening soon because the Fed needs more proof inflation is going to get to 2%. S&P 500 contracts signaled the benchmark gauge will extend its advance above 5,100. Treasury 10-year yields fell 3 basis points to 4.07%. The euro dropped 0.2% and German bonds extended gains. Speculation surged that the Bank of Japan will move this month to raise interest rates for the first time since 2007, after a flurry of reports and wage figures helped drive the yen higher. Corporate highlights. General Electric Company's aerospace division set plans to return more of its profits to shareholders, including restoration of a significant dividend as it accelerates earnings as an independent company. 2 NVIDIA Corp directors sold about $180 million in shares of the chipmaker in recent days, becoming the latest insiders to cash in as the stock continues to push deeper into record territory. Micron Technology Inc. was upgraded to buy from hold at Stifel, with the broker saying that average analyst estimates for 2025 are wrong and too low for the chipmaker. Victoria's Secret & Co., a lingerie maker, reported full-year sales guidance that fell short of analysts' expectations. Cigna Group has struck deals with obesity drug makers Eli Lilly & Co. and Novo Nordisk AS that aim to widen coverage by limiting how much employer-sponsored health plans have to pay for the medicines. Novo Nordisk AS touted the potential of its next-generation obesity treatments, releasing promising data on an experimental daily pill and sending the shares soaring to a record. Key events this week. Eurozone GDP, Friday. U.S. non-farm payrolls, unemployment, Friday. New York Fed President John Williams speaks, Friday. ECB Governing Council member Robert Holzman speaks, Friday. Powell repeat. Fed Chair Powell will testify before the Senate Banking Committee on Thursday. A day after signaling officials would scale back plans to make them hold more capital, a move that appeared to catch even seasoned industry lobbyists off guard. Powell also reiterated the central bank is in no rush to cut interest rates, while adding that it will likely be appropriate to begin lower borrowing costs at some point this year. That was enough to spur the biggest two-day rally in Treasury since early February, keeping benchmark 10-year yields near a one-month low set on Wednesday. Powell's testimony, due at 10 a.m. New York time, will come after weekly labor data that's forecast to show initial jobless claims picked up slightly from the previous period. Biden attacks. President Joe Biden's campaign plans to ramp up attacks on Donald Trump's economic agenda for a second term. In memos that will be circulated on Thursday during the president's State of the Union address, his speech will focus on increasing the minimum tax rates paid by major U.S. and multinational corporations to 21% and eliminating breaks for companies with high-paid executives. Meanwhile, Biden's top economic aide, Lael Brainerd, successfully pressed to adjust the White House forecast so that it resulted in a slightly rosier outlook in the president's budget plan that's scheduled for release on Monday. Japan bets. Speculation surged that the Bank of Japan will move in March to raise interest rates for the first time since 2007. Following reports that some BOJ policymakers favor an early move and some government officials support a rate hike that sent the yen surging more than 1% to a one-month high against the dollar Thursday. And Japanese bank shares and government bond yields rose after the wage data and remarks from a BOJ board member who expressed confidence in inflation. Japan's economy and inflation are steadily making progress toward meeting the stable 2% inflation target, BOJ board member Junko Nakagawa said. China's warning. China's foreign minister blasted the U.S. for imposing a bewildering level of trade curbs on the Asian nation. The U.S. has been devising various tactics to suppress China and keeps lengthening its unilateral sanctions list, reaching bewildering levels of unfathomable absurdity. Foreign Minister Wang Yi said at an annual press briefing in Beijing on Thursday. The top diplomat's comments come as the Biden administration is pressing allies including the Netherlands, Germany, South Korea and Japan to further tighten restrictions on China's access to semiconductor technology. ECB's turn. The European Central Bank is set to keep borrowing costs steady for a fourth meeting on Thursday, with analysts unanimously predict the deposit rate will be held at a record 4%. Like their U.S. counterparts, President Christine Lagarde and her colleagues are in no hurry to begin loosening monetary policy. Traders are bracing for the likelihood of the first quarter-point rate cut to be delivered either in June or July, while also expecting a total of at least 3 such reductions this year. Top overnight news. The BOJ's governor and one of its board members said on Thursday the economy was moving towards the central bank's 2% inflation target, in comments that heightened market expectations of an imminent end to negative interest rates. RTRS. Japan's largest industrial labor group said on Thursday that 25 of its member unions have so far had their wage demands met in full from management, agreeing to raise full-time workers' pay 6.7% during annual wage talks that end next week. The pay hike was the biggest since the UA Zensen, an umbrella group that represents 2,237 unions, was established in 2012, likely adding to the momentum of the ongoing negotiations. Strong wage growth is expected to pave the way for the central bank to normalize monetary policy. RTRS. China's import-exports for the Jan-February period exceed expectations. Exports came in at plus 7.1% versus the street plus 1.9%, while imports rose 3.5% versus the street plus 2%. China's FX reserves for February came in at $3.225t, a bit ahead of the street's $3.217t forecast. RTRS. China is scrutinizing regional banks' bond trading over concern they are speculating, rather than lending to boost the economy, people familiar said. BBG. Tonight Biden will propose a dramatic expansion in the number of drugs Medicare can negotiate pricing on along with other measures aimed at curbing pharmaceutical costs for Americans. The Hill. Joe Biden's top economic aide, Lael Brainerd, successfully pressed to adjust a White House Treasury yield forecast in a way that resulted in a slightly rosier outlook in the president's forthcoming budget plan, people familiar said. BBG. Robinhood is seeing as much as 25% of total trading volume coming outside of traditional market hours as investors take advantage of extended days on the retail brokerage platform. Consumers have traded more than $10 billion in volume overnight since Robinhood launched its 24-hour, 5-day-a-week trading capabilities last May, data the firm hasn't previously announced. BBG. Apple has been asked by the EU to explain why it prevented Fortnite video game maker Epic Games from launching its own online marketplace on iPhones and iPads in Europe and whether this breaches EU technology rules, antitrust regulators said. RTRS. ExxonMobil said it filed a contract arbitration claim related to Hess Corp's Open's new tab proposed sale of its Guyana oil properties, and suggested it may counter Chevron Corp's pending deal for the assets. RTRS.
RTRS. Let's go, baby. And shout out to Twitch, man. They got a hype train going here on Friday, Junior. That's what I'm talking about. A little bit more. Again, a couple of headlines there. We are dancing all around the world right now. It looks like S&P futures are up by 0.3 Thursday morning after U.S. equities finished higher on Wednesday with the help from a tech bounce, semis, cloud, software, AI, Bitcoin plays, memes, China ADRs among the standouts. Treasury firm with some stance on a curve flattening or steepening. Dollar index down by 0.2. Yen, the big story in Forex on the Bank of Japan normalization. Gold is up by 0.5. Bitcoin down by 0.5. And WTI is off by 0.3. Markedly seemingly in waiting mode for non-farm on Friday and CPI next Tuesday. Powell a non-event with the reiteration of widely hashed out Fed talking points and the hawkish repricing of Fed pivot expectations that had already taken place. Big tech dispersion, a key area of focus for the market right now. Some debate about the risk sentiment, signaling giving concentration and rotation dynamics. Stretch positioning still flagged as an overhang, though buybacks a bright spot. Goldman raised its 24 buyback forecast and is looking for even stronger growth in 25. Growth estimates coming in a bit following a recent batch of softer data, though still supportive of the soft/no landing narrative. Initial jobless claims came in largely in line with expectations. No change to Q4 productivity and final reading, while unit labor costs were revised lower. Fed Chair Powell back for a second day of monetary policy in Washington. Cleveland Fed Mester scheduled to speak at 11:30. Recently noted that they think 3 cuts this year feels about right. Fed Kashkari says he sees 2 rate cuts at most this year. Overseas, ECB kept rates unchanged as expected. Japan wage growth came in firmer than expected in January, while Bank of Japan's Nakagawa talked about potential of virtuous wage price cycle, and press reports noted several government officials supporting a near-term NERP exit. Elsewhere, China growth surprised to the upside in January-February period. Apple reportedly under scrutiny in Europe over treatment of Epic Games. U.S. government reportedly set to invest $3.5 billion in Intel for advanced military intelligence chip production. ADT pressured by 65 million share sale. NVO up on capital market day latest GLP-1 data. GE reaffirming GE Aerospace guidance. CI raised long-term EPS growth guidance. Kroger beat and guided above. Burlington beat and guided above. BJ's down on softer GM performance and below consensus EPS. CN said taking longer than expected for SPs to work through high levels of inventory. ABM beat and raised despite soft CRE demand. ARHS beat and guided full year above approved special dividend. INFN guide light, though hyperscaler win was a positive. And Victoria's Secret quarter four ahead, but stock down big on weak guidance. Not bad. There's still a little more. Powell says Fed likely to ease at some point this year, but needs more confidence on inflation. Fed Kashgari expects 2 rate cuts in 24, potentially just 1. ECB to leave policy on hold and may start to move to cut rates. Bank of Japan's Nakagawa says virtuous wage price cycle can be envisaged. Japan's government officials support near-term Bank of Japan rate hike. U.S. CEO confidence hit highest since mid-2022, reflecting stronger sales outlook, investment improvements, and hiring plans. Japan nominal wages rising at the fastest pace since June. Real wage declines narrow. China January-February export data tops forecast in positive sign for global trade. German factory orders fell sharply in January after big increase in December due to large orders. Goldman raises share buyback forecast for S&P, citing stronger than expected mega-cap tech growth. Foreign net flows to emerging markets add $22.8 billion in February. Powell signals officials to scale back plans to require banks to hold more capital. EC looking at Apple's treatment of Epic Games. Meta, Google, big beneficiaries of Temu's push in the U.S. U.S. government set to invest $3.5 billion in Intel for production of advanced chips for military and intelligence programs. J.P. Morgan pursued possible acquisition of Discover before Capital One agreed to deal. Carlyle, KKR among firms interested in acquiring Samsonite. Paramount considered the sale of India TV to Reliance. Biden's SO2 highlights will be 21% minimum tax on large corporations and big tax hike on billionaires. Democratic lawmakers say State of the Union performance pivotal to reassure over his age. Biden's campaign plans to ramp up attacks on Trump's economic agenda for a second term. Crude stockpiles rise less than expected. U.S. government pressing allies to further tighten curbs on China's access to semiconductor technology. And China's foreign minister hits out U.S., accusing it of failing to fulfill promises made. And White House recently asked for a list of all weapon transfers to Israel, planned for approval in the coming weeks. Wow. We're early. We got through that one pretty quick, so don't worry. There's still a couple of plays out there. You got a decent amount of pre-market movers. RTO, they're up 17.3, earnings and dividend increase. AGR is up 10.7, non-binding proposal from Iberdrola to purchase remaining outstanding stake for $34.25. NVO is up 5.8, capital market day. Data from phase 1 trial of GLP-1 and amylin co-agonistis amycretin. KR is up 5.2 off of earnings. Burlington up 4.8 off earnings. Micron 3.8, Stifle upgrade. Palantir up 3.4, nothing. Rivian 2.8, Jefferies initiates buy. RMD 2.7, GSK up 2.6. Phase 3 Dream 8 trial for Blenrep met its primary endpoint. RPRX 2.3, Guild Biktarvy data. Intel up 2.1, government to invest $3.5 billion for advanced semiconductors. FCX up 1.9, Broadcom 1.7, MSTR 1.7, Dexcom 1.7, Nvidia up 1.7, Siri up 1.7. Berkshire Hathaway discloses purchase of Liberty Series A, and Series C stock. AKM up 1.5, Baird upgrade to outperform. RSI up 28% off earnings. CC up 18, update on internal review. AEO up 13.9 off earnings. ETNB up 11.2, holder RA discloses purchase of 1.35 million shares. ABM is up 8.7 off earnings. ARHS up 7 off earnings. NMM up 6.8 off nothing. EYPT 6.8 off earnings. Up 6.2 off of earnings. NYCB up 3.9. Updated details of transaction. Conference call to discuss $1 billion equity raise. ASPN is up 3.8 nothing. ADV 3.7. Nutrila 3.4. IonQ 3.0. YMM up 2.8 off earnings. Shack 2.7. TD Cohen upgrade. IAG up 2.7. Cero CERO up 500%. Preclinical research supporting use of SARE 1236 to treat AML. BNF up 64%, new liquidity transaction with FF Venture Capital. IPA up 43%, unveils foundation AI model. Honest up 32 off earnings. OSPN 25 off earnings. MNMD 25, FDA breakthrough therapy designation, announces 12-week durability of data. Yext up 22 off earnings. SDPI 22%, drilling tools to acquire for $32 million. VTYX up 18.9, 100 million private placement of common stock. LTRN up 18, QSG 16.1 off earnings. NKGN up 15.8, AEYE up 15.3 off earnings. CMPO 14.9 earnings, $40 million repurchase program. LPLSN up 9.9, Vector Capital discloses 12% stake. VITL up 9.9 off earnings. MLEC up 9.3. ML up 8.5 earnings. SMXT up 7.5 nothing. REAX 7.1 off earnings. Cores up 6.8 off a contract. GLSI up 5. EHAB up 5.3 off earnings. AMPY 5.1 off earnings. ELEV 4.7. Riley 4.5. BBAI 3.7. SUPV up 3.1 off earnings. PSFE 1 off earnings. Wrapped off earnings. Trading lower, Aries down 3.5, nothing. HMC down 2.6, Toyota down 2.3, Tesla down 1.7, Victoria's Secret down 29 off earnings, INFN down 10 off guidance, ADT down 9%, 65 million shareholder offering priced at $6. VKXT down 7.9, Jefferies initiates buy. CN down 7 off of earnings. CRGY down 4.7, 12 million Class A share offering. SEMR down 4.5, nothing. PYCR down 3.3, priced in 8 million share common offering. C1 down 3.2, common stock offering 16 million shares. BJ's down 2.3 off earnings. Foot Locker down 2.0. Telsey Advisory downgrades to market perform. CDMO down 35%, acceleration notice from holders. Swin down 34, nothing. AISP 24, nothing. APM down 17.9. Hover down 17.8. EBS down 16.9 off earnings. YGMZ down 15.2. MEI down 13.5 earnings. CPSH down 10.7. ENCP down 10.4. TPVG down 8.9. Hudson down 7.9. TAT down 5.8. BITF down 3.0. ORMP down 2.8 off earnings. Big down 1.6 off earnings. And Chinese ADRs all trading lower. Wow. That was a lot. That was a lot of plays. We got them on. And then again, XCL, they said that their equipment was responsible for the fire there. I think I had Coinbase and some of the China names moving prior. But that's where we're at so far. We still got great time. So Chattadonia, I do have a couple plays. I'm going to be watching Novo and Intel. Those got the two biggest news there today. MU, they're running up on an upgrade. I'll just see if they lead chips. Watch VSCO post earnings, still in oil and gold. IPA, random bio AI play. We'll see how that one goes. And then BABA, I do think China numbers are really good. I'm surprised that they are all trading lower, but we will see how that all plays out. In the meantime, I'm going to go to the bathroom. I'm going to go drink some water. I hope you have your plays ready to go. And then before you know it, the bell is going to ring. And then the day starts here for Friday Junior. So I will BRB. Follow me on Instagram at The Trading Fraternity. I'll see you in a little bit. Make sure you like the video. We need 1,000 likes, baby, before the bell. Oh, yeah, we're not even halfway there. Oh, yeah, hit that like button, baby. Good morning. Let's get it. Oh, man,
and they
Friday
certainly
Junior.
make us feel more
Friday
confident,
Junior.
not sufficiently confident yet, but more confident that we will reach the target. Your second question was about the unit labor cost, and you suggested that that unit profit cost would absorb, or was absorbing, I don't know exactly how you put it, but you assumed that it was absorbing all the labor cost. This is not quite the case yet, and we have seen some encouraging numbers in the late part of 23 and earlier part of 24. This is really one of the hypotheses that we made for our projection, and our projections are predicated on that precisely. We want to see that movement confirmed, both moderation of wages as we anticipate, but also the reduction or the squeezing, if you will, of profit margins, so that the unit profit cost absorbs part of the unit labor cost. Thank you.
Thank you, Madame Lagarde. And the next question goes to Andres Stumpf of Expansion. Andres, please.
Thank you. I have two questions, if I may. Even if the decision was unanimous, did anyone at the Governing Council suggested that cutting rates today? And the second question, is there a huge difference between cutting rates in April or doing so in June? I mean in both in terms of economic pain, but also on the amount of that data you will have for that decision. Is there really a difference? Thank you.
But thank you. Those are really two good questions. So first of all, we have not discussed rate cuts.
Way to answer, Powell Lagarde. That's what I call her. Chattadonia. Day's about to start. We don't got much time left. You're here right now. You got to hear Lagarde. She didn't talk about any plays, but you tell me, man. What is your first play of the day? Post it in the chat, baby. What do you got here? How are we starting off the morning? Let's go. Oil. Tesla calls, Intel calls, BBAI, Intel calls, MDB, watching regionals in yen, Microsoft, riding SPY calls, NVIDIA, Palantir, NYCB, Palantir, Netflix, Flip Habibi, Apple calls, Amazon, Raya, ES Long, Apple June, Short SQ, Short MQ, NQ, NYCB calls, Holden Kroger, run up to earnings plays, NQ sell, TSM, calls on God, Costco strangle, trading Palantir, IWM, double dipped on CRM, crowd calls, sitting on my hand, puts on SPY, Holden AMD 200, kept shares, calls on the long term, GoDaddy, Netflix shorts, SPY leaps, Beto leaps, Microsoft calls, NVO shares, long on LTR, Broadcom, SMCI, have no clue, VNT, Intel, Tesla put, long Palantir, short everything, Micro Machines, Hood, May 20th, Mobileye, NVIDIA, Faded, MGNX, Snap calls, Tesla, SPY, watching AMD, VKTG buy, Palantir, Telecom, Jesus, MNQ short, got the pony badge, watching China all day, holding long utility in the final plays. Tesla flip, gold call, and puts on Tesla. Let's go, baby. Let's go, baby. You guys were on a roll. That was a lot of plays. I almost got distracted. But ladies and gentlemen, boys and girls, there's always enough time for this. Every single morning here at the Cult, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people that has sacrificed more than most of us ever have and ever will. And I am talking about the veterans of the United States of America. So on behalf of the Cult, the people here, the people not here, want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country, even their families. Thank you for your dedication. Thank you for your service, whether you agreed with it or not. And y'all have got to go through so many struggles that so many people don't even know about, and we barely give it appreciation. So the least we could do every single morning is say thank you, thank you, thank you. So veterans, big shout out to all of you guys. Thank you guys for your service, and big shout out to anybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, the janitors, the garbage men, the coaches, anybody making their community run. That's where it all starts, baby. So God bless you and thank you. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Senator Jets! Oh, it's game time, baby. Horna, let's go. Oh, Chatadonia. The Jets have been sent, baby. The Jets have been sent. It is game time. Oh, Friday Junior. So let's see again. There's a couple of different spots here. You have data out of chips. You got data out of GLP. You got data out of Japan. And then you got data out of Europe. And we had a little bit of data ourselves this morning. So we'll see tomorrow. We do get most of the data. We have Powell 30 minutes after the bell. Should be very simple. But now, Chatadonia, you have less than 1 minute. That means you have less than 1 minute to like the video. Oh, yeah, we need 1,000 likes, baby. We're at 700, okay? I'm just saying. If that bell go ding-ding and there's not 1,000 and y'all don't hear me say anything, don't get mad at me, you know? I said rules and regulations. I don't make the rules, even though I make the rules. But you know what I'm saying? So run it up, baby. Let's go. But if you have any questions, let me know. Post the plays in the chat. We're going to have 7 hours, and market is starting off great. Great. Oh, there it is. We only need 50 more likes. 10 seconds, 50 likes. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Round 1. Fight. Oh, yes, we hit the 1,000 likes, too. There it is. We in the game, baby. We in the game, baby. That's what I'm talking about. Oh, CCJ went up a little bit. Oh, they dropped P-Market. What contract is that? All righty. I got your light good. ES 60 points vertical again. Bonds are even up. There's a lot of things that are actually doing really good. I got clapped on the gold short again. The yen, that is taking over. Airbnb opened up. But BABA, again, I don't know why the China names are trading down. I thought China news was good. Let's see where those JDs are at. The JDs went down. VKTX, they had some sort of news there today. Where is it? Intel, I'm going to double check those plays. I'm using those could be good, used as a great place marker. Yeah, some of the Intels are still cheap. NVO's still going. Apple dump. MU could be a good one too. Again, they have been running. Apple is down by 0.23. INMN on the low. Micron. And then Intel is up. Oh, I don't know. Rivian dumping. They got to upgrade. MNMD. MNMD, they got like a special drug designation. I believe that was their news here in the morning. What was that other one? IPA. That was like an AI drug play. Walmart. GE. Chips are on the low. Or on the high, excuse me. So literally SMH is running now. Kroger. That earnings play, remember, if it goes past 4, those we might get lucky on them. Is Visco halted? I don't see it trading. I don't know if that's just one of those glitches in the morning. Again, they're down 30. Abercrombie again. Aeropostale. Intel, I didn't make it yet. I have the old Intels. Those are coming back. But the fact that the old Intels are still negative, it makes me want to grab another one. But that's the play I like here with their news. But it's kind of moving slow. And then Micron, if they could get a bounce, that could be good. Kroger's still going. So little by little, if that keeps running, those contracts may wake up. Tesla ripping, a big one. Yeah, Tesla's up by 0.6. Again, SPY, too. What are we at? SPY's up 0.5%. And I don't know why my TLT and my bonds, like, they keep lagging out. Beto on the high. Yeah, my TLT is frozen for some reason. Bob is going lower. That one, I think, is a little weird. Intel's still climbing. At least the contracts are. RDCM, RGNX. Didn't they have data the other day? Qualcomm. Where's Palantir? Coin was up at 240 earlier. Lithol. That was running pre-market. I have no idea. Eli Lilly's down. Dell's running. NVO's still going. Again, 7% on NVO. It's kind of unreal. And that one's not stopping. JP Morgan right on the day. VKT, I forgot. I read something on it this morning. I don't know if it was data or they added shares or something. It was something along those lines. Tesla's still going. CART on the high. ARM is starting to go up. Again, ARM hasn't really moved as much as the other ones. Wells Fargo's still up there. Yeah, NVO up 7 is unreal. But again, they announced a new drug data today. Again, for another like obesity drug. And then SPY's still coming down here a little bit. CART is still climbing. Where are we? 51.37? No way. So, yeah, you're like, what, 10, 12 points off a new high? And today's kind of a wait day. Wells Fargo going up. ARM keeps hitting the high ticker. Deer on the high. AMC pop. Fun. SoxL, again, chip makers. They are still going. And NVO, that one's not stopping. NVIDIA is above 900. I'm surprised more people aren't making a big deal about that. And then Apple even found a way to go green. Microsoft's green but selling off. Meta's above 500. Google is barely in the green as well. Kroger Kroger were like break even on the earnings play. Or now they're going up 10 or 20%. So Kroger's are just starting to wake up. Palantir over 25. Zero. SPY going up. MNMD, yeah, they had good data there. Again, good announcement. They're still holding up 40. They were already near the high. I saw them in the morning. Tesla's still going up here too. Airbnb came down. Where is Pfizer? Pfizer, those contracts are about to be in the money. And then CCJ climbed a little bit. Where's oil? Oil's at 78.30. Oil's down 1%. Intel resisting. Check Micron if they bounce. That's the next one. I just hate how much Micron is up. Bitcoin, Russell. Well, we don't have much time on some of these. ECB ends press conference. ARM is up 6. ARM was only up like 1 or 2 earlier. They started moving. Yeah, IWM's up higher than the NASDAQ. I like the Micron. You might be better off with shares, though. There is cheap options, but they're all up 80%, and then you only have till next week on those. That's the only problem there. NYCB climbs 14%. I think they already had their press conference in the morning. They were giving an update. Again, Micron's up almost $1 in 4 minutes as we've had that up there. Snapchat breaking out, 1176. Qualcomm, Kroger. It looks like Expedia and Travel's down. Airbnb was up in the morning, but that one started to flip. Tesla's starting to run a little bit more. And NVIDIA, again, NVIDIA is well above 900 right now. Kroger, yeah, Kroger plays are actually moving. So you got a small gain on those. We'll see. Because remember, Kroger was only pricing in 4%. So anything higher than that, it starts to get a little bit of a surprising one. Mara's on the high. SMCI, NVIDIA. Meta now, too. My goodness. Coin back at 240. TSM starting to go. Now Net. Net's up 2.1. Zscaler's still down. They're right at 200. Oh, yeah, Honest. I forgot. They went crazy. We were talking about the juice boxes yesterday. They're still up 28. GE on the high. Again, GE was talking about bringing back the dividend, and they did good as well. ARBE, I thought that was Adobe. Meta, 52-week high. Meta's at literally 505 right now. It's ABNY, Airbnb on the low. Gold selling. Finally, I'm still down on it. That was crazy. It hit another huge high this morning. We are going to go over Broadcom earnings later today. Big is running up. I don't know how their earnings were, but that one's interesting. If Big keeps going up. Pill, Baba, Dalmo. That's so weird. Again, the China data was great today. That's why I'm kind of like low-key tempted to try to make a move on these. If they hit lower, if Baba goes lower than the day before. I'm still short on gold. I'm down $190 on 2 of the micro gold contracts. Oh, the Kroger play, they're up 50%. Just a huge, super wide spread. So honestly, Kroger is kind of getting some activity here. Yeah, because Kroger's up 6 or 7. I'm surprised. I thought the contract would go up a little bit more, but those have a very wide spread. What happened to YouTube? Nothing, man. You should be able to see me there. Honest halted probably after the move, but I just know it was an outperformer. Dell's still going. Remember, they killed it on earnings. They're back at 120. Yeah, NYCB's up 11. Bitcoin names are all starting to run. Seeing those on the high. THC on the high. Tenet up 2.7. XLV's up 0.8. Pfizer went lower. They were green yesterday. I feel like a lot of the green value went down today. HNST halted. ARM. Yeah, Bitcoin's starting to ramp up. Oil a little off the bottom, and gold is coming down. And then Kroger is still going. That one's still interesting. Again, even the options are starting to ramp up a little bit more. I'm still holding Vanny, yeah. Waiting on the next GLP-1 data or potentially average down tomorrow. We're going to see. I want to see what the data brings in and where the market's at. Otherwise, either tomorrow average down or we're going to punt until we get the next update. But I'm still holding. I'm down 40% on it. Yeah, Snap is higher than the latest data. So again, it went as high as 1160 on that new. They are going to talk about it today though. That ban on TikTok, something's going to Congress or they're doing something on it this morning. Coinbase 52-week high 242. Bro, that's unreal. We're about to go green on Coinbase. I think that's the wildest thing ever. Where is it? Yeah. Habibi. All right, we'll take it. We'll take it. I'm down 40 on Vanny. It's not a contract. It's a stock. That was one of those biotechs. Literally, the biotechs haven't worked out. PTN, Vanny, both of those are ugly. And then I still have CogT. CogT, that one we're still waiting for a lot of stuff, though. That one's actually held up a little better. Crowd, they gave up some of their gains from yesterday. I don't know where they're at today. Yeah, they're just down. They're still up 10, 20% though, I think. TLT, I don't know why my TLT won't load today. Yeah, TLT came back down. Fitch affirms NYCB at BB positive on capital infusion announcement. Are you okay, Vanny? Vanny, you okay? You okay? You okay, Vanny? Yeah, Snap. Again, we'll see if that congressional stuff comes into play, but I do think we are going to hear more about a TikTok ban, but they're outperforming. I know Meta is up here too, but still Snap is up. It's almost at 12. It was at 12 after earnings, though, so still has a long, long way to go. LYT back on. This is the one that was up 300. This one just went up crazy pre-market. Lit. Lewis lit. Powell is going to be in about 15 minutes, I believe. Same time as yesterday. Abby Vise hugging 182. LYT is running again. That made some crazy moves there. The Krogers are up 100% now. Baidu puts came back, but we only have till tomorrow on those. What data? We already got it. It was jobless claims, and then the ECB, and then we had the Japanese stuff. Right now, we're just waiting for Powell. And then there is Snap. Wells Fargo, they're hitting another 52-week high. Again, big banks, even after the little fiasco yesterday, they all did good. But Snap breaking out LCEA, Landon C. Homes. That's popping a little bit up there. SPY's coming down. Bonds keep going lower on the day. Where's the dollar? Dollar's actually down. And then NVO, bro, I don't think you guys... Bro, NVO ripping 8% is huge. That one keeps going. Yeah, Powell's in like 15 minutes. Exactly. NVO's still on the high. Oxy's trying to run up. LYT is moving. Lit. Powell literally, there's a very small chance Powell moves anything. There was a surprise. I saw people talking about it yesterday, but people were bringing up how Powell, if anything was new yesterday, he was kind of talking against the Basel III requirements and chilling out. So people got something positive out of that. But generally, I mean, we shouldn't really be getting much from Powell here. CN on the high. Weren't they trading lower? Yo, watch if they go green. They were down 11, but if they start working their way up, doesn't this thing not move? G-Red, I'm trying to do something here. I don't think it's going to work. WVE up to 7. SMCI dump. ECB forecast assumes oil at 79 a barrel. WVE. Wave lifestyle. That sounds familiar. And SPY going a little lower. NYCB new high. They were up a little bit more than 10 earlier. OCEA, that was the other hype runner from the other day. That thing has gone up like 20% every single day. CNK on the high. Pfizer dying. Yeah, they're down 1. Again, they had a 4% day yesterday. MO's going up. Again, watch some of those values that were up yesterday. See if they end up giving it up. Big is going. JD. Yeah, JD's lower than where I sold yesterday. So giving up 5 after a move like that. PLT red. IEF is going down. I think it's updated, but if bonds go red, that's crazy considering how much they were up. Let's go. Tesla coming down. JD. VIX is starting to climb up a little bit, but VIX is still red on the day. LSEA on the high. Costco, I think, is going to be big. It's already moved a lot. And the thing about Costco earnings, a lot of times they give updates on where they're at, like ahead of their earnings. So it's not like they should surprise much, but I do think Costco is going to stay up there, and it's expensive. Costco ain't cheap. And then CCJ, I'm about to go green on that after getting wrecked on it all week. On WVE, no, I don't have anything on Wave. That one hasn't even showed up on the pre-market scanners. So they just had a price target increase by H.C. Wainwright. And then they ran up the other day off of better than expected earnings. But yeah, there's nothing special on WVE. When CCJ's coming up. The Zen V. I never had it for the long term. We flipped out of Zen V. We made money on that. That was like one of those early AI plays. Meta holding 505. It's pretty nuts. Snap even coming up. I'd like to see a Airbnb, but you know, I don't. Don't worry. Costco's holding. Meta is still going up, man. There's another all-time high for Meta, 506. Update on the yen play. I'm still holding it. I mean, I think yen, it's about to get hot here soon. The question is, do we try to average down or do we just hold? But, I mean, everything I told you about the yen is starting to unfold right now. So, I mean, the update is just a matter of do you want to add to the play or not. But, I mean, it looks like we are about to get that exit in March. I think March or April at the very least. I still think there's a chance they may try to not do it in March. But, I mean, when it's all said and done, once Japan changes, it looks like we're within 30 days of that. But when it does, that will be, you know, a little bit of a mini shift. So it's getting ready. I mean, it's just like every other situation. It's ready to fucking move. And the government's even talking about it, but we need the actual move. But again, like the wages going up, how the economy has been, and I think they have 9 members on the Bank of Japan. So if you get like 5 people who support the rates, then they're going to raise. But that's where I'm at on it. I could make another video on it. We'll see. I was going to do one yesterday, but since I got caught up yesterday, but we'll find out if we could get one there for the weekend. But literally every single thing I said about the yen is happening right now. So the real question is, do you want to add to the play or are you cool with what you have? So remember, I still have a lot of it. I'm down on some of them, so I just got to balance them out. I have one more yen rollover in the next week that I'm going to have to do. I have one yen future that expires in 12 days, and then I have one that expires in like 150. So I plan for this way, way far out in advance. And then we'll even look at like YCL. But again, that's if you want to make the play. ADMA on the high. I didn't talk about Powell meeting in the watch list. I didn't even have a watch list yesterday. I got caught up on it. I thought I even got my little thing out there to let y'all know, but I didn't. It was a long day yesterday. Waters talking, Maxine. Already?
Mr. Van Hollen.
Senator Van Hollen's name was called. Thank you.
Ms. Cortez Masto.
That's pretty good.
Ms. Smith. Mr. Warnock.
I don't have the Audi. Yeah, they're giving the roll call right now. All right, I'm back to green on CCJ finally. That was annoying.
In shaping our economy, your job is clear: promote stable prices and maximum employment. Today, the cost of living is still far too expensive for most Americans. The Fed has only one tool available to fight those high prices: interest rates. That tool does nothing to address the real costs, the real cause for why costs remain too high. Corporations price gouging to boost profits and make their shareholders richer. Higher interest rates don't force corporations to lower their prices, but high interest rates are raising housing costs, hindering wage growth, stifling small businesses. We all know that. Now's the time for the Fed to decide if it's going to make good on its commitments to workers and to their families by lowering interest rates, by protecting our financial system from Wall Street executives who have used their wealth and their power to influence economic policy and avoid accountability for their for their risky bets. Keeping rates too high for too long strangles the economy. No one wants this. It makes it harder for small businesses to expand and hire more workers, undermining job creation. Higher rates also stifle overdue investments that are creating high quality, good paying jobs and that are necessary for us to remain the most competitive and innovative economy in the world. High interest rates are raising housing costs higher and higher for families already facing a tough market with too few options and too high prices. I hear from so many Ohioans who feel trapped. Those who rent feel like they'll never be able to afford to buy. Those who already own their homes feel like they'll never be able to afford a larger one if they decide to grow their family. If they're fortunate enough to have an interest rate from a couple years ago, they obviously don't want to give it up.
Okay, Chad, you're about to hit a new all-time high.
The housing supply.
You're at 51. You're
by
9
driving
points
up
away.
Construction costs,
Climbing
higher
back
rates
up.
make it even harder to build new apartments and homes. So we have even less supply at exactly the same time when it's harder to afford a mortgage. Families are stuck delaying the purchase of their first home and renting for longer. That cycle drives rents up even further. Americans pay a steep price for higher interest rates. Continued high rates are not going to make life less expensive for workers and their families. We know why prices are high years after supply chains have improved. It's the same cause of so many of the problems in our economy. Corporations want bigger profits to reward their executives. Today we'll vote in 2022, at the peak of inflation, corporate profits soared to historic levels. That's not hyperbole. That's fact. Corporate profits soared to, as you know, where those profits went, right into the pockets of their top executives.
Whoa, what was that?
That same year, the largest multinational corporations.
No, I only have one audio on.
$1.5 trillion.
That's why I muted. I was like, what the hell is that?
Americans today pay more for groceries than they have in 30 years. Ohioans are paid for corporate. Every time you go to a grocery store, Ohioans pay for corporate executives bonuses and stock buybacks. Every time you go to the grocery store, grocery shoppers are paying for corporate executive bonuses and stock buybacks. The biggest corporations are always finding new ways to charge people more to increase their profits. Fast food restaurants, big stores are experimenting with electronic price tags so they can change prices constantly, making it easier to sneak prices up little by little, making it harder for people to comparison shop and find the store at the lowest price. Many companies increase their profits by charging more for less. The media started calling it shrinkflation. Senator Casey, our colleague from Pennsylvania, has particularly been a leader pointing this out. A bottle of Gatorade used to be 32 ounces. Now it's 28 ounces. But the price hasn't gone down. And if anything, it's gone up a bit. It's why I introduced legislation that would stop that kind of deceptive corporate practice. It's the kind of solution we need to take on corporate price gouging. Has nothing to do, Mr. Chairman, as you know, with higher interest rates. The Fed doesn't only set monetary policy. You also make the rules that keep our banking system safe and sound and consumers' money safe. We've had some positive development, Mr. Chair, since the last time you testified in June, like the update to the Community Reinvestment Act. Thank you for your work on this. This took years of listening carefully to all stakeholders. It was long overdue. We'll be watching to make sure you implement this quickly so banks are fulfilling the purpose of the Community Reinvestment Act. I spoke to Ohio bankers yesterday, most of them small banks. They understand the importance of this. You also issued an updated capital requirements proposal called Basel III, the subject of much discussion in this committee. Strong capital requirements, how we ensure if Wall Street bets don't pay off, shareholders and investors are on the hook, not taxpayers. Too many examples in this committee, in this Congress, in this country of taxpayers holding the bag for corporate misfeasance and malfeasance and greed. We need these guardrails in place. I urge you to remain committed to protecting the public, despite the massive amount of money big banks and their lobbyists are spending to trying to kill these taxpayer protections. Let's finish the job. Let's finalize Basel III. Last year's bank failures also demonstrate the dangers of letting the banks chip away at rules and oversight. It's entirely predictable. Bankers desperate to increase their already massive profits take big risks that undermine our economy. When things go wrong, bank executives come to regulators with their hands out, accepting no responsibility. It's why Congress must finish the job and pass our bipartisan Recoup Act. Senator Scott and I worked on 21-2 in this committee to hold senior bank executives accountable when they gamble with customers' money. When the biggest banks exercise special privilege, they do so at the peril of our broader economy. We've seen that too many times. We know that's the source of so much that's wrong in this country. Big corporations using their power and influence to write the rules of our economy to the benefit of them and their executives and their investors, to the detriment of everyone else. It's why I stand up for workers and why I stand up for their right to organize. It's why I stand up to take on railroads and drug companies and the biggest banks and corporations who time and time again try to rewrite the rules to increase their profit margins. Chair Powell, I look forward to hearing from you today. Thank you, how the Fed will work to promote an economy where everyone who wants a good job has the opportunity to find one. Senator Scott.
Thank you. Chair Powell, thank you for coming this morning. Good morning. Appreciate you being here. Certainly.
You're getting numbers. FDIC is giving bank
March
numbers.
10th. It will be the 1
bank
year
profits fall
anniversary
43% in Q4, driven by
SVB
higher
marked the
non-interest
third
and provision
largest
expense.
bank failure in
FDIC
US
says
history,
70%
and
of
certainly
quarterly
the
profit
largest since the
decline
2007,
due to
2008
specific
financial
non-recurring
crisis.
large
I've said it many
bank
times before, and I'll
expenses,
say it
including
again today,
special
that
assessment.
There were three major components to SVB's failure. First, the bank was rife with mismanagement. Second, there was a clear supervisory failure, and our regulators were certainly asleep at the wheel. And third, President Biden's reckless spending caused record high inflation, which resulted in drastic interest rate hikes and tremendous loss. When you print and spend trillions of dollars at the end of COVID, we should not be surprised that we have record high inflation. Record high inflation translates into today still 40% higher for gas for your car, 30% higher for your food, 20% higher for your energy costs. The devastation the average American is facing because of Bidenomics is undeniable, but certainly measurable. So I'm glad to spend some time talking about the state of our economy, an economy that has been ravaged, as I've just spoken about, by inflation, suffering under the weight of an open border and millions of illegal immigrants, and drowning in disastrous regulations. I hear from my constituents all the time that inflation and an unsustainable cost of living continue to impact their families. For far too many, the American dream seems further and further out of reach than ever before. And frankly, the past 3 years of this administration's failed policies have landed us right in that spot. In fact, last month, Treasury Secretary Yellen sat before this committee and attempted to spin a narrative of how strong the economy is, how well off consumers are, and how much people have in the bank, thanks to Bidenomics. But in the midst of this, she also admitted that many prices are not going down. In fact, she said, and I quote, "We don't have to get these prices down." Tell that to the mechanic working in South Carolina. Tell that to the teacher trying to put gas in the tank. It is simply unacceptable.
Bro, this is the weirdest audio ever.
Because the truth is that Americans are now spending more of their income on food.
You just hear menthol
than they
dude just
have
come in randomly.
in 30 years.
Like,
the truth is that housing affordability remains at its lowest level
I thought
in
shrinkflation.
40 years. But inflation isn't the only concern I'd like to raise. I'd also like to address the economic impacts of illegal immigration. During your recent interview on 60 Minutes, you stated that over time, the U.S. economy has benefited from
We're getting
immigration.
Kennedy
Let's
today,
be
though,
clear.
I'm pretty sure.
America
That's all
is
that matters.
a nation of immigrants, no doubt. But when we talk about illegal immigration today, we must also face the dire reality that our towns and our cities are suffering from the adverse impacts of illegal immigration facilitated by the Biden administration's open, unsecure, and unsafe southern border.
TSM, another 52-week high. That's from yesterday.
We've seen over 7 million illegal immigrants cross our borders in just 3 years. By the time this election happens this year in November, the numbers suggest it could be as high as 10 million illegal immigrants coming into our country. So we cannot have an honest conversation about the benefits of legal immigration in our labor force without also addressing the elephant in the room. Our country is strained. Our economy is strained under the weight of illegal immigration. In fact, recent reporting has highlighted that cities and states across our country are struggling to keep pace, and some have been forced to cut public services to Americans in order to fund the cost of feeding and housing illegal immigrants. One clear example we saw in New York City were the poorest kids in the city, minority kids in the city, were stuck at home because the city was using the schools to house illegal immigrants. Another example, the city of Denver recently announced that some of its employees may have their hours cut in order to reallocate funds toward the city's migrant crisis. How in the world is that fair to Americans? It's not. We must get the illegal immigration crisis under control, because if we don't, our local economies will continue to be crushed and opportunities will continue to be stripped from our citizens and their families. Finally, as if inflation and the negative impacts of illegal immigration were not enough, the tsunami of regulatory red tape coming from our financial regulators further threatened economic opportunity across the board. For months, we've heard bipartisan criticism.
Yeah, this has nothing to do with Powell.
Basel III.
This is the whole point.
Proposal,
These happen twice a year.
Lending,
but like this is like every congressman's like opportunity.
I was certainly
this is kind of like advertising. I don't know how to
surprised
describe
to hear your comments.
That's why they asked Powell
Basel
just like whatever their
your thoughts on its future.
They got lobbied and paid to talk about.
97% of the comments that you receive are negative. That's good news.
There's going to be like maybe 20, 30% are going to be talking about soft landing and then when he's going to cut rates. The rest are going to be like, so how come climate is creating racism, and now how do you control that as the Fed? Do you plan on controlling the government?
Basel III what? Comes from
he's like, okay, would you agree
from community leaders, farmers,
weather
to housing groups.
The fuck
you
even
mean? Heard opposition in
like,
this
would you agree
room,
that weather
on this very
is weather
from Democratic senators?
Okay, let me ask you this.
I look forward to hearing your testimony.
Was there a pandemic in 2020? Can you agree to that?
Questions as well.
Were we all at home?
Thank you, Senator Scott.
Yeah.
We're here today, as we do every 6 months at least, from Chair of the Federal Reserve, Jerome Powell, on monetary policy, the state
This
of
is
our
all
economy.
Just the beginning, too, honestly.
Please proceed. Thank you for
It started
your,
a little earlier. There's only 7 minutes in. We got a couple hours. We got Kennedy coming
Chairman
up.
Brown, Ranking Member Scott, and other members of the committee.
Dan
I
Market already knows
the
this
opportunity
pre-written
to
statements.
present the Federal Reserve's semi-annual
First question is what really
monetary
matters,
policy
but
report today.
again, you shouldn't be expecting
The
much.
Reserve
But there was a
remains
little bit of a
squarely
surprise
focused on our
yesterday
dual mandate to promote
with him talking
maximum
about
employment
Basel.
and stable prices for the American people. The economy has made considerable progress toward these objectives over the past year. While inflation remains above the FOMC's objective of 2%, it has eased substantially, and the slowing in inflation has occurred without a significant increase in unemployment. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving into better balance. Even so, the committee remains highly attentive to inflation risks and is acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation.
You were just stuck
The FOMC
here.
is strongly committed to returning inflation to its 2% objective. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. I'll review the current economic situation before turning to monetary policy. Economic activity expanded at a strong pace over the past year.
Bro, that's
For
a dope-ass
2023
coffee
as a
cup.
whole, gross domestic product increased
Powell with the double cup
3.1%, bolstered
Fed
by
coffee
solid
cup.
consumer demand and improving supply conditions.
That coffee cup go hard.
Activity in the housing
It's
sector
like a
was
giant
subdued
eagle
over
logo.
the past year, largely
That's an
reflecting
official-ass
high
coffee
mortgage
cup.
rates.
That's paper.
High interest rates also appear to
That's
have been
Fed
weighing
coffee.
on business fixed investment.
I never seen that.
The labor market remains relatively tight,
That's
but
pretty
supply and demand conditions have continued to come into better balance. Since the middle of last year, payroll job gains have
Fiscal
averaged
frat.
239,000 jobs per month, and the unemployment rate has remained near historical lows at
He said
3.7%.
It's literally a double cup.
Strong job creation has been accompanied
What would
by
you
an
call
increase in the supply of workers,
one cup on top of
particularly
another?
among individuals aged
not what it is.
25
It's
to
a double cup.
54, and a continued strong pace of
And
immigration.
he got 2 waters.
Job vacancies have declined, and nominal wage growth has been easing. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. The strong labor market over the past 2 years has also helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past year, but remains above the FOMC's longer-run goal of 2%. Total personal consumption expenditures prices, or PCE prices, rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices rose 2.8%, a notable slowing from
I think it is
2022
the
that
same
was
statement,
widespread
slightly different,
across
but
both
yeah.
goods and services prices. Longer-term inflation expectations appear to have remained well anchored, as reflected by a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. After significantly tightening the stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We have also continued to shrink our balance sheet at a brisk pace and in a predictable manner. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at
Popper,
its peak for
new
this
high now.
tightening cycle. If the
6
economy
points off a new
evolves
all-time
broadly
high.
as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economic outlook
link,
is
just go to
uncertain,
the,
and
it's like a
ongoing
government
progress
website.
toward our 2% inflation objective is not assured.
Bank.senate.gov.
Reducing policy restraint
just go to the hearings?
too soon or too much could result in a reversal of progress that we've seen in inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and
Yeah,
employment.
you guys have heard this word for word.
In considering any adjustments to the target range for the
This is
policy
literally
rate,
like you.
we will
you hear the
carefully
same
assess
thing
the
every
incoming
time.
data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target
Soxel
rate
chip still
until
going.
it has gained
I got
greater
TSM up
confidence
here.
that inflation is moving
Micron
sustainably
moving again.
toward
Spies
2%.
up there. Wasn't SMCI?
We remain committed to bringing inflation back down to our
Yeah, they're in the
2%
red.
goal and to
Nvidia
keeping
9
longer-term
910.
inflation expectations well anchored.
Connor.
Restoring price
With the
stability is
Jets,
essential
baby.
to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thank you, Mr. Chairman.
Thank you.
You've acknowledged the Fed likely waited too long to raise rates when prices shot up in 2021. We can't make that mistake again, Mr. Chair, at the expense of workers. If the Fed waits until unemployment starts increasing, it may be too late to cut rates in time to save American jobs. Why shouldn't the Fed act now to prevent workers from losing their jobs rather than reacting after the fact?
So we're well aware of that risk, of course, and very conscious of avoiding it. And what we said is if what we expect and what we're seeing is continued strong growth, a strong labor market, and continuing progress in bringing inflation down, if that happens, if the economy evolves over that path, then we do think that the process of carefully removing the restrictive stance of policy can and will begin over the course of this year.
I mean, I know we've had this conversation publicly here or privately also that, working people are hit the hardest with inflation. They're also hit the hardest when companies try to cut costs with layoffs. This town too often seems to forget that maximum employment is part of the Fed's dual mandate. Let me ask you about bank supervision. Senator Scott mentioned that. Last year's bank failures illustrate the need for strong oversight SVB grew too big, too fast. Fed supervision didn't react decisively enough. The Fed, in response, undertook an assessment of its supervisory process to identify and address gaps related to the speed,
Bonds
the
off the
force,
bottom, too.
the
Again,
agility,
SPY near the high.
if that's the right word, of its supervision. Explain what concrete steps the Federal Reserve's taken to strengthen supervision and any specific areas where work to make improvements is ongoing.
So this is a very broad area of work. There are, many people in the Federal Reserve System who are involved in supervision, thousands of them, and there's a rule book, and so there's been careful study and thought and a lot of listening to understand how we can meet those goals of being quicker and more
910
effective.
NVIDIA,
is how I would say
9/11.
it. If you look at Silicon Valley Bank,
Straight through.
we weren't quick enough and we weren't effective enough where we were.
All those
in.
wanting
And so
$1,000.
We're working hard to
You are now
develop
gone
a
through
new rule book and
900.
another set of practices.
3 points
which
from a
is
new
still
all-time
gonna
high.
Be evidence-based and fair, but it's going to involve earlier interventions and more effective ones. And I think this is work that's ongoing and will be for some time.
Thank you. The job of the Fed, of all public officials, is to serve the American people, not their stock portfolios. We've seen abuses in this body. We've seen abuses at the Federal Reserve. I wrote to you last month asking the Fed to identify substantive penalties for board officials who violate the trading rules. Where is that in the process? And I expect these rules in place before the next monetary policy hearing in 6 months. Where is it?
We got our own Inspector General gave us 6 things to work on. I read the list from beginning to end, and the 6th one was what you said, and I just said we're going to do all of these. Let's get going. So we've done 5 of them, and we're working on the 6th.
And it will be finished within 6 months when you're back?
I want to get it right. I certainly hope so and expect so.
Expect so is a better answer than hope so. One last question. More and more many
Kroger, another
companies use
high.
algorithms that combine competitors' price information to engage in what they call dynamic pricing or surge pricing. You know that corporate PR teams worked hard on this. Just another way for corporations to make it harder for consumers to seek out lower prices and to pad corporate profits. Are you concerned that the wide adoption of these price gouging strategies, these pricing schemes, if you will contribute to inflation?
I think it works both ways. Let me say that
it came
we're
3
well aware
points
of this
within the
trend
high.
and we're monitoring
Again,
it. Remember
Kroger's
that
still running, eBay
prices go
too.
down when there's no one in the store, and they go up when there are a lot of people. If you're doing dynamic pricing, same thing with the ride companies. It works both ways. I don't know that it have implications.
Why
for,
does this keep getting brought up?
For inflation, it would
Have a lot
certainly
of
have
people been
implications
using
for
dynamic
consumers who need to
pricing?
be informed.
You think that this kind of surge pricing might lower prices overall?
That's my understanding is that the idea is that in slow periods, prices actually go down, and in busy periods they go up.
But these are sophisticated economists working for these big companies, and they're not going to do things to lower their profits.
I think the price mechanism is incredibly important in our economy. I think we need to give companies the freedom to do that as long as they're not fixing prices or
can't be
failing
just
to
'cause of
disclose the nature of the price changes to the public.
I feel like
I
it's
have
happening
a few
somewhere
seconds.
else.
Research has indicated constrained supply was behind a significant amount of the inflation we've seen over the last few years. If the supply chain, for instance, of autos had been more resilient, or if there had been more housing availability, would that have made your job easier?
Yes, in a word. Yeah, a big part of the inflation was, and we saw it in 2023 when the supply chain problems unwound and when the labor supply shock that we had unwound as well. We saw inflation come down very quickly in the second half of the year. But it's also down to tight monetary policies playing a role as well.
Which leads me to the
Home builders all hitting
to
highs.
the plea
KV
with
and
you
Toll.
to speak
and
out
Lennar.
about inflation,
Uber
about the
again, and Google on
contribution
the
of
high.
corporate profits and
And
greed
Amazon.
to inflation.
And the SPY.
Thank you.
Oh, I know you are done. That's true. Well, I was
Find yourself agreeing with me more and more often? Is that what?
that would be a nightmare, and I'm awake. So, what I would say, however, is that the fact of the matter is that so often, if in fact 60%, I actually listened to what you said, which was remarkable. The fact that 60% of Americans today can't afford a $1,000 emergency, I can't imagine how the average millennial affords a down payment for a home. I can't imagine how they take into consideration when they're looking at a snapshot of their financial future, fixing and repairing or having a plan for obsolescence that happens for every homeowner in the country. I think the issue is far more complicated and would love to delve into that over the next 4 minutes and 18 seconds. But my first question is a combination between the challenges of illegal immigration and crime. It seems like every single week there's another story of another city underwater attempting to feed and house millions of illegal immigrants, and American taxpayers
to hit another
are
new
footing
high.
that bill.
Let's see if we break
like
the
I mentioned in
one
my
from
opening
2 days
statement,
ago.
just
Literally
recently
Friday.
in Denver, we saw city workers having their hours essentially zeroed out so that the city could allocate more resources for the illegal immigrants. In San Francisco, they say that the average cost between San Francisco and Oakland, because of crime, is almost $4 billion. Couple that with, in New York, you see Governor Hochul bringing out the National Guard and the state police to help reduce the impact of crime. At the same time, Mayor Adams says he needs more money because the state of affairs from illegal immigrants in the city is devastating the economy, scaring the citizens, and reducing the opportunity for business as usual to return to New York City. So my question is, can you explain how our economy is expected to continue shouldering the burden and the costs because of illegal immigration? And what, if any, information do you have as it relates to the impact of this surge of crime in our major cities on the economic outcomes of those cities? Because I heard the discussion that when you have more folks in the store, you have more shoppers, except for these days, when you have more folks in the store, sometimes they're just there to steal.
So you quoted my statement earlier, and it was an accurate quote, for which I thank you. But I would say right before that, what I said was immigration policy, very important, very much under discussion, and it's none of our business. We don't set immigration policy, and we don't comment on it. So,
but you commented on immigration. So my point, though, is that when you're going to tell a story, please tell the whole story, especially when the nation is frustrated by nearly 10 million folks by the end of this year coming into the country and having the kind of negative impact on prices, on crime, on the challenges that everyday Americans, especially Americans living in the poorest parts of America, face on a daily basis.
So as you accurately quoted, I said over time. So I
Yes,
was
sir.
referring to the history, which with you agreed. So I was staying as far as I possibly could from the current political context. And you know, it's really not appropriate for us. We're independent. We like to remain that way. And the way we do that, one of the ways is by staying out of political issues that we really aren't assigned. And so the kinds of issues you're talking about are very, very real. I don't deny that, but they're really not for us.
So the Fed does not consider the impact of 10 million illegal immigrants coming to our country and the costs associated with those illegal immigrants, nor do they consider the impact on states like New York or California or Illinois, where the devastation of crime ravishing the poorest Americans has an impact. We don't take that into consideration.
So we do, and so does the Congressional Budget Office. We do try to estimate population, and we try to estimate the effect of immigration, legal or illegal, on the size of the workforce and on GDP. If you look at the Congressional Budget Office has, as you probably know, a detailed assessment of all the things like that. We don't really have a way, and we do look at the finances in the aggregate of state and local governments. That's in the hiring that they do. So that's something we look at, but we wouldn't do a very specific assessment like that. I mean, CBO would, but we wouldn't do that.
Thank you.
Yes, Scott, Senator Menendez of New Jersey is recognized.
Thank you, Mr. Chairman. Before I begin my questions, I want to celebrate that in the past year we have seen the first Latino Federal Reserve governor and the first ever Latino Federal Reserve Bank president. These are historic milestones that show we are finally making progress, something that I have been at for quite some time, to the leadership of our economic institutions. So I want to applaud that. And Mr. Chairman, I hope that progress can continue and extend to the rest of the Federal Reserve staff.
Thank you.
I agree with my friend, the ranking member, that when you tell a story, you should tell the whole story. Mr. Chairman, are you aware of the Washington Post February 27th article that says the economy is roaring and immigration is a key reason?
I don't recall that, but I would have read it.
Let me read it to you. Immigration has propelled the U.S. job market further than just about
Powell
anyone
lied. He's
expected,
like, all right, dude, read it.
helping cement the country's economic rebound from the pandemic as the most robust
read it.
in the world. It goes on to say, economists and labor experts say the surge in employment was ultimately key to solving unprecedented gaps in the economy that threatened the country's ability to recover from prolonged shutdowns. Would you take issue with those statements?
You know, there are a lot of adjectives and adverbs in there that you wouldn't see in Fed world. But the
take out the adjectives and give me on the substance.
The story is, I think, broadly it is that there was a very significant increase in the size of the workforce last year, and it was happening all during the year, and we were wondering what it was. And the answer was it was really two things. It was labor force participation, but it was also immigration. And if you look at the Congressional Budget Office numbers, it kind of makes sense because there was a lot of growth. Wages were coming down. The economy is bigger, and those are probably in part effect. This is without making any judgments on immigration or immigration policy, but I think that's an economic fact.
I'm not suggesting that. I'm just suggesting the facts are that we had 10 or 11
You're
million jobs
1.5 points from a new all-time high.
Economy. They lack
You're slowly
the
working up.
that is
Again,
necessary
bonds green,
for
but down.
Success economically.
Very broad
and as
day
part
still.
of that, clearly, immigration helped fuel part of our revival coming out of the pandemic. In fact, those were the people who were the essential workers when the rest of us were staying home. So I agree we need to do what is necessary to have a regularized border. But I also think that just to create the context of immigration as a scourge is absolutely wrong. Let me turn to another question. In my view, the sticky inflation we've been seeing in the housing sector is principally due to the massive nationwide housing shortage. The Fed's monetary policy report attributes the shortage to restrictive zoning, high interest rates, and tighter underwriting by banks. I would also add to that list underfunding of key HUD programs that shore up and expand our supply of affordable housing. If the housing supply shortage continues to grow, are we likely to see continued housing inflation?
Yes, we are.
And housing is already becoming less and less affordable for low and middle-income Americans. According to the National Low-Income Housing Coalition's 2023 Out of Reach report, a worker earning the minimum wage in New Jersey would have to work 2 full-time jobs to afford a modest one-bedroom rental home at fair market rent. Do you agree that increasingly unaffordable housing is a problem for the economy?
I think there are two things going on. One is a longer-term housing shortage, and the other is the pandemic effects and the associated higher interest rates, which are things that will pass through. When all that passes through and rates are normalized, we'll still have the underlying housing shortage, and it's going to be causing upward pressure on housing prices.
Now, the monetary policy report noted that, quote, home purchases by low-income households have fallen disproportionately more because mortgage lenders impose maximums on the ratio of a borrower's debt service payments to the borrower's income. I'm worried about how this dynamic will interact with the recently proposed capital requirements proposal, which, according to analysis from the Urban Institute, would disproportionately increase the cost of mortgages for Black, Hispanic, and low and income moderate borrowers. Given this, isn't there a risk that if the capital rules implemented without changes, that it could make it even harder for disadvantaged borrowers to attain home ownership?
There is a risk like that, and we're very focused on it.
And hopefully you're working to mitigate it.
Yes.
Thank you. Thank you, Mr. Chairman.
Thanks, Chairman. Senator Rounds from South Dakota.
Thank you, Mr. Chairman. Chairman Powell, welcome back. Look, First of all, I've appreciated the way that you've approached the discussions in front of this committee, and I understand your desire to stay as neutral as possible with regard to the politics involved in an election year. But I do have some questions here, specifically with regard to the Basel III Endgame proposal.
All right, it's a new high. I don't know. Is it a new
Analysis
all-time
of that
high?
proposal
I think it might be.
found that 97%
You're like half
were
a
either
point off.
opposing it
And then
or
NVIDIA
expressing
breaking out. But you are about to break again.
concerns.
Literally gave up 100
In the
points.
hearing last March
2 days
on the
later, we
Monetary
did the
Policy
same thing
Report,
on this
you stated
situation.
that the Federal Reserve is a consensus organization, and you said, and I quote,
Literally
"I will do
0.3 off
everything
of
I
a
can
new high."
possibly to do. I will do everything I can possibly to bring people together in consensus and have a capital framework that could be broadly supported." My question to that is, do you currently believe that there is a consensus on this capital framework?
I believe that we will have one. I'm fairly confident that we will have such a consensus when we do move forward.
So we could expect that you will probably not call a vote on the proposal until you believe that there is a consensus?
I think that's right. I mean, we're just in the process of digesting the comments and then making the appropriate changes.
Thank you. As you are aware, I've weighed in several times on the concerns that I have with regard to Basel III Endgame, including I'm concerned about the lack of transparency, the negative effects on mortgage lending and home affordability by disincentivizing banks from offering high loan-to-value loans that primarily help first-time home buyers and low to moderate income borrowers. I'm concerned that the proposal will make buying a home harder than it already is for many. And further down the road, I fear that it could disincentivize mortgage lending from the largest banks, particularly with regard to the secondary market and their impact on even smaller banks that do business with them. Would you be willing to withdraw the proposal or repropose with significant modifications, particularly addressing the concerns that I and others have on this committee, raising specifically with regard to the impact? And I'm thinking of Freddie and Fannie in particular and what the impact might be. What would you see as the process involving those particular issues?
So on those issues, we're well aware of and very focused on those issues. We haven't decided what to do about that yet, but we get it on those issues. In terms of process, we're not at the stage of making that decision. I will say, if it turns out to be appropriate when we get to that point for us to repropose parts or all of the thing, then we won't hesitate to do so.
Okay, thank you. Makes me feel a little bit better because I do think there are some very serious problems that would occur if the Basel III Endgame as proposed goes into effect. And I most certainly am hoping that the Federal Reserve will find a consensus on this. And it sounds like that may very well include some significant modifications if it were to be brought at all. Is that a fair statement?
I expect there will be material and broad changes to the proposal before it comes back to the committee for consideration, the board for consideration.
Thank you, sir. Let's just, with regard to the economy today, a limited level of price growth is believed to help facilitate economic expansion, reduce the risk of recession, and help businesses and consumers plan. However, during the Biden administration, we saw inflation climb to 13%, and those prices are now the new norm. I know that you make it a policy not to comment on the administration's fiscal policy, but it is well known that I really do believe that high inflation and high prices have been a direct result of President Biden's policies, failed in many cases, that the Federal Reserve has limited tools to address some of the problems that these policies created. We talk about supply side versus demand side on these costs. What have been some of the unintended consequences from raising the federal funds rate as rapidly as you felt that you had to as the chair and as the committee? What are some of those? I know that we talked a little bit about SVP and the failure there, their inability to look at treasuries and the increasing interest rates and so forth, but can you talk a little bit about some of the things that you've seen that were negative with regard to trying to respond to those high inflation rates?
Yes. So high interest rates are hard for businesses. They're hard for people. They're the thing they're the tool that we have to use to bring inflation down. And our job at this time, when high inflation comes, it is the Fed's job to restore price stability, and that's what we're doing. You point to the losses in banks. That was a very substantial thing, and obviously the supervisors, and that was us, didn't get to that problem. We were aware of it, but we didn't probably appreciate it enough. Another surprise, though, is that we were able to get this far and get inflation down this quickly without seeing a big increase in unemployment. And that's just a great result. That's just a surprise. It's not consistent with the historical record, but it's a really positive thing.
Thank you. And I would just know that the only tools you had available were demand-side tools.
Yeah, that's right.
Thank you. Thank you, Mr. Chairman.
Thank you.
Senator Warner of Virginia is recognized.
Well, thank you, Mr. Chairman. Chairman Powell, it's great to see you. I would point out to my good friend from South Dakota, I do think, if we'd gone back a year to 18 months ago, nobody would have predicted a soft landing. And I know you're not ready to declare victory by any means, but the fact that inflation has come down, and I actually think some of the things like the CHIPS bill, the infrastructure bill, and some of President Biden's policies have actually kept the economy growth rate at the levels that have allowed you to bring down inflation without seeing a dramatic rise in unemployment. And again, that'll be something we'll probably have the opportunity to litigate over the next 8 or 9 months. I want to take my time on issues around less about monetary policy and more about regulation. I think we can never presume that we're out of the woods on financial stability, as we saw with the New York Community Bank yesterday, the stock plunge and the capital infusion. One area that I raised with you a year ago, I want to re-raise today, and that is non-bank lending. The fact that non-bank lending in terms of to non-financial firms now is actually exceeding regulated bank lending. And let me be clear, I've got, the non-bank financial sector has done productive things in our society over the years. But when folks like former New York Fed President Dudley and former Fed Governor Grosvenor recently said that they had worries about this reliance on the non-bank financial sector could lead to overall economic lack of stability. I guess, what do you think? I've got a 3-part question. What do you think are the risks as we see this push-out effect of more and more lending going outside the regulated perimeter to the non-bank sector? How much do we really know about these institutions? And one of the things, they have very smart, sophisticated investors, but if those very smart, sophisticated investors said, well, hey, we don't like the lending profile right now, and we want you to not make any additional loans for the next 6 to 9 months, do you think our system would be able to pick up the slack?
So we have the regulated banking system where you've got a lot of transparency, you've got deposit insurance, you've got access to the discount window and all those things, regulation. If you go outside that, most of the funding that we see now in these vehicles is sophisticated investors who are actually limited partners, meaning they can't pull their money out. They've signed a contract, they've funded these deals. And so what you see now in the non-bank financial sector is significantly, it's that kind of thing. So it doesn't have the run risk. The point is, the bigger it grows and the more diverse it gets, it is happening outside the regulatory perimeter, and you worry that when there is another crisis, you'll be surprised, but there will be ways that financial structure too can break down, and it does break down in ways we don't anticipate. So I think we need to be smart about the way, about intermediation is absolutely moving out of the banks into the capital markets and into non-bank financial institutions. That's what's been happening for a long, long time. I just think we need to be thoughtful about understanding where the risks are emerging.
Right. And that sophisticated investor may rightfully say, hey, we don't want you to lend anymore for a X period of time, but that may then, at that moment of crisis, mean that the lending capabilities completely dry up. And one of the things I never completely understood until I got a little better explanation recently, why the large regulated banks weren't more complaining about this non-bank lending, but as I got to understand a little bit more.
There it is, new high. Literally, Meta and NVIDIA both hitting 52-week highs, 51.15.
But many of the regulated
Today
banks
is your new
actually
all-time
lend to these
high.
large institutions. So they make,
again, we set that one on Friday.
They make money off of those relationships And maybe that's, again, an explanation of why
Monday.
they're not being more critical. I only got 40 seconds left, but I would like
He
to
hit the
come
high
back
on
to
Monday, gave it up,
thing that
bounced
we've
back
talked
up. We
about
did
a
this
lot.
again a couple weeks ago.
And that is the question of use of the discount window. I believe one of the original tools that the Fed had. I know banks say, well, we're concerned about the stigma. I've got some legislation that would actually require mandatory use of the discount window. I'd love your comment on that. And also just the idea that having the mechanics of the discount window open, potentially even 24/7, because we saw with SVB, they didn't know how to use it. Not even
Euro close. We still got another
if
hour.
they wanted to use it in the non-bank hours, could they get access?
There's a lot of work to do on the discount window. You're absolutely right. It needs to be brought up technologically into the modern age. We need to do more to eliminate the stigma problem, and we need to make sure that banks are, actually able to use it when they need to use it. And those things. That's a broad work program that we're on right now, and it's very important.
I know you're working on it, but I would look forward to working more, and I'd invite other colleagues. I really do think before we start adding a whole host of the other regulatory issues, we ought to use some of the tools that are out there. You're not gone. So
I just checked in at the Veterans Committee. Senator Tillis, North Carolina. Thank you, Mark.
I was about to take control, Senator Warner. Welcome, Chair Powell, and Gus sends his regards. If you have time after the hearing, you ought to go by and see him. He's a dog in our office. But
I don't want to disturb his nap. But
but thank you for being here. I want to get back on this Basel III proposal. Senators Lummis, Coons, Gillibrand, and I sent a letter indicating our concerns with the current proposal. But I think it's also worth noting that the number of other organizations, a diverse group that are not normally aligned on policy. You got Bank Trades, National Housing Conference, NAACP, Habitat for Humanity, National Community Reinvestment Coalition, the list goes on, who have concerns with the current proposal. Here's my concern. I think we're trying to make the best of what was foundationally a bad proposal. And so I'm in the category of people who think that it should be reproposed, because I think one of the reasons why I did not support Mr. Barr's nomination is I felt like we were going to be here. I mean, it was pretty clear to me before he ever got confirmed on the board that we were going to be in this place some months or years later. And here we are. And I think that the industry felt the same way. All of these stakeholders, some of them are in banking trade, some of them are on the other side of the spectrum. So I'd like to cast my vote or provide some weight to the idea that we should repropose it. And what we ought to do is talk about the reality of increasing capital, or the prospect of increasing capital requirements doesn't concern me. I think the prior Fed supervisor had made comments publicly that maybe we needed to
you got
raise
both
capital
NVIDIA
standards.
and Meta
what we
hitting
did here in this
52-week highs
proposal, and I heard in
as
that
we are going
dialogue,
into
is
52-week
let's
highs,
deal with
all-time
puts
highs.
and takes. Let's talk about raising capital requirements, but let's also talk about reducing the cost of the regulatory burden today if we can do it responsibly. There's no evidence of that in the current proposal, and I think that may actually produce a different set of comments that would be instructive to a final proposal that I think realistically will include some increasing capital requirements. So over what time horizon do you think we would expect to either try to make the best of this foundation or go back and take a look at a new foundation and repropose it?
We're going to work through it as quickly as we can and should. I will say it's more important to get it right than it is to do it fast. We're not in a hurry. But my guess is we'll work this out over the course of this year.
Yeah. Well, if you take a look at the outsized cost of operational risk, the long list of concerns that I have publicly and privately expressed on the current proposal, I do think sometimes it's easier to knock down what I think is a poor foundation and build a better house. So again, just wanted to make that comment publicly. I got a question about shrinkflation. I tell you, some of these words that we come up with, but President Biden's using the idea of shrinkflation and chastising manufacturers for creating smaller portion sizes for potato chips. I'll use that as one example. But if you have rising input cost And you're not able to control that, and you're in a marginal business to begin with, and now you're saying you can't even reduce the quantities. How does a business that's not making a profit make that work?
You know, I mean, we see inflation as, at the aggregate level, as a mismatch between supply and demand.
Yeah.
And as we've seen supply get better and we've seen demand cool off a bit, it was very hot coming out of the pandemic. We see inflation coming down.
We saw food inflation between 2010 and 2021 at 18% over 11 years. And over the last 3 years, we've seen it at 21%. I think that we have a industry that's trying to actually provide products that consumers want, and now they're being chastised for trying to figure out how to make the numbers work. So this whole idea of shrinkflation is just confounding to me. I'm going to submit some for the record. I want to stay on time. But I have a question. I think the chair mentioned, if I misunderstood this, I'm sure the chair will clarify, but I thought in his opening comments, he suggested that stock buybacks and paying out dividends were a key factor in inflation. Do you, as just a matter of policy, see stock buybacks and dividends as one of the top 5 reasons we're experiencing the inflation we have right now?
First, I guess I see stock buybacks and dividends as just the same thing in a different form. And I don't know, I wouldn't comment on anything the chair even may have said.
Yeah. Well,
I'd like to avoid that.
We haven't stopped. Again, you're getting just more moments. This isn't off of Powell or anything. We're just moving up into it again. The video breaking out. There's a lot of different names, and then gold's still up, dollar fairly down on the day.
Material effect.
So you got a couple of different factors here.
I'm not going to ask you to respond to that, but there are some.
But you're 5 points higher than the previous high, still going up.
They think that would be helpful. I just, for one, I'm not an economist, but I just can't imagine that it would be, one of the things that would make your job easier. Can you at least opine on that?
Banning stock buybacks and dividends?
Yeah.
Yeah, I think that would be quite a change in our capital markets.
Yeah, me too.
I mean, shareholders, this is just money going back to shareholders from companies that have nothing to do with it.
Okay, thank you, Mr. Chair.
Well done, Senator Tilley. Senator Smith of Minnesota is recognized.
Thank you, Mr. Chair. And thank you, Chair Powell. It's great to see you here again. I appreciate your testimony. And I'm going to focus my questions on housing and housing affordability. As you have well pointed out, overall prices have moderated considerably since the Fed began raising rates, yet housing costs have remained stubbornly resilient or high, leaving us really no closer to addressing the affordability crisis that I think that we have, and this was there well before the pandemic. Shortly before the Fed began tightening, Chair Powell, and you came before the committee, I asked you about how higher interest rates could exacerbate this unaffordability problem that we have by making mortgages more expensive and also hindering housing development. And I think that at the time you argued that we have a excess housing demand during the pandemic, and that was kind of at the root of higher costs, and that your goal, the Fed's goal, was to bring demand closer in line with supply. So my first question is this. So the housing market has cooled significantly over the last 2 years. Is it your view that it has cooled enough so that housing supply and demand is better in balance? And following on that, given the Fed's limited tools, understanding that, at what point will you think that you've done all that you can to lower housing demand? My view is that we're well past time in Congress to take action on the housing supply side, but I'm interested in how you see this dynamic.
So we're not focused so much on housing and housing inflation. We're really focused on the aggregate, which is also goods and non-housing services. That's way more than half of the PCE inflation. There are things in the housing sector that we didn't fully anticipate. One of them just was that people in very low interest rate homes with very low interest rate mortgages aren't selling.
Right.
So the quantity of homes that's available is incredibly low, and that's why it's very little in the way of existing home sales, and that drives up existing home sale prices, but also new home sale prices. So again, there's two sets of factors. It's the longer run issue, but then there's the factors associated with the pandemic and the inflation and our response to it. I think as the overall inflation continues to come down and rates then come down, you'll see the housing market start to heal and get better, and housing affordability should go up again. But you're still going to be left with the longer term problem of supply.
Right. I I think that's right. I mean, what I see in Minnesota is that higher interest rates are, of course, driving up the cost of construction. They're driving up the cost of mortgage rates. You're seeing people who aren't leaving a house that maybe is a little too small for them because they can't afford it, that the housing, just as you're saying, people are staying in their homes longer. And so there's sort of this double whammy of construction slowing at the same time that there is this great need to address housing supply. One of the things that is happening, it's interesting, a recent analysis by Zillow found that the monthly mortgage payment let me get this right. A recent analysis by Zillow found that the monthly mortgage payment on a home, on a $343,000 home, assuming 10% down payment, is about $2,200 a month. Okay, so $2,200 a month. That means the cost of owning a typical home is higher than 30% of median income, which is kind of the measure of affordability. And so we've got a lot of issues with people just being priced out of the housing market. So from where I sit, the cumulative issues of higher mortgage rates are just really a challenge. And until we can get to the bottom of that, we're going to have a hard time addressing the housing affordability challenge that we have. Would you like to comment on that?
Yes, I agree with all of that. I mean, home prices don't actually go into the calculation of inflation. It's really rents and owner's equivalent rent. But I agree, the housing market is in a very, very difficult situation. And, the sooner we can get back to price stability and restore interest rates to lower levels, the sooner it can start healing.
Yeah, thank you. Thank you, Mr. Chair.
Thank you, Senator Smith. Senator Kennedy of Louisiana is recognized.
Mr. Chairman, thank you for being here. Thank you for your services. I think I've said before.
This is it, baby.
I believe you and your team probably saved the world economy during the pandemic economic meltdown when the whole world wanted dollars by establishing the currency swap line. So I thank you for that. You gave an interview, Mr. Chairman, on February 4th of this year to CBS, 60 Minutes, I think. Is that right?
Yep.
I ordered a transcript of that hearing, which I read. I learned a lot reading it. You were asked a question about inflation, and you asked a question about prices declining. And here was your response. I'd like to quote you, if it's okay. Quote, "So the prices of some things will decline, others will go up, but we don't expect to see a decline in the overall price level. That doesn't tend to happen in economies except in very negative circumstances." End quote. Did I quote you accurately?
I believe you did.
Okay. Later in the interview,
accurately.
You were asked about the national debt. Do you recall that?
I don't actually, but I'm sure that's right.
Okay. Well, at least according to the transcript, your answer was, and again, I'm quoting you, "In the long run, the United States is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path. And that just means that the debt is growing faster than the economy. So it is unsustainable." End quote. Do you remember saying that?
I've said that many times. I think that's uncontroversial.
Okay. Later in the interview, you said, I want to quote, "I would just say this, integrity is priceless. And at the end, that's all you have. And we plan on keeping ours," end quote. Is that an accurate statement?
Yes, it is.
Okay. That's why I want to ask you about the FDIC. Have you read the article in the Wall Street Journal entitled, quote, "Strip clubs, lewd photos, and a boozy hotel, the toxic atmosphere at bank regulator FDIC," end quote?
I think I did read that a couple months ago.
Did you read the article entitled, I quote again, FDIC lawyer stayed on paid leave for weeks after child porn arrest, end quote?
I don't remember that one.
Okay, did you read the article entitled, also in the Wall Street Journal, quote, FDIC chair, known for temper, ignored bad behavior in workplace, end quote?
Honestly, I don't. I read so much, I can't, I remember the broad story, but not particular stories.
Did you read the article in which a former female employee of the FDIC allegedly recalled her male colleagues saying women needed to use sex to get ahead at the FDIC?
I do not recall that. No.
Okay. Did you read the article in which a female risk management examiner during a lunch with a male examiner said she had become friendly with that examiner, and he complained to her about his marriage, allegedly, telling her he wasn't getting enough sex. And she allegedly said, quote, obviously if I walked, or he allegedly said,
No, this is
obviously
wild.
if I walked into this office and you were naked, I'd fuck you right here.
I do not remember that, and I think I would.
Okay. Do you remember the article about Mr. Randall Ditch, a supervisory
He just asked
examiner
Powell.
in Denver?
He just said the F word to
Who
Powell.
allegedly was demoted in 2014 to a non-supervisory examiner position in Tulsa after having sex twice with a subordinate female employee and a number of other rule violations. In this article, it says, allegedly, Mr. Ditch had urged the woman to not, quote, be a pussy, close quote, and drink a shot of whiskey during work hours, the records show. Do you recall that?
I do not recollect that.
Here's my
Powell
question.
looks so
I could go
disturbed
on
right
for-
now.
Could go on, but you're not going to go on, so you've passed your 5 minutes. Do your question once.
Sir?
Senator Kennedy, your time's already expired. You can do one. You did 5
He said
minutes.
it's been 5
You see the
minutes. You
whole
have
5
not
minutes
asked the
with
question.
your monologue of...
Well, you did 6 minutes. I timed it.
I asked my...
You did 6 minutes.
Senator Kennedy, for months, I have let you go way over the 5 minutes. You get your question.
But you did 6 minutes.
I chair this committee.
I understand. You still did 6 minutes. Check the record.
I'm going to order, you're going to be at 6 minutes and 15 seconds if you continue this argument,
Well,
or
that's
you're going to
good.
ask your question.
I'll ask my question. I just wanted the record to be clear, Mr. Chairman. Mr. Chairman, in light of these allegations, if they're proven, how can the FDIC lead this charge for Basel Endgame 3, which is going to turn the banking community upside down?
I don't know how I would make the connection to Basel III. I'll say it's deeply troubling things, obviously, but again, as your point was,
troubling.
if proven, and I think we have to decide Basel III on its merits, and we're not looking to the FDIC to lead this, by the way. We're looking at the Fed to do what the Fed thinks is right. That's what we're going to do. We don't look to, and they don't look to us to lead them.
Thank you, Chair Powell. Senator Butler is recognized.
Thank you, Mr. Chairman.
Thank you.
Senator Butler is recognized.
Thank you so much, Chair and Chair Powell. Good to see you in person, and thanks for the time to talk. I want to pick up a little bit
Bro,
where
those are wild quotes.
Senator Smith
To, like,
was
read those to Jerome Powell?
in relationship to
If
housing,
any of you are like, yo,
housing
Powell, can I read you
affordability,
something?
and hopefully draw a little bit on the
And
point
that's
that
what
you
you
were making
read him?
about rents.
That's intense.
It definitely
That's intense.
is an important crisis in my state of California, and I know across the country, where at least according to the California Department of Housing and Urban Development, renters in San Diego are paying about 50%
San
of
Diego.
what is they're spending more
Yeah,
than
MSO is
50% of what
popping.
is
I don't have
considered
any news, though.
affordable.
I'll check.
And statewide, the majority of renters, more than 3 million households, are spending more than 30% towards rent. Nearly 1/3, more than 1 in 5 million households pay more than 50% of their income towards rent. And the Chicago Fed President Goolsbee even referred to housing as a missing piece of the puzzle in the Fed's path to lower inflation. So to the continued conversation, and I know a point that you've made that about how inflation
4
has
minutes
a
ago, you had
disproportionate impact
Schumer
on
talking
lower
about
income
weed.
households
Bill
who are
has
focused
momentum
on
to
spending
pass
more
this
of their
year.
monthly
Safer
budgets
banking.
on housing. How is the Fed's monetary policy impacting the supply of affordable rentals?
I don't know that we're affecting the supply of affordable housing. If you think of affordable housing as something that's connected to some sort of government program, that's not our bailiwick. I mean, clearly interest rates do affect the affordability of housing, though.
And there was a key point that you made in an earlier, I think, reference about and in your response to Senator Smith about the monetary policy and the calculation of rents. Can you just spend just briefly talk about that? I want to have one last issue I want to get to before I run out of time.
It's hard to talk about it briefly. It's actually very conceptually challenging to think about housing inflation. Do you include the costs of financing it? Do you include the sale prices? And the answer is we don't. We convert ownership into an imputed rent, and that's 2/3 of homes are owned. And then we actually measure rents, but leases only turn over once a year, so you look at market rents, and what's happening with newly signed leases may be very different from what was happening a year ago. So it's complicated, but the good thing is we understand all that, and we look through that. We look at housing services overall as one of the three important categories, along with non-housing services and
check news on
goods
ups.
Inflation.
Thank
Watch
you for
FedEx
that. In the line of affordability
Looks like it's just
and
UPS.
housing, again, sort of very general, I think, to the broad monetary policy and state of our economy, and unique to California. And I raised this with Secretary Yellen when she was here as well, the insurance gaps that are presenting themselves due to the impact of climate change. Where 1 in 5 residents in California live in areas that risk flooding, and all 58 counties have a history of flood damage. And we are seeing more and more insurance providers, home insurance providers, actually withdrawing from the state. You and I had talked a little bit about this in our preparation for today's conversation. Can you talk to me about or share with us how it is or what you think the impact might be of this sort of protection gap in insurance coverage on the overall stability of financial institutions in the broader economy?
So it is clear that insurance of various different kinds, housing insurance, but also automobile insurance and things like that, that's been a significant source of inflation over the last few years. And it's to do with a million different factors. It's nothing that we control from a regulatory or a supervisory standpoint. In the longer term, companies are withdrawing from writing insurance in some coastal areas, and you got to think 10 years from now, how are you going to get housing insurance? And maybe the government will have to step in, but it's a significant issue.
Thank you, Chair
The
Powell.
government will have to step in on housing insurance.
Senator is next. Yeah, Vance. Senator Vance of Ohio is recognized.
Thanks, Mr. Chair, and my gratitude to you and the ranking member for doing this hearing, and thank you, Chairman Powell, for being here. It's good to see you again. I think these hearings are always very important. Actually, give us an opportunity to sort of provide some oversight to what's going on at the Fed and better understand some of the things that you guys are doing that affect our constituents. Now, I wanted to sort of focus on the Basel III regulations, Chairman Powell, and specifically the way that they have. There have been various proposals to sort of draw them down to focus on the regional banks. And to just go back to sort of one of the most significant crises, obviously, in our banking sector, of course, the collapse of SVB and First Republic. You and I have spoken in private and I believe in public, but one of the concerns that I have is when we talk about increasing capital requirements on the banks. If the banks were under higher capital requirements in the run-up to the crisis, there's maybe an argument that SVB, for example, would have bought more long-term treasuries, which would, of course, expose their balance sheet to even more treasury bond risk. And that, of course, would have maybe hastened the collapse of SVB. And I guess I want to start here with, when we talk about, some of the Basel regulations, what was the original intent? In other words, what was the original sort of proposal for which banks would fall under those regulations and which would escape them?
You mean this time around, or I mean earlier on?
This time around.
So it's the 37 largest banks. It's down to, well, there's 4 categories of banks, including the G-SIBs, and this is down through the 4th category. The proposal that's out there now, I think, does extend to Category 4 as well as 3, 2, and 1.
So what's the minimum assets under management that you guys have proposed, the current
billion.
Basel regulations?
100 billion.
100 billion.
Yeah.
And sort of that sort of gets to my concern here, because I know there's some discussion about whether you apply them at $700 billion of AUM or $100 billion of AUM. And maybe you could just sort of walk me through that decision process at the Fed, where you guys are and what would sort of justify drawing down from a $700 billion threshold to a $100 billion threshold.
So there's the G-SIBs, there's the 8 identified G-SIBs, and then there's one category 2, I guess, and then there are the big regionals, and those tend to be well-known big regional banks, and they're category 3, and one of them's a 2, I guess, but they have a different tailored level of regulation. And then category 4 had significant tailoring, and the question is, we have to ask the question, since SVB was a category 4, we've got to ask the question, what if anything needs to be changed in the way they were regulated, supervised from a capital and liquidity standpoint. So there was tailoring all the way down, and then below 100, of course, those are community banks, and that's a different regime as well. This makes sense. We want to have a diverse banking sector. That's a great benefit to our country, and very unusual for an advanced economy. So it's something we want to preserve.
Yeah, and I'm sure you know, Chairman Powell, but just to put this on the record, I mean, a lot of the commercial lending, a lot of the real estate lending, a lot of the consumer lending, about half of that lending, consumer lending, is provided by the regional banks. I believe the Huntington in my home state of Columbus is the #1 SBA lender in the entire country. So these, to your point, I think these do provide incredibly important benefits to our economy. And you hear a lot of people talk about the American economic miracle, and I do wonder if part of that is because we don't have the same type of financial system that has sort of dominated in Western Europe and other first world economies. I'm curious, in the process of amending the Basel requirements, have you guys made a decision about where to set the threshold yet, and when do you expect to set that threshold?
We haven't made any final decisions. We put out for proposals some months ago, a proposal, and we've gotten a lot of comments, as I'm sure you're aware.
Visa flushing through the low, only down 1%,
but we're just beginning now to sit down and talk about the changes that we'll appropriately make to the original proposal.
And when do you expect to sort of issue a final proposal?
I think it's going to take some time.
Basel
I think
III,
it's more important to do it right.
We've had this talk a couple of times.
My guess is we'll get
it's
through
regarding
this
like
and
banking
be done
requirements.
over
It's
the course
something
of
they
this
did
year,
years ago, and they're finally agreeing. But it's going to require like banks
I'm
to
wondering,
change
just
the
being
amount
mindful
of
of time, I have about 30 seconds left.
That's why it's such a big deal.
Would
and
you
even
be
Powell's
willing to
talking about
commit
even maybe
to
not implementing it. That's been getting some
to say that in the
people
process
lately.
of amending, the Fed will remove the regional bank drawdown and limit Basel's application directly to the G-SIBs or $700 billion or above?
I can't get that specific at this point, but we're clearly looking at the whole tailoring issue.
I appreciate that. And again, I just repeat, Chairman Powell, given what actually happened with the banking sector with SVB and First Republic, I just encourage you guys not to apply a regulation that doesn't actually solve the underlying problem. And I fear that if you apply this to banks of $100 billion and above, you actually are doing just that. So with that in mind, I'll yield. Thanks, Mr. Chair.
Thanks, Senator Vance. Senator Tester of Montana is recognized.
Yeah, thank you, Chairman Brown, and thank you for being here, Chair Powell. We appreciate your work in a difficult situation, but I think you've done a really good job, and so thank you for that. Look, at success at the Fed on your mandate for strong employment and stable prices is critical for small businesses on Main Street, for farmers, for ranchers, for Montana families. You follow all the metrics. From your perspective, where is the economy at now, and where's it going?
The economy's growing at a healthy, sustainable, solid, strong pace, and that's one thing. Second thing I'd say is the labor market is very strong and quite tight still. 3.7% unemployment for the last 24 months. That's the longest period since 50 years. And the third thing is inflation. Inflation was too high. It's come down very sharply since the beginning of last year. If you look at the 12-month number, the headline number has come down from the
it's
fives
never too
down
high.
to
The peach,
2.4.
baby.
And
the peach ain't coming
core
down.
number is at 2.8.
Jerome,
I
did
think
you
it was
see
at
that?
4.9
It's Bradley
ago.
Frizzle
So
and the peach.
These are big declines. So we're in a very different.
Wow, congratulations. Chad Adonia, you've been blessed.
One of the areas where
Powell's
there
speaking.
has been
Good morning, Bradley
inflation, and
Frizzle.
I don't exactly know where it's at now, but food rose quite rapidly. And by the way, I'm a farmer. We didn't get much of that. In fact, we didn't get any of it. Prices now compared to what they were a year ago are actually off. Compared to where they're 6 years ago, they're up. But compared to where they're a year ago, they're down. And so my question to you, Chairman Powell, is there anything you can do specifically to deal with food costs?
So as I'm telling a farmer his business, but if you look at the food cost to the consumer, part of that is commodity costs, and that was partly spiked because of Ukraine, grains and oil and that kind of thing. But the rest of it is a lot of costs in the supply chain from when it leaves the farm to get collected and processed and trucked around and then put on the shelves and then the stores, and all those costs are just part of the general economy. So as the labor market cools off from its overheated status 2 years ago, you will see, and you have seen, food inflation flattening out. And so, the really high rates of inflation have come down. The prices, of course, have not.
Correct. I would just say that cattle's doing better. Grain actually has dropped in price at the farm gate, and I don't want to get into that debate with you at all because we probably agree, but it'd take too long, take too much time. We got other stuff to talk about.
I'd be learning from
you. You've discussed in previous hearings the impacts that the pandemic, shutdowns, and supply chain issues have had on economies globally. How does the U.S. economy look today compared to our competitor nations, particularly China?
Well, I start with the advanced economies. We're doing the best of anybody. We've got the strongest growth and the lowest inflation of the advanced economies. China is a whole different story. China's having significant difficulties with its economy right now, and they're in a very different place than we are.
And so, to repeat that, what I heard you say is that the economy of the United States is basically in better shape than any other economy in the world?
Any other major economy, yes.
Yes, okay. Look, one of the other challenges out there is housing in communities all across this country, whether you're in Montana, whether you're in a city in Ohio. Workforce housing in particular is a top priority, top commodity, so to speak. Plenty of folks, great organizations are working to address this. I meet them every day, and I appreciate the work they're doing. But how do these housing supplies issues show up in the data that the FOMC uses to make decisions?
So housing prices don't go into the data. Housing starts and renovations and things like that are just business activity, and that shows up. But when it comes to inflation, we convert ownership into an imputed rent, and then we look at rents. Okay. And so that's how we look at all that. So we're not directly affected by changes in housing prices, but over time those will drive rents up.
So is it fair to ask, are there economic trends that you see for housing?
Yes. So there's two big things going on. One is we have this underlying shortage of housing, and it's due to things like difficulties of zoning. A lot of the close in to cities, places are already built, and so more difficult to get zoning, more difficult to get people and materials and all that. That's one thing, and that's not going away. Then there's just a ton of things happening because of the pandemic, because of inflation, because of higher rates. And those are, in the short term, those they're weighing on the housing market. But as rates come down and that all goes through the economy, we're still going to be back to
Eli Lilly came back up.
We don't have enough
earlier.
housing.
Well, once again, thank you, Chairman Powell, for your work. I very much appreciate it. Thank you, Chairman Brown.
Thanks, Senator Tester. Senator Kramer of North Dakota.
Thank you, Mr. Chairman. Chairman Powell, good to see you. Thank you for being here. It's been a rather uneventful couple of days for you, considering you've spent 2 days in this place. And I'm not going to upset that, by the way, just so you know. But I did appreciate your response earlier to Senator Scott when he asked about immigration, you said the Fed hasn't been assigned that. So I want to bring up something else you haven't been assigned to that you and I have talked about over the years, and that, of course, is climate, the role of climate in your job, the role of climate risk in banking.
You're right at
and you've
Monday's
often said,
high.
I think
Right
the
now.
most common statement was we should stick to our knitting. I think is one of yours. Stay in our lane.
Not
Similar
my
to what you said
job.
probably to Senator Scott. But that said, in October, the Fed, the OCC, FDIC issued climate guidance, as you know, for management of covered institutions. And so I'm just kind of curious, did Congress somewhere along the line give the Fed authority over climate policy as well? Or is that another one of those things that somebody just took on? And I realize you're not the dictator of the Fed, only the chairman of the Fed. But I'd be interested in, as the chairman, your views on it.
Our assignment is the safety and soundness of banks and that they understand and can manage the risks that they face. That's our assignment. And we said in climate world we would do two and only two things. One of them was to do illustrative stress scenarios, scenarios, not stress scenarios, climate scenarios, so that the banks are already doing this. The large banks who are subject to this, they're already doing it because they're doing business internationally and they don't have any choice. So we said we'd do that, and we also said that we'd offer guidance on not on level of climate risk or anything like that, just on what you had to do to be in a position to assess. And that's, for my thinking, that's it. That's what we're doing. And we're not doing it. There are no new initiatives. We're not going to change our capital requirements to reflect climate risk or anything like that. I'm really determined that we are not a climate policymaker and that is really the business of elected officials.
Very good. Thank you. I'm going to bring up one other topic I don't know that's been brought up today, and that's central bank digital currency. I think from a lot of my friends out there, I think there's I know there's some confusion. I mean, I'm easy to confuse, but there are a lot of people that get confused about what is meant by the administration's, admonition to continue researching, experimenting, looking at some sort of central bank digital currency. I think people back home look at that and go, "Oh my gosh, they're going to control this now." And could you maybe just differentiate a little bit what people think of in terms of a Bitcoin or their held digital currencies versus what a central bank digital currency, who, in my view, should emulate cash, right? It still should be about the dollar, not about some different kind of currency. Could you just sort of help people back home better understand why they shouldn't be quite so frightened?
First of all, I want to say that we're nowhere near recommending or let alone adopting a central bank digital currency in any form. But the idea is that as technology has evolved, money has become digital. So, but the government doesn't issue digital money. It's digital. If you look at your bank account, people don't hold those physical dollars. They're digital. So the thought was that the government could create a digital form of money that people could then transfer among themselves. Now, of course, that raises a concern that if that were a government account, that the government would see all your transactions, and that's just something we would not stand for or do or propose here in the United States. That is how it works in China, for example. But that's not what if we were to ever to do something like this, and we're a very long way from even thinking about it, we would do this through the banking system. The last thing we would want, the Federal Reserve would want, would be to have individual accounts for all Americans, or any Americans for that matter. Only banks have accounts at the Fed, and that's the way we're going to keep it. So it's just really, it's a question of following technology as it evolves and in a way that serves the public better. People don't need to worry about a central bank digital currency. Nothing like that is remotely close to happening anytime soon.
That was very helpful. Thank you, Mr. Chairman. Thank you, Chairman.
Kramer. Senator Cortez Masto of Nevada is recognized.
Thank you, Mr. Chairman. Chairman Powell, great to see you again. Thank you for all of your good work. I want to talk a little bit about the commercial real estate and what's happening there. The Financial Stability Oversight Council's 2023 annual report identified commercial real estate as a financial risk. And the Fed's monetary report also noted commercial real estate prices continue to decline, especially in the office, retail, and multifamily sectors. I'm especially concerned that because of the low levels of transactions in the office sector, prices have not yet fully reflected the true decline in the value. So can you expand on the emerging risks the Federal Reserve has identified in the commercial real estate market, one? And then I'm curious, can you discuss the compound risks identified in commercial real estate lending, particularly at banks with large CRE concentrations and high fractions of uninsured deposits?
Sure. Let me see. I think there are just very, very few transactions in commercial real estate right now, particularly in the troubled areas. So it's not a question of prices still falling. It's a question that you don't have the kind of price discovery. You just have to assume that the prices are very low and have come down a lot. So on commercial real estate, we have a secular change in people working from home. This is one big part of it. That means that in many cities, the downtown office district is very underpopulated. There are empty buildings in many major and minor cities. It also means that all the retail that was there to service the thousands and thousands of people who work in those buildings, they're under pressure too. And banks will have made loans to many of those buildings. Not all of them, but many. So this we've known for some years. And so what do? We have identified the banks that have high commercial real estate concentrations, particularly office and retail, and other ones that have been affected a lot. We identify them, and we are in dialogue with them around, do you have your arms around this problem? Do you have enough capital? Do you have enough liquidity? Do you have a plan? You're going to take losses here. Are you being truthful with yourself and with your owners? And so we've been working with them. And so for some time we've been doing that. And this is a problem that we'll be working on for years more, I'm sure. There will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first-order issue for any of the very large banks. It's more, smaller and medium-sized banks that have these issues. We're working with them. We're getting through it. I think it's manageable is the word I would use, but it's a very active thing for us and the other regulators, and it will be for some time.
Thank you. Do you have concerns? Let me just ask you this. As you're talking with these small and medium-sized banks, because we know there's always could be a contagion, which we've seen in the past, do you have concerns that if they fail, that somehow this is going to impact the financial sector? And are you prepared and trying to address that and prevent that from happening?
We're trying to stay ahead of that. So we also reached out to banks that had high concentrations of uninsured deposits, and particularly uninsured deposits, and a lot of commercial real estate in the office sector. So we're well aware of that issue, and we're just trying to stay ahead of it on a bank-by-bank basis and overall.
Okay.
And so far, we've been able to do that.
Thank you. Let me jump to another issue that has been on my radar. The Federal Housing Finance Agency's report on the federal home loan banks concluded that the distinction between the FHL bank's role and that of the Federal Reserve discount window as lender of last resort has not been clear, especially during times of market stress. During the 2023 banking turmoil, we saw banks rely on advances from the federal home loan banks and didn't even have relationships with the Federal Reserve to use its discount window. I know you've talked a little bit about this with Senator Warner, but how is the Federal Reserve working with the federal home loan banks to ensure that banks establish protocols to borrow from the Fed's discount window prior to times of stress?
So we work with the federal home loan banks because in many cases, banks were moving their loan from the federal home loan bank to the Fed. So we need to have smooth transfer. We need to be in good touch with them. Even more important than that, though, is that banks, any bank in the United States, needs to be in touch with the discount window, know how to be able to access it, have appropriate collateral, have control of that collateral. In many cases, it was incredibly inefficient and took a long time for banks to actually go through that function. The federal home loan banks are actually ahead of us in technology. We know that we need to really invest in technology to modernize the discount window, and also we need to do more to get our banks, all of them, in touch with the discount window in a way that they can use it quickly should they need to do so.
Thank you.
Cortez Masto, Senator Haggerty of Tennessee is recognized.
Thank you, Chairman Brown. Welcome, Chairman Powell. Under your tenure, Mr. Chairman, the Fed has taken the stance that the 2% inflation target shouldn't be viewed as a snapshot in time, but rather it needs to be achieved, quote, sustainably. When inflation was running well above the 2% target back in 2021 and early 2022, the Fed was patient and allowed rates to offset the below target inflation that had occurred in the years prior. It strikes me as odd now that while we're still well above target
Apple
inflation,
is waking up
and have been well above for the prior
again,
year.
they were just red.
Markets
Again,
seem
they
to
haven't moved
expect
in
the
like
Fed to
3-4
immediately
days.
cut, even before
and
we
Meta's
breached
still
the
going.
2%
I haven't checked the
inflation
video.
threshold.
I have Intel up here.
So my question is this:
And the
if the
video's now
inflation
going
rate
to 920.
reaches 2%, would that be considered a return to the target rate on a sustainable basis, or is it still the case that inflation would need to more or less overcorrect to well below 2% before the Fed makes the rate cut adjustments?
So it would take us a while to really get comfortable that inflation had settled in sustainably at 2%. But that's not our test for changing interest rates. Interest rates right now are well into restrictive territory. They're well above neutral. And we've said we would not wait for inflation to get down to 2% because if you wait that, monetary policy works with long and variable lags. So we've said, for some years that we would start restoring the federal funds rate to a more normal, almost neutral level. We're far from neutral now.
Yeah.
And so, we do plan, assuming the economy moves along the lines we expect, we do plan on
920
on starting the process of dialing
Doing
back
it. Again,
restrictions.
Apple waking up and then Meta,
symmetry.
then you
I
just
know
had
we
NVO and
could have
Lilly. So you got a lot of mega caps starting to move
the
here.
economy to overshoot.
And it's a fairly
when
broad day, to
inflation
say
was
the
high.
least.
And we sort of made up for prior years of low inflation.
But you're still
trying to
below the
square
high we
that
just set.
with the fact that
We didn't actually do that. We adopted a framework that said we would do that, but then we got suddenly, a few months later, we got almost an explosion of very high inflation. That's not what we were looking. We said, moderately above or modestly above 2%. This was not modestly above 2%. And we reacted. We thought that the mistake we made was we thought that inflation would go away.
That it was
quickly,
transitory.
Transitory, which means it goes away quickly without effort by us. We figured out at the end of 21 that was not the case, and we acted.
And you don't see that same abrupt dynamic coming the other way. You're more comfortable.
No,
with
I think we're in the right place, which is we're waiting to become more confident that inflation is moving sustainably at 2%.
Mm-hmm.
When we do get that confidence, and we're not far from it, it'll be appropriate to begin to dial back the level of restriction so that we don't, drive the economy into recession rather than normalizing policy as the economy gets back to normal.
Yeah. Can we go to the balance sheet and talk about that? We've seen a dramatic expansion of the Fed's balance sheet over the past couple of decades. In 2005, it was at $800 billion. It's at $7.5 trillion today. It's doubled since the pandemic was underway. And through quantitative tapering, the Fed is attempting to reduce its footprint. And the concern I have is, on the other hand, government spending tends to just continue to be profligate. We're running now a $1 trillion deficit every 100 days. And we're flooding the market with Treasury debt, and we're putting upward pressure on interest rates as a result. And what I think that is lost on many of us here is that the spending levels will only make your job harder
like that.
when it comes to lowering interest
Literally,
rates. Not
Powell
to mention there's a
saying
tacit expectation
we're not
that
far
the Fed will
from
step in once the
confidence to
markets
cut
can
rates.
no longer absorb our new issuance.
But bonds got a little
I think
movement
this
off
is a very
that,
serious
so did
problem. I
gold.
think it deserves more attention. And I think we're now at a point where your objectives may be, very much at odds with the behavior of our fiscal policy.
And again, a lot of the momentum names are just moving right now. Meta, and NVIDIA, Eli Lilly, NVO, a lot of the other chips too.
In principle, more supply.
And then again, bonds and gold just got to pop there.
But that's not going to affect what we do.
We do have 2 minutes till Euro close as well.
Our balance sheet normalization is running.
Yeah, Airbnb
very
woke
much as
up back to
expected.
green.
We
Again, that's right
decreased
off
the
of
size of our
52-week high
holdings by
also.
Almost $1.5 trillion.
I hear you. I think it's troubling that we continue to put fiscal pressure by continuing to put, again, we're running a deficit of $1 trillion every 100 days. And the
bonds are
required
ripping.
to deal with that. We're putting a lot more pressure, I think, on the Fed. And again, making your job harder. I think we need to take that into consideration. Another component of this topic, your colleague Governor Waller said he'd like the Fed to shift its holdings toward a larger share of short-term treasuries. Back prior to the financial crisis, about 1/3 of the Fed's holdings were in bills. Now they're around 3% of your total securities holdings. Do you share the goal with Governor Waller? And if so, how long will it take us to get there?
Take a while. You know, that's an issue. We're in our FOMC meeting in a couple of weeks. We're going to have our first really deep dive on what to do with the balance sheet. That's one of the issues. I don't think we'll deal with that at this
officially
meeting, but over
joins
time,
NATO. NATO
you know,
statement.
you'd love not to own a lot of MBS, and I could see a case for shortening the maturity, but it's not something, you know, it's not something that would happen quickly, and you know, we're not actively looking at that. That's sort of a longer term aspiration that I think he was.
Just one final point, Mr. Chair, and you and I have talked about this before. We're in an election year. You're getting a lot of pressure. I hear it from lawmakers to adjust rates. I'm not telling you to raise rates or lower rates, but I'm just here to emphasize the fact
Sweden
that
now
credibility of
enjoys the
Fed
protection granted
depends
under
on your
Article
remaining
5.
data-driven. The
Meta
credibility
new
of our
high
currency
again.
as the reserve
NVIDIA
currency of the
hovering
world
there.
depends on that, and I encourage
A little bit
you
of
to
a
continue
movement
to
there.
be
Again,
positive.
Powell reiterating confidence in cutting rates. You got a little bit. This will probably last for another hour and a half.
Thank you, Mr. Chairman. So it's been a year
Ho-ho.
since we had the second, third, and fourth largest
Elizabeth.
bank failures in American history. Greedy bank executives were part of the problem, and the Fed, as the chief regulator of the biggest banks, was part of the problem. Under your leadership and direction, the Fed steadily weakened rules for the biggest billionaire banks, exactly the banks that failed last March. In other words, Chair Powell, you failed to do your job to keep these big banks in line. Now, when these banks blew up, you went into spin mode, promising that the Fed would do better. After years of hemming and hawing, you finally agreed to put
Euro
in place
close,
Basel
a little
III
cheek
rules
play.
that would strengthen capital
So again,
standards for the biggest
you
banks.
got Powell comment,
and I mean
NATO and
the
Sweden.
biggest banks.
Fed Mester
These
is
are
talking.
The Fed's proposed rule would apply to only 37
Fed
of
Mester
the
comments
nation's
coming out and Euro close. So a lot
4,500
happening
banks.
on this candle.
Only the banks
I wouldn't
that
read into
have
it too much.
$100 billion or more
EWD
in
Sweden
capital.
not moving.
Now, Chair
I keep
Powell,
an eye
when
on
you
that.
testified before this committee last June, I asked you about taking
And Fed Mester talking about
responsibility
lowering
for
rates
bank
gradually.
failures. And you said, quote, "The main responsibility I take is to learn the right lessons from this and to undertake to address them so we don't have a situation like this where we had unexpectedly a large bank fail and spread contagion into the banking system," end quote. And as part of learning those lessons, you also said, quote, that you agree with and support, end quote, Vice Chair for Supervision Barr's recommendations for strengthening the Fed's rules and supervisory practices for the big banks, and that you're, quote, confident they will lead to a stronger and more resilient banking system, end quote. So I just want to be clear. You haven't backed down from any of your comments from a year ago, have you, Chair Powell? Right lessons, don't let this happen again, supporting Vice Chair Barr's recommendations, which include stronger capital standards.
No.
You still stand by all that?
Yeah.
Good, good. I'm glad to hear that. Now, I understand that those 37 big banks don't like higher capital rules because they are like insurance. You know, they would make the banks safer, but they cost a little money and would nip into the bank's profits. So these 37 banks are swinging their very considerable weight around to try to weaken the capital rules. They've spent tens of millions of dollars running ads during Sunday night football and millions more for an army of lobbyists to try to twist arms here in Congress. Impressive spending, but who exactly are they trying to impress? A man on the inside? You know, despite all you said last year when the banks failed about supporting Vice Chair Barr's recommendations to strengthen rules for big banks, public reporting now says that you are driving efforts inside the Fed to weaken the capital rule. You even told the House Financial Services Committee representatives yesterday that you think it's, quote, very plausible, close quote, that you withdraw the rule. As one analyst put it, quote, I don't think they will pass a final rule without Powell's support, suggesting that the rules will have to be weakened, quote, to appease Powell. So, Chair Powell, I'm having trouble reconciling the statements you made last year, which you say you hold on to, statements you made when the headlines were all about 3 giant bank failures, and now your reported efforts to quietly weaken the rules that would strengthen capital standards for giant banks and prevent more bank failures. So let me just give you a chance to clarify the record here. Are you committed to finalizing
Damn,
the
that LYT
strongest
stock, that thing was
version
already
of
up like
the Basel
600%.
III capital rules this year?
I think another high and halted.
Let
My
me first
goodness.
say that we have taken and are taking many more steps to deal with the problems that revealed themselves with Silicon Valley Bank, and that's around supervision. We'll have a strong liquidity.
I appreciate that, but I'm just asking about the Basel III rules, the ones that you have been required for years now to put in place and have dragged your feet on.
The Basel III rules are not directly related. They're not the thing that is directly related to Silicon Valley Bank. As you point out, they're a longer run thing, and I would just say that we put them out for comment. We got the comments. Anybody's free to go read the comments. My view is that it will be appropriate to make material and broad changes to that before we finalize it. And in terms of, I didn't say that...
Material and broad changes to strengthen the rules?
Material and broad changes, and we're talking about what that'll mean in the end. I did not say that we would withdraw the rule. I said, there's a concept of reproposal, and I said we hadn't made a decision on that, but that if that turns out to be appropriate in the view of the Board of Governors, then that's something we would look at doing.
So everything you said a year ago about supporting the vice chair who is responsible for writing these rules?
You and I had a long colloquy.
Yes, we did.
If you read it again, it's on your website.
And I have.
You will see that I'm doing exactly what I said I would do in that colloquy.
You said you would support Vice Chair Barr to get us strong rules, and now he is putting out rules, and you're talking
Silicon
about
Valley Bank.
reproposing.
The Vice Chair for Supervision has every right to bring proposals to the board. That has happened, but as I made clear in our colloquy, you're not the comptroller of the currency. When I do monetary policy, I have one vote. There are 11 other voters. And that's the way it works. It's not different for the Vice Chair for Supervision.
You are the leader of the Fed, and when the heat was on last year, you talked a lot about getting tougher on the banks, but now the giant banks are unhappy about that, and you've gone weak-kneed on this. The American people need a leader at the Fed who has the courage to stand up to these banks and protect our financial system. Thank you, Mr. Chairman.
Warren, Senator Daines of Montana is recognized.
Chairman, thank you. Chairman Powell, thanks for being here. Good to see you. I can tell you Montanans are continuing to see the impacts across the board from inflation that's been brought on by the policies of this administration and by my colleagues across the aisle. And I commend you for the job you have done in trying to rein in inflation, and I encourage you to continue the fight despite political pressures you may face. Last time I checked, it's going to get a little more political around here between now and November. I'm also encouraged, contrary perhaps to my colleague from Massachusetts, I'm encouraged by your comments yesterday that there will be broad changes to the Basel III proposal, which, as it's currently proposed, would have significant detrimental impacts to credit cost and availability to small businesses. And lastly, I commend your answer yesterday that the Fed is not a climate agency, and considering the impact of climate change is not a factor in achieving your given mandate, congressional mandate, of maximum employment and stable prices. Mr. Chairman, I recently joined many of my colleagues in writing to you about my concerns about the long-term debt proposal that would mandate regional banks issue new long-term debt. I'm concerned that this will have a disproportionate impact on smaller regional banks because they're required to hold their long-term debt at both the parent holding company and insured depository bank levels. Could you explain how this aligns with the tailoring requirements set forth in the financial reform bill that we passed back in 2018, Senate Bill 2155?
So how the longer-term debt proposal aligns with that? Mm-hmm. So first of all, that's been out for comment on that one. The comments are in. We're reviewing it. So I don't want to say too much, but the theory of it in the first place was that those banks are not subject to the living will process to the extent that the GSIBs are. And this was sort of meant to be a middle step to make them more resolvable without imposing all of the burdens that we impose on the 8 GSIBs to have very elaborate resolution plans. So that was the thinking. I think on the calibration of it and all that, we have voluminous comments. We're looking at them, and we'll make an assessment and move forward as appropriate.
Well, thank you. And I know our smaller regional kind of banks would be happy to hear that thoughtful deliberation, Mr. Chairman. Understandably, you've had to raise interest rates to fight the fires of inflation brought on by reckless Democrat spending. However, a major side effect of that is the impact the rising rates are having on the cost of servicing the out-of-control national debt. Senator Haggerty alluded to this a bit in his questioning minutes ago. Looking at CBO reports, interest payments on our debt will increase 32% this year and will now exceed spending for the entire Defense Department. I have significant concerns, many do here in Washington, many Americans do, that we eventually reach a point where fiscal policy and monetary policy converge, meaning that the Fed would ultimately have to worry about the impact rate setting would have on government debt or even potentially the risk of a default. Chairman Powell, I know fiscal policy is not in your purview, but could you ever foresee a situation where fiscal irresponsibility snowballs to a point that the Fed would have to factor this into its decision-making?
I think we're a long way from that, and that's a real that's a terrible place to be. That's a place where some poorer emerging market countries have found themselves over the years. For the United States to get to that point, I think it's unlikely. But I do think that, and it's not our business, we should stay out of this fiscal business. But I'll say what other Fed chairs have said, which is we really need to get back to that discussion about fiscal sustainability, and both sides need to get together. The kinds of things that have to happen can only be done on a bipartisan basis. And so I really hope that we go back to a place where those discussions are happening again.
I've heard from a number of stakeholders about upcoming changes to liquidity regs, including a new ultra-short-term liquidity requirement. As with any policy decision, establishing the facts matters. It's important that financial regulators have a complete, thorough understanding of the financial environment before releasing a half-baked proposal, rule, or guidance. My question is, what do you believe is a sufficient time period that would allow your agency to accurately calibrate new sound and reasonable liquidity requirements?
That is a great question, and one we're struggling with, particularly with all the other things that are going on. We're looking at some, and this is in response to Silicon Valley Bank, we're looking at some liquidity innovations, and we're asking ourselves, what form should that take, and how long should it be out for comment, and that sort of thing. We're not ready to do that yet, but that's the question we're asking.
Follow-on question, then I'm finished, Mr. Chairman. Will you confirm that prior to the Federal Reserve issuing any new liquidity requirements, it will first conduct all necessary data collection that would allow for meaningful analysis of all potential policy options?
And please keep your answer short, Mr. Chairman.
Maybe.
No, that's very short. Thank you.
I can't, we can talk about this more, but I don't want to make a really specific commitment like that without talking to the people who are, carefully in touch with this. But that is the right thought.
Thanks, Chairman.
Thank you. Senator Fetterman from Pennsylvania is recognized. Well, he got here last.
Nope.
So, although if Senator Warnock sits down in the next 5 seconds, he's next. So, Senator Warnock, are you ready, or you want to go to War 5? You're all so generous with each other. It's... Senator Fetterman's recognized.
Okay.
All right. Senator Warnock is recognized from Georgia.
Thank you, Chairman. Banks.
Oh, what's happening?
Thank you very much, Mr. Chairman. Bank spending on buybacks is rising again. And their consumer small banking revenue has sharply increased. Interest rates are high, yet the interest being paid to depositors, ordinary working families, working people with bank accounts. Not a lot of money in Wall Street accounts remains low.
Is he just making this up?
Chairman Powell, I'm concerned that
Sounds
when
like he
banks
just got the
don't
class.
increase the interest rates on bank accounts,
It's like in interest rates.
families
What
are
you get
losing out on
charged.
dollars that could be in their pockets. Again, they don't have
Money
the
is
kind
how
of
you store
portfolios that
value.
some of the folks in this room
You know,
would have.
value.
Is that good for the
that you
economy?
possess.
And are you concerned that banks under your supervision are doing this?
Are not paying sufficient.
That's correct.
That's a question I haven't heard. Of course, they have the option of putting their money in money market funds, and banks compete with each other. But I'll be happy to look into that. I hadn't heard that concern.
Yeah, and I think it is worth taking a look at. Many lower income individuals and families, again, they don't have some of the sophisticated products yet. Money markets are available, but we saw high interest rates and that not being reflected in what depositors are able to benefit from. Could those individuals and families benefit from a high interest rate on their deposits?
Sure. And, you know, it's for a long time, we had a lot of mail from people at the Fed to the Fed saying, you know, you should raise interest rates because we're not getting anything on our checking accounts. So we solved that problem.
I don't think we're asking for that, but given the reality, the question. Yeah. So let me pivot. The monetary policy report states that while demand for housing has fallen, a strong labor market has kept prices high. That matches what I've been seeing in Georgia. Too many folks can't afford a home. According to the monetary policy report, mortgage rates were averaging around 7% last month. That's tough for lower income home buyers. Increases of just a percentage point or two can be the difference between owning a home or not. Are you concerned about this interplay between lower demand yet stubbornly high prices and what it means for folks trying to buy a home? And what do you think is driving these high prices?
So the housing market is in a very challenging situation right now. You have this longer run housing shortage, but at the same time, you've got a bunch of things that have to do with the pandemic and the inflation and our response with higher rates. So you have a shortage of homes available for sale because many people are living in homes with a very low rate mortgage that they can't afford to refinance, so they're not moving, which means the supply of regular existing homes that are for sale is historically low and very low transaction rate. That actually pushes up prices of other existing homes and also of new homes because there's just not enough supply. The builders are busy, but they're running into all kinds of supply issues still around zoning and workers and things like that. So it's quite challenging. And of course, rates are high. So people who are buying, a lot of the buyers are cash buyers or are able to actually pay without a mortgage because mortgages are expensive. I will say the first problem, the longer run problem of supply, is a longer run problem. The other problems associated with low rate mortgages and high rates and all that, those will abate as the economy normalizes and as rates normalize. But we'll still be left with a housing market nationally where there's a housing shortage.
There's no question we have a supply issue. And this issue of high prices, lack of supply, of course, disproportionately impacts some communities more than others. According to the monetary policy report, the employment rate for the Black prime age labor force, that is persons between 25 and 54 years of age, reached a historical peak in 2023. The gap between Black and white prime age employment dropped to a nearly 50-year low at around 3%. We can appreciate progress, but a 3% gap is still significant. Would you agree that it is important to continue focusing on narrowing this gap? And if so, what tools does the Federal Reserve have to do this work?
It's very important, and the single best thing we can do is get prices under control, get inflation under control, so that we can have a long expansion with the record is clear that a long expansion really gives significant benefits to people at the low end of the income spectrum because the labor market gets very tight, inflation is low, and they benefit more than anybody. So that's where we were before the pandemic, and we'd like to get back to that place.
Thank you so very much. I think there are some other legislative tools that Congress could use, and I'm happy to continue to work with the chair in the ways that we've already done to improve that rate, that difference. Thank you.
For sure. Thank you, Senator Warnock. Senator Lummis from Wyoming is recognized.
Thank you, Mr. Chairman. Welcome. It's nice to see you, Mr. Powell. My first question is about CDBCs. There's been some chatter lately on the social media that people are concerned about the Fed creating a CDBC without legislative authorization. You and I have discussed that before, and as you know, there are other means other than a CDBC that could use digital assets to create a secure and instant payment system other than a CDBC. So the question is this.
Yeah,
Do
why
you
would I
still
not be
agree
here?
that the
I
Federal
got the earnings
Reserve
previews, I'm
cannot
watching Meta.
introduce
I'm looking
a
at the long
US
term, I'm
central bank
listening.
digital currency
We chilling,
without
baby, we
congressional
chilling.
authorization?
Yes, I do.
Thank you. That's really calms people's fears, the people who are concerned that we could end up with something like the digital yuan that is used as a means of surveillance. So I think that will calm some of those discussions down. Thank you so much. My next question is about your core CPE. Now, as you know, there's a disconnect between how you measure inflation.
Yeah, I like CCJ.
And how the
I think,
American
because again, that
people
news was good the other
see
day.
inflation,
I think you either
because
sell out now,
the
you can take a
American
good
people are
2-3%
spending their money on
gain, or I
gasoline
think
and
it's going to
food
like
and
44,
rent
45.
things that have gone up
Like high
a
44s,
lot.
low 45s.
And they hear about these improvements in the economy that they're not seeing in their everyday lives. So can you explain what measures you use to evaluate inflation, and just explain to the American people why you don't factor in the things they spend money on every day, like food and gasoline?
Actually, we do. Our statutory target is inflation. It's not core inflation. So, and if you look at headline inflation over the last 12 months, that's it. That's our goal. It's 2.4%. Core inflation is actually higher than that. It's 2.8%. And the reason is that some energy and food prices have come down, and those don't count in core. So our overall legal target is headline inflation, which is, it's our best effort to capture the cost of living that people face. It's not perfect. You have to make all kinds of judgments that aren't easy. I mentioned housing earlier. How do you measure housing inflation? Lots of issues, but that's what we target. The reason we look at core, though, is that headline inflation tends to be more volatile, and it tends to be pushed around by commodity prices, which really don't relate to the overall state of the economy. Is it tight? Is it loose? So core tends to be a better predictor of overall inflation than overall inflation is. I know that's complicated, but ultimately, though, our target is headline inflation, which does include food and energy.
It's like the
Mr.
core
Chairman,
predict
I'd like
the
to
inflation better
include
than the
a
inflation
letter in
predict
the
the
record
inflation.
that
If you just look at
Senator
the core,
Tillis
you go,
and I and two Democrats
better
on this
than
committee
better.
have submitted with regard to Basel III. My question...
Without objection.
Thank you very much. My question is this. What do you think is more likely, that it will be harder for consumers to buy a house and small business to obtain a loan under Basel III, or will lending just migrate outside the banking system, which may be harder to assess because it's opaque?
I'm sorry, I didn't get your question. I apologize.
Okay. So with regard to Basel III,
Yeah.
If there are more constraints on lending activity, what is more apt to be the consequence of that? That it's harder for consumers to buy a house or a small business to get a loan, or that lending just migrates outside of the traditional banking system?
So if there were anything that constricted credit in the banking system, they would probably be both things. Probably there'd be fewer loans made, but in addition, there would be non-bank lenders that are more than happy to make that loan.
I have a chicken and the egg question here. Starting with TARP in 2008, there has been a very aggressive printing of U.S. dollars up until today, and it particularly went on hyperdrive during that 22-month period of COVID. So my question is, which comes first? Congress spending more, and so you respond by printing more money, or are they separate considerations?
I think it's hard to get my mind around that question. We don't print money to fund the deficit. That's not what happens. But when the government borrows, it issues, basically the government borrows to fund deficits is what happens.
Right. And so so that would indicate to me that you do respond, because we, in deficit spending, are creating a demand to borrow, and you're responding by.
Well, we're not making loans, though. We're not lending money to the government. We're not financing these deficits.
And so there's no chicken and the egg relationship?
There's not really, no. I'd have to think about this. I got to think about the way the plumbing. Why don't we continue this?
Yeah, I'd love to. And your thoughts earlier about fiscal sustainability and how we can work with you and bipartisan, maybe next year, to address these issues. When you say things, you have to be careful, because what you say has ripple effects outside of this building. But it would sure be nice if we could sit down with you on a bipartisan basis and have those discussions in a frank way.
Thank you, Senator Lummis. Senator
Big
Fetterman
Pop.
of Pennsylvania is recognized.
HPQ, Big Pop, check news on that.
Senator Van Hollen.
1% on one candle.
Let me start by thanking Senator Fetterman for his allowing me to
NVIDIA and
take a question.
HP
Mr. Chairman, good to
supercharged
see you.
data and generative AI on workstations.
Real wages are up, right? That's
HP
good news.
announces AI work creation
Yes, over the
station.
last couple of years,
that's
wages
with
have been
your
going
boy.
up more than inflation. Real wages broadly are
boy
up.
NVIDIA.
That means more families have more spending power in their budgets, right?
Yes.
Worker productivity is up, right?
Yes, it is.
Corporate profits are up, right?
I believe so.
And worker productivity is rising faster than corporate profits, right?
I don't know the answer to that. That may well be right.
The charts I show suggest that. So that would indicate that unless corporations decide to pocket as profits more of the gains they get from their workers' labor, that we should be able to continue to have increases in real wages. Is that right?
Grab one of the 34s for
And so
April,
it's
27
important, I
cents
think,
on
that
HP.
people recognize that these corporations are doing better than ever, and they are deciding now to essentially return the gains made through their workers' productivity, which is going up, more to shareholders. Obviously, shareholders
It's been a while, though,
are going to
since
get
I
a
don't-
profit.
There's
But
like,
the
it's been a
question
while
is
since any of
whether or
this
not
NVIDIA stuff is like
workers
moved in, just the partnership
share in
stuff.
that profit to the extent of
Ought
their
to be
worker
careful
productivity.
on that.
And as you know, we've seen a great gap over decades between rising worker productivity and real wages, and we're hoping to close that gap. Would you agree that it would be good for a more inclusive economy if worker wages tracked worker productivity increases?
I think if you include benefits, that's a significant part of that gap. I've looked into that, but not for some years. But I mean, generally speaking, people's
not a
compensation
recommendation.
should
You'll
equal-
lose money. I did the April
should be
34
over
call.
time
One of them
equal
for
to
27 cents.
increases in
It's
productivity.
a fucked up spread.
I appreciate
that first
that.
pop was just
And
big.
I also
Again, the real
wanna-
question
there's the
is, do you
trade-off
actually
on
get a
workers'
pump
wages,
off
and
of
there's
like
also
an
an
NVIDIA
issue with
partnership?
price gouging, right? So we have seen record profits. We've also seen very high prices these corporations are charging for things like groceries. Now, I listened to a little bit of exchange with the chairman.
Meta still
earlier,
and
and
Micron
of course,
and the SPY climbing back up.
I think your answer was, people will charge what consumers will pay. But it should be known that these corporations are reaping much larger profits now than they were pre-COVID, for example, right?
I mean, some of them are. I'm not super focused on individual corporate profits, but yeah, corporate profits, I gather, have been high overall.
Right. I mean, they're high for a couple reasons. One is that they're charging consumers, for example, at the grocery stores, a lot of money. And the other would be if they're not sharing the benefits of labor productivity with their employees. So I think because we've heard a lot of claims by some of our Republican
they ran up on that one Powell
colleagues
comment.
About the causes of price increases. And I think it's very important that American consumers recognize that corporations are choosing to charge them more at the grocery store or engaging in things like shrinkflation rather than in order to have more of their profits. Let me turn briefly to a letter that I sent to the Vice Chair of Supervision and some of the other federal regulators in January of this year regarding the Basel III capital requirements, and I support the overall effort on Basel.
And then
we
SPY's
did raise
trying to tick
concerns
up
with
again. We might
respect
hit
to a
another high.
specific issue, which is the harmful,
You're literally
and
2
we
points
think
off of it, 1
unnecessarily,
point off of it, 1.3.
harmful impact it could have on clean energy tax credit investments. And all of the regulators testifying that day, including the vice chairman, said they recognized this was a significant issue and hope to address it. Would you agree with that?
Yes, I would.
Thank you. Thank you, Mr. Chairman. Thank you, Senator Fetterman.
Thanks, Chairman Holland. Senator Fetterman of Pennsylvania is recognized.
Yes, I love that. All right.
I love that.
So it's great to be here with you today. Now, I don't know, maybe some people in America were talking about a cookie that was $18. And I was alarmed, and I hope we investigate that there is a cookie that cost $18. And do you believe that an anecdote on Twitter about a cookie that cost $18, is that reflective of our economy and where we're at or not?
I certainly hope not. I don't do much shopping these days, but that sounds like a pretty expensive cookie.
Yeah. And now, I believe that, that the American economy now is the envy of the world after everything right now, correct?
We are, yes, we're performing very well compared to our peer group.
Yeah, pretty great. And is it fair to say that the stock markets are all up at record highs, right?
Pretty close.
Yeah. And
close.
inflation has been pretty effectively addressed.
I don't know why I love that
Coming
answer.
down
Pretty
sharply
close.
since the middle of last year. Yes,
Yeah,
we've got a ways to go on that, but we've made a lot of progress.
And corporate profits are pretty robust. Is that fair?
I believe it is.
Wild set of questioning.
Well, we can agree that, and I don't
So is
understand
our economy
why
an $18
more people seem
cookie?
to be talking about
Let's start
a cookie
there.
that
Would you
costs
agree?
$18, but
back to the
that
cookie.
seems to be against the evidence as well. But given that, now, since things are pretty great, and we're in a really great, excuse me 1 second, place, but now I am concerned, and there's rumors going around that Basel they're going to change, and they're going to reducing the capital, and I guess I'm concerned about that because I don't know why we would want to, and also I want the record to reflect on you're much smarter than I am. But I would be concerned that things are in a really great place right now. We can all agree on that. I would be concerned to change something like that because I wouldn't want to have something, again, like what happened with SVB. And I just wanted to get your take on that.
Sure. So U.S. banks are well capitalized, and generally speaking, they're quite well capitalized. And we're not talking about reducing current capital levels at all. Really, in the Basel III endgame, capital may well go up. And what we're talking about is whether the proposal that was put out by the bank regulatory agencies, including the Fed, and which has now been the subject of quite a lot of comment, whether, what changes will be appropriate to that. That's what we're talking about. We're not talking about reducing existing capital requirements.
Oh, okay. Well, and then I also want to play off of a comment made by my colleague from Tennessee, and I actually agreed with him. And he's concerned about the deficit, about it's $1 trillion for every $100 days. So now, if the federal government had added $3.5 trillion to the deficit by extending the Trump tax cuts, would that increase or decrease inflation?
So I'm going to fall back on our long-time reluctance to comment on fiscal policy. We take your fiscal policy decisions, whatever they may be, we take them as they are, and we conduct monetary policy to achieve 2% inflation. But we don't score inflation. CBO does that. They'll make a judgment on that. But it's not
Facebook,
something
Meta's
we do
going
because,
crazy.
we're an independent agency.
That's like a $20 move, but like it was just at 500. That's at 515 now.
So I don't want to put you on the spot, but would those kind of tax cuts, would that help addressing inflation or inflame inflation?
I don't know what the effects would be on inflation. I do know, broadly speaking, we need to get to a place where revenues and spending are better aligned, and I think everybody knows that. And I think we used to talk about this a lot 10 years ago. We're not talking about it so much anymore. That's understandable. The pandemic was a special thing, but I do think it would be great to get back to that on a bipartisan basis.
Okay. Well, I have about 30 seconds left. I just want to go on the record. I think you've done a really great job. And I think our economy, and I do agree that it is the envy of the world as well. And I'm confused that more people are talking about cookies or McDonald's meals and those kinds of a thing. It's not reflective on the strength of this as well, too. And I just want to thank you for your service.
Thank you, sir.
Mr. Chairman.
Thank you, Senator Fetterman. That's the last questioner, and thanks for your generosity in yielding to colleagues who got here before, whom you got here before.
Oh, that's
I
it.
said that right. Thank you, Chair Powell, for joining us today.
I think that's over.
Every 6 months, and sometimes more often, I look forward to working with you, continuing to work with you to strengthen our economy. Senators who wish to submit questions for the hearing record are due 1 week from today, March 14th. To Chair Powell, please submit responses to those questions for the record no more than 45 days from the day you receive them. Thank you again for your testimony.
Thank you, Mr. Chairman.
Adjourned. Court is adjourned. Goodbye, pal. That's it. They just get up and leave. Well, that's it, man. He didn't say, honestly, there was one thing he said about being like confident or more comfortable about rate cuts here, and that did cause a little bit of a pop. The market went up, we're slightly higher, but that caused the pop on the bonds. The bonds came back down. Other than that, he did not say much. It did not stop the market, though, from going up. More chip names, again, like Intel, Micron from the morning, they started going crazy. We got a little news with HPQ. NVIDIA hit like 920. Meta, we were just talking about that. That just hit 516, but we are like, 30 minutes off of Euro close? NASDAQ up 1.3, SPY up 0.9, Dow Jones 0.37, and Russell 0.77. You have now recovered all of the losses from the last 2 days and set another new high. You're literally like a point or two off of another high. I forgot about that. And Qualcomm going up. But yeah, Chad, honestly, today it's not much. I think yesterday was the relief. Today was more relief, did good. You even had the ECB. People, again, a little bit of currency moves off of Japan, but this is all the pregame for tomorrow. Remember, we have the non-farms tomorrow, but now we did exactly what we did a couple of days ago. So, I'm kind of like, oh, wow, this is a crazy move. But then I, pull the chart out, and I'm like, wait a minute. We just did this. We did this exact same thing of, where was it? No, I'm looking at that. Right here. So, remember, about, 2 weeks ago, we hit 50-50, and then we sold off to 40-90. Then we came back up to right below 50-50. Now this time we went higher. Then we sold off, and then we ended up going higher to 5100. So literally we hit 5150, sold off to 50-50. Not as much as that one, and then you just bounce right back up. But this time we're higher. So kind of surprising, not really. But then it does set up for tomorrow. So even then, whether we end up way higher or way lower by the end of today, I mean, that's just going to be the setup for tomorrow. And the non-farms, Chattadonia. So that's where we're at now. Again, just past the euro close. I don't think I did anything. I didn't make, only trade I made that HP. That one got clapped a little bit. Again, I thought it was going to be bigger news than the NVIDIA stuff, but I figured with some of the AI hype, we were right in those Intels. Surprisingly, those are still down. The Pfizers were good up until today. And then that's it. Long term, still liking it. Long term's like this whole entire week. Play that Airbnb Kennedy. Kennedy said the F word. He said pussy. I don't know why I differentiate between the two and why I censor one or not, but his was pretty aggressive, bro. He literally asked Powell about a quote involving the F word, and he said it straight up to Powell. I was like, man, that's nuts. If I ever got to sit down with Powell and even if I could read Powell any story and I read him that, man, yeah. And then he went 6 minutes reading just aggressive shit and then ran out of time. And then the chair was like, yo, man, you going to ask a question? And he's like, well, you spoke for 6 minutes, not 5. I don't know why you're giving me shit, Peter Pan. Let me talk. Fine, I'll go ahead. I'll ask my question. And then he asked the question about the FDIC, how if they have all this weird stuff going on, how they're going to manage any regulation and changes, I think, in Basel III. It was good, though. It was good. Where's Apple? Elizabeth Warren. I forgot what she said. It was something. She said something magnificent. But there was only literally the only highlight moment out of all of that was legit when the bonds popped. I could see if I could get the quote. You even had Fed Mester speak, but we kind of ignored that. Where was it? Not MBS. He said something. Something about confidence in cutting rates, but the market actually got a pop off. I was surprised. Yeah, he said we're not far from confidence to rate cut. It will take a while for comfort to sustainably at 2. He says, I think we're in the right place. Federal home loan banks are ahead of us in technology. All banks need to be in touch with the discount window. Yeah, it was around then. That's when you had the pop. And then even gold went up too. I think gold is still elevated. Gold hit another high today. I'm down on that short. Yeah, bro, Meta just went insane. I kind of wish we had those options on the breakout. That's nuts because it wasn't moving like this earlier. I guess it kind of was 470 to 480. But that was $10 in a day or two, and then it'd climb up. But, dude, $22 in a day at all-time highs. So, Meta broke out. NVIDIA broke out. Now Meta, even TSM, they're at 52-week highs too. Biden had proposed $5,000 credit for first-time home buyers. All right, Bidenius. Let's go. Throw in some weed news. Weed got clapped. There was even a Schumer saying something, but it faded all of that. So, I don't know. Maybe 5,000 credit in an 8th. Come on, Biden. You got to win this election. November. Yeah, KR, those options did good. Anywhere from 100 to 150. I think they're holding at 116 right now. Celsius is up too. That one's going to be interesting because we're about to be in the money, and then they expire next week, but we ghetto spreaded those 95s. So we might be in the money while the other ones expire. There is shroom stocks, MNMD. They actually had, I don't know, was it breakthrough designation today, I think? They had data, they're up 55%. They even rocketed up there at one point to 55. Or to 11. Yeah, Biden had proposed $5,000 credit for first-time home buyers. He said if Biden threw in an 8th, he'd win. Would you vote for Biden? Would you vote for Biden if he gave you free weed for a year and paid off your student loan? I don't know. I'm just doing some political polling. Never. What if he matched your? What if he matched your? Yeah. See, someone said yes. Someone's like, man, you got me, Josh. Free weed for a year. Someone said y'all capping. All right. What if Biden? What about Trump too? Either or. This could be for whichever candidate you don't like. Right? Like, let's say Biden. What if Trump? Like, let's say you don't like Trump, but he offered you weed for a year. Would you vote for Trump? Is it unlimited for a year? Yeah, for unlimited for a year. You just have to show them. You have to, like, get a I voted for Biden or Trump card and get your picture on it. And then you just got to take that in every time. All right, what if they matched your long-term deposit? So, like, what if Biden was like, yeah, come on. You deposited $500 a month. I'll match that for a year. Yeah. Yes, I see you've been saving money because the stock market's terrific. I'm going to match that. You give me your vote. I'm going to make sure your long-term grows. Then I'm going to cut the taxes. And then we're going to make the market go even higher. Yeah, the market went up during Biden. But what went up? Come on, think about it. It'll go up faster, better. Twitter, I'll make it tweet. So vote for me. Let me get your vote. We need to defeat democracy. Is that what I meant? The people trying to stop democracy. Damn it. Yeah, you try to defeat democracy. Ah, come on. Where do I match your long term? You voting for me or what? Come on, you little prick. Vote. You got till November. Bro, TSM's still wildin'. And then I love how every single one of these days, Apple has not been moving. So buying votes is okay now? Oh, you want to act like nobody's been buying votes, huh? Yeah, we live in them. As long as you do it politically correct, it's fine. They gave out stimulus checks. Donald Trump released Kodak Black from prison. What are you saying? Man, this has been it. Obama was giving out cell phones. You don't remember the Obama phone? No? Huh? Yeah. Yeah. I rest my case. Dude, TSM is going nuts. Tesla and Apple getting no love. Again, Meta's about to go to 520, but TSM's pretty ridiculous. TSM hasn't had a day like this in a while. Again, they were just trailing behind, bro. TSM's actually up 50% in a very short amount of time. CNBC reported on limited hiring pause, cites internal memo. For who? CNBC? Check Micron, new all-time high, but over 100 goes crazy. I was going to make a play on it, but I felt like they were already up a little bit. They had good news. They got an upgrade today, too. They've gotten like 3 or 4 major upgrades in the last couple of days. I feel you on that. I'm going to wait till the options pull back, but it is quite tempting. Is that UAL for that headline? Bro, Meta 519.24. It's the next over 100 gnarly blue sky breakout. Have they not been above 100? Or I thought they were kind of recovering. Yeah. Oh, wait a minute, though. That is going to be an all-time high for them. Yeah, that could get pretty nutty. The options were up, though. Even in the morning when it was only up I think 1%. You still had quite the prem on the option. Holding yourself from buying stocks. Let the long-term deposit guide you. I mean, it's kind of crazy, though, the amount of names that were, I don't want to call them FOMO names because it's just been the same ones. But, again, Apple and Google didn't get involved. But, dude, Meta was just pretty, $100 lower. Again, NVIDIA, Like, remember NVIDIA? Like, even we made a great earnings play off of that. I made some money and I sold out, but damn, it's still even going up there on NVIDIA. Like, it's pretty crazy the type of move that we're getting. Yeah, you have Marvel earnings. I have the earnings previews. What time is it? It's only 9:19. Still mad early. Again, we're hitting all-time highs. You're about to do it again. I don't even think you're done. You're 1 point off all-time highs. And this is all very, very early. And then NASDAQ is the leader today. Again, you have a lot of tech involved. Once again, like Apple's just like right on the cusp, like doing something, not doing something. Powell, he had one bullish comment, but if anything, I mean, the market was bullish without Powell. I would say Powell was more so a non-event, kind of like yesterday. People did like that he was kind of dragging his feet on Basel III, meaning less restrictions on banks. And, yo, what is this? What's this Al-Qaeda talk you guys have in your damn Twitch over here, man? I'm going to have to time you out, man. Just give you a little break. All right, man? That's like your second threat on the Wall Street exchange. That's kind of, you need to calm down. Give you 5 minutes in the corner. That was weird. That was on Twitch, man. That was on Twitch. I don't know what to tell you, man. I think he drops by every few months to troll. No, I think he's been here every day. He's been very aggressive. But that one, I think, just give him a breather. Just give him a breather. That's why I left the kids' table. Damn, they were just saying yesterday Twitch needed some active mods. Well, hey, man, there's a lot going on in between Chadadonia. It's okay. Just hug it out. Hug it out. Yeah, get a long-term. Long-term helps with all emotions. Telling you, you'll learn to love the market with the long-term. Even if you're like, wow. I'm like, today I'm kind of shocked we hit another all-time high. It was kind of gentle, but then again, like we did the same exact move 2 weeks ago. But, get a long-term, man. Long-term. It does help with emotions. I'm telling you. Some of you, again, just every month that goes on, you get more time under the belt. But I think some of the like guys who used to go crazy in the Twitch, I think having a long term has helped you out. Again, I remember a lot like the Twitch would freak out when the market would go down and they wanted to sell it. And now I want to buy it. I want to buy it all. But like, again, the market has just been a nutty melt up here. Again, like, dude, looking at Meta's up almost like 100% or 50% from the beginning of the year. Like, there's a lot of stocks that have just moved crazy in like, 60 days? It's kind of nuts. So I could see what's getting people excited and frustrated at the same time. But you get a long term, you have nothing to worry about. You get the long term, even if you want to make a trade, you don't make a trade, the market melts up, no matter what happens, you will always be good. You will get mad, though, if the market does go down and you start your long term. That's like that's the other side of the coin. But then again, we'll deal with it when we get there. Long term is beautiful, man. I love it. I love the long term. You have 20% in Meta and 5% in NVIDIA. You're getting nervous. Why? Just start moving that money into dividends. You don't have to sell out. Let those keep growing. Because like I'm saying, man, even if you had big gains on NVIDIA and Meta at the beginning of the year, if you sold out like 30 days ago, you missed out on another 50% or something. It's something stupid. But again, for the long term, like I'm glad. Like even IRM, that thing is growing in the long term. For even like the smaller account, like I'm down. Like you hold those and you just balance out. If you have more deposits, my strategy has always been if something starts running, let it run, and then buy everything else. HPQ, nah, I don't know, man. I said it from the beginning. I said it might become a dud. So we'll find out. But like partnership news hasn't got things moving. They're just at all-time highs, and they're related with all the chip hype stuff in NVIDIA, but that one's hard to say. You get mad when my long-term goes up? I don't know. I think you just need a hug or something, dog. You need to relax. There's no reason to get mad if your long term goes up, even if it is disconnected from the world. That's like a heavy emotional investment. I'll give you a hug. You can't get mad that the long term. You gotta. I don't know. To each his own. I still have my Mara. I'm getting clobbered on it. I think I'm down like $900. Thanks, Brian. Still love Brian, but yeah, I'm killed on that one. But nah, man, the long term. Well, then again, I mean, if long term, if it's still giving and eliciting emotional reactions, I mean, at one point you're gonna have to kind of decide how emotionally attached you want to be to what's going on in the world, the market, your money. Because at that point, it is I feel like it's more of it's a deeper commitment. You know, if it's beyond just like good is like green is good, red is bad. You know what I'm saying? Or like, oh, like I don't understand it. I'm frustrated because I'm understanding. But at one point, you know, you do got to determine what your connection amount will be to all of this. Just dollar cost average I like how coin is up, but I've never really liked the miners. I like coin, bro. Coin, we are down, I think, 2% in the long term. That's crazy to me. That's why I'm like, dude, even then, even with names go green, when names go red, this is even a good point for the reverse side. Because, like, dude, this thing was down a lot, but now we're going to just have that $4,000 in value. If coin goes crazy, that's just going to pad the stats on whatever. SLS News, pop 10%. Celis Life Science, no, I have no idea. Looks like a small cap bio. A lot of those have been going crazy lately. I only have 16 shares of coin. You blew up your account last year and you're struggling to get over with it. Did you build a long term afterwards, and like what has been like the budget moving forward? You know, you're still here, so that's good. But if you like, you know, I guess what do you mean struggling to get over it? You might keep thinking about it. It all depends on how it is. You know, the first big loss, depending on how often you've done that. But at the end of the day, I think the plan always moving forward is budget and long term. Those two things, and hopefully learning kind of keeps you from making the same, or losing keeps you from making the same mistake. That's why usually, too, you know, a blown up account usually leads to an appreciation for the long term, because then you're like, wow, if I just kept it in little by little, slowly and surely, it would be there versus not. Mester considering raising long-term Fed funds rate forecast? Or? Soul. Yeah, it's weird. I don't know, Mester, I thought she was done speaking. Did Powell talk? Yes. You already had Pow. Rose, and then SPY was near the high and then kind of came down. Meta is still ripping faces off. My goodness. All right. KR. I'm kind of down to ride out for a little bit, but they didn't go up as much. They're up 140 now. But I do like how they've moved. They did good. They moved a little bit outside expectations, but I feel like they got a little bit more juice in them. And then where are we? We're like 20 cents, 15 cents from being in the money. But it just doesn't have that much time on it. That's the only problem. It's literally a weekly. But there's a lot. I got Mara shares. And then Chad What time is it? 9:30. Let's do some push-ups, baby. You know, we had Powell for a lot longer yesterday. But ladies and gentlemen, boys and girls, we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the Nightly Watchlist and main channel. First link for the Scream Alerts boot camp and real estate course. But ladies and gentlemen, we've been here for 3.5 hours. We got 3.5 hours left to go. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. Can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 2, do 1. Can't do 1. Get on your knees, do a push-up, plank the worm, anything. But get the body moving. Then, optometrist recommendations, stare at object 10, 20, 30 feet away. Go bling, 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 bling. Bling, 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 bling. Oh, feels good. Feels good. Relax those pretty little eyeballs. Drop the shoulders. Okay, relax the core. Flex your core. You know, tuck the hips in, chest to the sun, but drop the shoulders. Fix that trauma traps. Okay, you know that you're holding a lot of your problems in your shoulders. So please drop those shoulders. Relax a little bit. It's bright and early here in the morning. Whether you are worried about the market, frustrated, happy, excited, you bought NVIDIA, you didn't, you shorted it, it don't matter. All of that trauma and excitement is in your shoulders. So please relax them, okay? Relax the shoulders for a little bit. Chest to the sun, flex the core, tuck the hips in. There you go. Legs in front of you, not wrapped behind your computer chair. Okay, you are not riding a dolphin. What are you doing? You are not impersonating a seahorse. So let's go. Legs in front of you, baby boy. Come on, there you go. You look good. You look good with good posture. Amen. Then relax the jaw. Go. Breathe in really deep. Go. Breathe out with your tongue out. Do the dragon breath. Go. Oh. Feels good? Feels good. There he goes. And then Chattadonia. That's it, man. That's it. You did it. You're going to like the way you sit. I guarantee it. There you go, baby. Chad's Warehouse. All right, man. Get the body moving. JPM dumping. Or like real dump or just like you know, just like big on the day. Kind of down 1.5. It looked pretty ugly. Gave up last 2 days of gains. Kind of is. Very interesting. KRE new low. Oh. Bro, I did it again. I snapped the other snap. These things have to be just degrading. There's no way I'm this buff. Because this is the other half that already snapped. Oh, order on. These are the same ones. I've had these for a minute. So I'm like, maybe they're just degrading or something. Yeah, it's the same one. It's the other half of the snapped one. I didn't get a new one because I'm using the same extra strength. Good, bro. I'm just getting ripped. What do you want me to do? What do you want me to do? End phase on the high. Oh. There it is. All right, need to do the wall stretch. We gotta hit the wall stretch. Is that on there? BRB. Oh. Echo. You guys still hear me? I'm here. I'm here. I'm just stretching. I hope you're stretching. Get your body moving. It's good for you, Chad. It's good for you. All right, now I got to do a little bit of balancing. A little bit of balance and we good. A little bit of balance and we good. All right. Still holding Vanny. Yeah, we talked about that. I'm either going to make it average down coming into tomorrow. So either today or I'm going to punt. I just want to see if any of the biotechs. I looked up them. They don't have any catalysts, though. They're still just trading lower from the private placement. But, yeah, I am still in them. But there was good GLP-1 stuff today. And I'm balancing on 1 foot now. Disney sub 110. Okta's been on the high. Amazon's going up too. Whoa. That was not real. That was not real. That looked real for a second, but that was not real. That was a crazy-ass candle. The lowest you've seen SQQ. MU could be good. Again, they've gotten a lot of upgrades. They had news. Didn't they get some of that government money too? So they've had a lot of good things recently. I feel like they could, but their options are just a little expensive. And then again, it's just sitting at all-time highs. That is the only problem. Yeah, BBAI earnings. I have a weird preview for that one. I have an analyst thing on BBAI. I didn't even know it was covered by analyst. Amazon, yeah, Amazon's still on the high ticker. That one's going up. It's going up quite well. All right. Our balancing is done. We did it, Chad. Still very early, though. And again, today was, it started off as just like a little bit more relief, but started just getting a little crazier. And then again, you hit a new all-time high. You're 3 points off. You just hit one like 10, 20 minutes ago. So VVLC, bonds down. Again, banks sold off. How long KR? I don't know. It's up to you, though. You could sell. You're close to the money. So you're 15 cents from the money, 10 cents on Kroger. You could either sell it now, take 150, or you hold. It just depends on your balance. Your past earnings plays, have you hit? Do you need the cash or not? Are you willing to push it? It's going to be a weekly, so that's about it. The watch list. No, I didn't post the watch list yesterday. I got caught up with a bunch of shit. I was not able to post it. I had even I was in the car, bro, and I filmed a video and I was going to post it. But even then, I got home too late. Everything took too much time. It's okay. I missed you too. Don't worry. Today, we should be getting a live watch list today. Is HPQ moving? Mara. I think it's just going to just wait till the music stops, a.k.a. crypto. Otherwise, I think it's going to move it there. I don't really like the miners. I have a shares I'm flipping from the earnings that I like, but that's about it. But I do think it's just going to be good for volatility with crypto. Now, breaking out, Medtronic turns negative following a recall of tubing devices. Yeah, they were green earlier. Now, they were running earlier. They're just into the highs. High ticker's like 50-50. Let me even get you guys the breakdown. I don't think there was news on Meta. Right now, Dow Jones, you have 14 names red, 16 in the green. NASDAQ 100, 23 in the red, 78 in the green. And then S&P 500, 146 in the red, 355 in the green. So a lot of things are still holding up, like very well. Netflix on the high. I think Meta was just literally all-time high breakout. I think it was just going crazy. Because now I don't even know where it should end up. I even think it kind of lifted up Snap, and there is that like TikTok ban thing. They're doing something in the government today. I think Biden might discuss it. Is it happening right now? Live in 80 minutes. Yeah, so there is something on it. They are trying to move. Again, Snap's even higher from the day that we flipped that news when we got it. GH, Paycom, or was it PaySafe? They had earnings. I think they ended up doing good. Softian, CLSK, Clear. Isn't that a minor? Clean Spark, Mara still in the red. Coin below 240. Spy's getting a cheek lay right now. Yeah, Google killed it. Microsoft did good too, I'm pretty sure. The next question is Apple. You guys realize Apple has only just gone down and has now just been like, dude, ever since Monday, even last week though, but it's been a long time we've had like a Apple contribution on the market. Apple. NVIDIA hit at 920 today. Remember, we were just talking about hitting 1,000 yesterday. It wasn't even at 900. And then now you just, at one point, I mean, you were $80 away in one day. I mean, can't say it's impossible. But NVIDIA is coming down. So is the SPY. If we play the Rivian R2 reveal, what is the R2? They did get a, what's it called? They got an upgrade today. I think Tesla got a downgrade. Rivian got an upgrade. Hamas vows to continue talks to release Israeli hostages and halt war. I think Broadcom earnings are going to be big, but unfortunately, Broadcom moved up another 3%. So it's going to be expensive. We'll see how it ends up playing out, but it's going to be difficult. The new SUV R2. But is it like smaller? The EV company's more affordable SUV is here. $47,000. SUV. Nice. I've never seen a Rivian event. I'm kind of down. When does that happen? We did not cover earnings previews yet. No. No. It's still very early. It's very, very early in the day. I mean, we just had Euro close. Airbnb, 165. We are proud of you, Airbnb. Why won't this work? There you go. Noon my time. Oh, wow, that's late. Or you're saying 10, 11, 12. Well, now I'm getting multiple different times. $10 a.m. Pacific. So that's in like 15 minutes. I'm down. We could take a look. That could be fun. That'll be interesting. Rivian. Then Airbnb breaking out again. It hit 52-week highs yesterday, but through 165 is a big deal. Next level is 168. If you get above there, we are back into 170s and 172. You are 172, then 178 to 180, my friends. So it's a very big day. He stayed home. Airbnb moving up, man. It's great to witness. Where's he at in the long term? It sucks because, like, on the big account, I don't think we're up as much on BNB. Where is it? Yeah, we're only up like 6.5%, but on the other accounts, we're up like 10 to 12. So very good. Then there's something on Tuesday. Yeah, there is a CPI on Tuesday. So very, very big on Tuesday, Habibi. So tomorrow, non-farms, that's our first big event, which we've been waiting for all week. And then to start off next week on Tuesday, you will be getting the CPI. Price target for selling Airbnb. Oh, come on, man. Come on, man. You know that's cold, man. You know I love Airbnb. I ain't gonna talk about it like that. Nah, man, I don't plan on selling Airbnb. I hope I could give it to my future child. I don't have a child, but if I did, I would give them Airbnb stock. And they would either thank me for it or they'll be like, my dad is an idiot. So either way, I look forward to that day. But till then, I'm going to hold it in this portfolio. I am waiting to sell covered calls, though, but like I told you guys, I'm getting kind of greedy. I want like a really, really high strike price. They got 240s now for 1,600. $240 for 25, 2,600. That's not bad, I guess. Biden proposes to increase stock buyback tax from 1% to 4%. Ooh. You never reinvested profit. I know I should have. I did for a couple of months, and then I just started buying other stuff. But the Airbnb has been great. I don't know. I kind of wanted the 240s. I want a higher strike price on Airbnb. I mean, what would that give us? 240 minus 155, $85 a share. Times 120, be $10,000. Be under, it'd be like 50%. But then we would get back. You get back more than 12% up front. Yeah, I don't know. I'm kind of down, though. 240. That'd be a new all-time high for Airbnb. You could get 15 shares with the premium. Well, I might even put this, if I did do it, that would help a lot with my yield goal. Technically, we would be yielding way more, but then I might just put that shit into Pfizer. I'm kind of down with it. I don't know. I want to wait a little, but we could always roll over. But I kind of want to sell the 240 for December 2-year contract. The Januaries are a little better, but you'd only get back like 1,700, which isn't bad. And that's, I guess, you leave a little bit of time on the table. Baba just fluctuates. That or PayPal add to some of the growth. Where is Baba? Yeah, because Baba, I was like green on it yesterday. Now I'm down on it. So Baba actually hasn't done much for us. The ghetto dividend. Well, I don't know if I would roll it into more Airbnb shares. I'll just take the cash and probably go buy a dividend stock. That way we could collect yield on the Airbnb shares. And then that way we're also finding a way to increase our yearly dividends. 240, that might hit. I could always roll over out of it. I kind of want a higher strike price, though. Sadly, I kind of want like a 270, 280. I don't know if I'm getting too aggressive. But the longer I wait and it goes up, the better. But then like the Snapchat, if that ever turns, like I could have made a lot of money off the Snapchat cover calls, but no, and then now it's down. Redfin launches new AI tool for home shoppers to answer questions about specific homes and areas. You could always buy back the covered call. I mean, usually I just roll over out of them. And then, like, you know, eventually, especially if the stock is doing good, you'll find a way out. Oil's going up. Oil was kind of moving today. Yeah, oil's trying to make a move back to 80 again. Energy it's holding the 80 well, but it hasn't gone crazy above 80, even though we've tempted it a couple of times. Not Redfin. What was it? Airbnb. You did miss Kennedy. It was good. And then now we are in the money on Kroger. So those are up 150%. Surprised they didn't move that much. All things considered. Already up 10, 15. Yeah, last time it did get around here, it got real jumpy. Maybe we do wait for 170. I'll wait for 170 for covered calls. I want to do them though, because like I said, that's a big amount of money you could get back. You could buy Tesla. No, I'll probably take the cash. I'll either buy more Airbnb or I'll most likely just buy Altria or Pfizer. But since I already bought Altria and they went up, Pfizer went up and then came back down a little bit. So I'm thinking we could get Pfizer a little cheaper, but still kind of elevated. But then Altria went up a lot since we bought it. Again, I got in Altria at like $39.50. So I had like 2 extra days. Sweden did join NATO today, yes. And oil right below 80. That just had a pop. Where's gold? I'm still down on the gold. Gold's at 21.65. Marvel gas on the high. And LYV GASS. No idea what this is. Stealth gas. PayPal. Mattel. Kroger, I think they beat and then they guided up. We read it in the morning. I'm pretty sure that was the headline. Kroger beat and then guided above, yeah. Will you finish the PHILO story today? I finished the story. The part that you need to figure out, I left up to you. On the covered call, we wouldn't be risking anything on the Airbnb. If you did the covered call now, you would just guarantee you a purchase price of $240 a share, which would be like 10 grand on every 100 shares. And then there'd be like 50, 60% on where we bought it from. And then you would collect, if you did it for December, you'd collect $2,700. If you did it for January, you would get $1,700. Which is pretty crazy. You could still sell, yeah, if depending on what happens. But you know, once you marry the stock to the covered call, I mean, they're gonna move around in tandem. So you could sell, like, if the stock goes up, that covered call, you're gonna lose money on it. So you could get out whenever you want, but it'll be dependent. But like technically, the deal that you're making, this is how I just look at my covered calls as just whatever the deal is. Like, what is the break even? What am I agreeing to sell? It's either going to happen or it doesn't. If you're okay with that happening at that price and it pays a good premium, then there you go. But it pays out 12%. So I could get like literally 12% of my position. I could get that up front right now by selling the covered call. But then again, if that's only pricing in 12% for a year or so, it's technically pricing in like 60%. You know, the stock can move another 10, 20% just in a week. Am I going to invest in VR gear? What do you mean? Like, am I going to get one to use, or like, am I going to make like a business selling VR headsets, or like, but for now, no, I don't plan on any of them. I don't have a headset. I asked my mom if she wanted an Apple Vision. She laughed at me. I thought it'd be funny, but she thought it was hilarious. My foreign mom, she thought that was one of my best jokes. When I told her, I was like, I'm going to get you an Apple Vision, she started cracking up. She said, the one on your face? I said, yeah. And she started laughing. So, but for now, no. For now, no. I don't have any plans. Are they in stock? Like, if I wanted to go buy an Apple Vision, can I go buy one today? Like, if I went to the Apple store, would that be something I could do? Is that available? You could? Like, so they're in stock? No way. Well, yeah, I was gonna say, what if I wanted to like return it? It says you could pick up today. So what if I wanted to buy it, try it out, and then return it? Does anybody work at the Apple Store? "14 days to return." I do. You work at the Apple Store? Am I allowed to? Most of the chat says yeah. A restocking fee. I want to try one. It's bad. I'm going to go in. I'll ask the guy and tell him. I'll be like, hey, I want to buy it to use it, and then I want to return it. Is that okay? If he says, yeah, I'm going to do it. But you can't open it? What do you mean I'm... You guys got like an option contract or no? You don't do options on that? Okay, damn. It's starting. We're holding. I'm surprised. Today feels like a Friday. Just how the market's kind of moving. That's BNB. So we'll wait on those covered calls. But again, near all-time highs. It's kind of in melt-up mode. I guess just like yesterday, too. You're one candle away. Gold breaking out. My goodness. So gold's up almost another 1% from yesterday. Do I fly with Spirit Airlines? I have before. I don't discriminate, you know. You got a good deal. I'm down. Team on the high. Marvel Rivian event starting. I'm down to take a look at this. I want to see this truck. And I need to go pee, but I don't know how that'll work.
My supporters that are here, it's like moving. I can feel it in my soul right now. So
what
thank
is
you
this
guys.
text in the background?
We've got a lot
That
to talk
slide
about.
looks like a meme.
You know, I started Rivian, and really, at the core of it, every decision we make, the products, the strategy, what we're building, how we go about building our business, the way we structure our teams, the way we think about our culture, has been built around this idea of keeping the world adventurous forever. And so much of that ties into this world of forever, or into this word of forever. And forever is an intimidating word. It's a word that means
forever.
So many things, it's hard to even capture what that represents. And when we look at that word, when we think about what we're building, what we're creating, it extends beyond us. It extends beyond what we're doing today, what we're doing this month. And we often say we're building a world thinking about our kids, kids, kids. And it's our kids, 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 that mindset that informs how we make product decisions. And it informs, really importantly,
We're thinking about your kids,
how we
kids,
make
kids. That's
the
why we
products what they
included
are.
a barbecue underneath
So today,
the seat.
you know, when we think
Yes.
about that and we look at what we're going to be showing you, just recognize the thoughtfulness that thousands and thousands of decisions have gone into those products. And to start that, we developed our R1 product line really as our handshake with the world. These are products that redefined what a truck was, what an SUV was, and enabled a level of performance, capability, everyday usability that really never before been seen. And that was built on this deep desire, this really deep desire to make products that not only enabled the types of adventures we want to take photographs of, the kinds of things we want to remember 20 years from now, 100 years from now, but also inspire those things. Inspire you to say yes to things that scare you, to explore, to do new things. And that desire to explore feeds into all the things that we drive as a business. And hopefully you see that in our future products and what's to come. Now, beyond just the desire to explore, we also need to make sure that these products are safe. And a huge part of what we're building has been built around safety. In the R1 products, every decision that had to do with structure or the way the vehicle was packaged was laddering into the goal of making these not only a safe vehicle, but the safest truck and the safest SUV in the world. So the R1T and the R1S achieved that. Top Safety Pick Plus, the highest safety rating on the Insurance Institute for Highway Safety, 5-star standard, and they're incredible. Now, linked to all this is a technology platform we created. We built software, we built electronics, we designed entirely in-house a network architecture that allows our vehicles to get better and better over time. And I see a lot of our owners out here, and I know one of the things that's most followed is what's the next set of features to drop? And we get to make improvements to the software, we get to add new features. I get tons of feedback. You know, my dad will send me, whether he likes it or not, sometimes very strongly worded. But we love the feedback. We love the opportunity to be really integral and connected to our community as we're making all these decisions. You know, we think about our community, we think about our owners. It's such a powerful part of what we're building. When I started, you know, I can remember back, it was, we had all these things we wrote. We thought about what do we want to become as a company? And one of the things that inspired us so deeply was to say, can we create something that inspires people? And inspires us to behave differently. Inspires us to show up as our best self. And that was embodied in this goal of creating a movement or a community of users, a community of customers that just loved the product and had an orientation and optimism around the future that was so core to who we are. And there's so many ways to look at this. There's so many stories. I get lots of emails. I love sharing with the team. Emails from customers who are doing really amazing things. So here's one that just embodies it beautifully. This is Milo. Imagine you're driving down the highway. You see a semi-truck in a ditch. And you not only think to yourself, I'm going to pull over and see if they're all right, I'm going to try to pull them out of the ditch. And so much in this embodies Rivian. It's that orientation to help, but it's also the fact that the vehicle can pull a semi out of a ditch. And so I used to get asked the question, can a Rivian vehicle tow? And I'd always jokingly say, it can tow a house across the street. Just how far do you want to tow it? But you know, beyond the products and beyond what we're creating in the technology and the software and propulsion and towing capability, is really the other element of how our brand manifests, which is our spaces. And we're sitting in one today. This is normally a movie theater. It doesn't look like one right now, but normally there'd be seats right here. And this is an example of the types of spaces we want to create as a company. Spaces that are active elements of the community, pull people in, drive discussion, enable the types of dialogue around what's coming in terms of electrification, what we have to drive in terms of change. And this is one of many spaces, and we're building more of these, and we have them across the US, and each one of these is special. Each one has some unique link to the community that it's in. And you know, these are a chance for us to physically manifest our brand in a very unique way. But beyond the spaces like this, we also have a whole network of service infrastructure we've created. And when we think about service, you know, your mind immediately goes to the idea of going to a physical service location, but actually more than half of our service is done with our mobile service fleet. So we have over 500 mobile service trucks, our R1T, and mobile service vans that actually show up at your house, show up at your work, and we can fix your vehicle there. But in addition to that, for things that we can't fix in your driveway or fix in a parking lot at your office, we do have a physical service infrastructure. We have 54 service locations today. These are rapidly ramping up. And these are beautiful spaces, enthusiastic team members, and we've just started doing test drives out of these to get more people exposure, not just to Rivian, but importantly to electrification and what it feels like to drive an electric vehicle, something that really completely changes the way you think about the way a car operates. So we wouldn't be talking about electric vehicles and this massive transition We have to move 1.5 billion vehicles in our global fleet over the next, hopefully, few years, maybe a couple of decades, to electric without thinking about charging infrastructure. And one of the elements of charging that we often don't fully appreciate is most of it happens at home. More than 90% of your charging is happening actually in your garage. But you do need to go point to point. You need to go from Washington, D.C. to New York, from San Francisco to L.A. Or if you don't have a garage, you need a way to charge your vehicles. So we're also building a high-speed charging network. We call it a Rivian Adventure Network. It's rapidly being built out. Within a few years, we'll have 600 of these charging locations. And it'll be an open network. So it'll be Rivian vehicles as well as non-Rivian vehicles. And beyond that, we, of course, integrate across the other third-party platforms. And importantly, in fact, this month, our vehicles will be able to access the Tesla Supercharger network. And that's for existing customers. But I think we're going to see a big shift in the mosaic of charging solutions. And
you can reserve it already. I don't know if they had a glitch here.
Is really key for that.
But they're taking deposits already.
$100. Empowering this transition.
But they don't have like the car, but you can reserve the R2 right now.
We can think about the end vehicle,
that charging
the use of that
pretty
vehicle,
good.
as driving this change, driving a downstream demand shift from, of course, gasoline or diesel to electric. But we also need to create the upstream supply of renewable energy. And this is an area we've been really focused on, and we're committed to building out over 7 billion miles of renewable energy by 2030. And so those projects are already underway, and the downstream demand that all of our customers, all of our owners collectively represent, enable us to create this new upstream supply of renewable energy. So, we're here to talk about what's next. We're here to talk about how all this brings us to our next set of products, and really how we get a lot more people into our products, into our brand. And how do we make Rivian more accessible to a lot more people? So with that, let me introduce you to R2.
A world where people go to the mall every day. Okay, how do I get to the store? Okay, I think I remember. Oh, good thing my child is back there with his iPad. That's good. Oh, I love being out in nature. I wonder if I can Uber Eat some shit. Oh, how do I work this? Okay, come here, girl. Yeah. Oh, I love when you mess up my car window. Fuck you. Hey, Mom, can we go out to the Sahara to play soccer? Can we please go to an abandoned desert? Go anywhere. Feel anywhere. Charge anywhere. Butterflies not included. Rivian R2 starting at $45,000. Fun by the whole family. This is forever.
Come on. This isn't that high. This was just like a weird Subaru commercial. Oh my god, I got real Subaru vibes. Ooh, it looks the same. The back looked kind of cool.
The same car, just smaller. We heard you guys bought every version of Tesla, so we copied exactly what they did.
This is Jeff, our chief of design. Jeff and the team
Jeff
have done
wanted
just an
to be
incredible
Jeff
job of being
Bezos,
the
but
driving
he
force
settled
behind
for
our
Rivian.
products. We've been working together since well before the R1, so it is so amazing, Jeff, to see this, and to you and the team, amazing work.
Thank you.
So it is so awesome to
Not
show
bad
this.
looking.
I've been waiting for this for a while.
It looks
and
very
there's a lot
easy.
to talk about here. The vehicle combines capability, performance, utility, storage, functionality in a way that we think just really fits right into
It's the exact same
huge
style as
customer
the other
need
one, right?
And a huge need within the market. The vehicle
smaller.
size, the vehicle capability really has been optimized around enabling, as I said, and inspiring all those adventures. And so we're going to walk through the vehicle, but just starting here at the front. In the front of the vehicle, we have a large front storage trunk. For those that are familiar with R1, of course,
It
this
kind
should
of
be,
looks like a
very
Range
relatable.
Rover mixed with a
But this is
Jeep.
great for putting luggage, backpacks, your gear. It's one of the most used storage areas of our R1 vehicle. We get to see the
It's a
data on
Model
how
3 Range
all
Rover.
of our owners are using it. But it is just an awesome
I'm gonna
setup,
go to
and
the
of
back.
course
I mean,
this also
I don't know,
serves
kind of.
to
I thought there'd be
support a lot
something
of
new.
the front safety in the vehicle in terms of the crash structure that you saw in those R1 videos. Now, if we go around the side of the vehicle, it's hard to see without sitting in it, but so much effort has gone into making sure the packaging, not just in the front row, but also in the second row, creates this really airy, really comfortable, really spacious experience. Something that really is world class. There's nothing quite like it in this size of vehicle where you get in and you feel so comfortable and it feels so inviting. And we're going to take a look at the interior in a second. But first, just walk around the back. We did a lot of work to create something that builds a really open air experience. And you just saw, or maybe you saw, these quarter windows pop out. And what that does is we leverage the negative pressure off the back of the vehicle to pull natural air through, and it creates this beautiful open air feeling experience. And then the rear glass, which you just saw drop, also opens. And now the rear glass opening, it literally feels like an open air experience, but this gives you an ability to put you can put surfboards, you can put longer gear, and as you just saw, the second row seats fold flat, but also the first row seats fold flat. And the first row seats folding flat, that gives you, when if you're driving the vehicle, you can put long things in very easily.
What the fuck
But
is
if
the
you're not
point
driving,
of the
let's say you're
first
camping
row
or staying around the
folding?
vehicle, it creates this awesome in-vehicle camping experience with an inflatable mattress.
The fuck you mean? The first row folds
So
down.
walking around here to the side, you're thinking to yourself, well, how does the vehicle size? You're probably looking at me. I'm about 6'1".
Man.
Trying to figure out how does this compare to an R1?
Sleeping.
Well,
No,
we'll
he said
tell
if you have
it's about
anything you
400
want to
millimeters
move.
shorter than an R1S.
Put your driver's
And,
seat down.
in addition to being shorter, it's quite a bit shorter in wheelbase. It's also lower in height.
Surfboard, Josh.
And it makes it fits into any garage. It fits into tight spaces, really maneuverable. But to look at it in a driving environment is really helpful. So we'll show you it here next to an R1S. It looks awesome. It looks really like, just two family members out for a stroll. I love that. So let's take a look at the inside. And there's.
Couldn't you just bring a
when we
real
think
one
about
out
the design
side
of
by
inside,
side?
Interior of the vehicle. A lot of that ties to just what's in the materials, what's in the packaging, what does it make you feel? What's that environment feel like? And so we spent a lot of time working through those materials and the overall packaging to create an experience that is as inviting as one could imagine. And we have a lot of feedback from R1. And one of the points of feedback was a desire for a glove box. And we had lots of reasons to not have one. But on
Okay, now we gave you two.
On
We went from
R2,
no
we
glove box
over-delivered,
to two.
and we put 2 glove boxes in. The other thing, there's lots to see here, but one of the things that's so exciting is the
talking
way
about.
we've looked at the controls. And we have these really nice large wheels and the scroll wheels and the steering wheel. There's dynamic haptic feedback.
Come on,
so
bro.
it
Y'all
allows us
telling
to
me we ain't
adjust
living in the future?
what it's feeling like when you're scrolling. And it's magical.
got 2
it takes
glove
our existing
boxes.
scroll wheel and really up levels it
Fuck
to
outta here, man.
a
Who
degree
do it
that's
like
hard
that?
to
Who
fully
got
appreciate
2
unless
glove
you're sitting in the
boxes?
car. Now, jumping
I ain't
back
even got
out,
gloves, dog. I
a
got
lot of work
2
went into
glove
the doors.
boxes.
Move the speaker out of the door.
Stop it.
Gives us space for a large water bottle here. And of course, it wouldn't be a Rivian if no flashlight in the door. So.
Oh, I thought it was going to be a taser.
Really love that.
That would have been way
Super
more.
handy.
Elon, you could learn from that, Elon.
So now, how
Start
does this
including
set up in
tasers.
terms of how it functions?
Bulletproof and a
we
taser.
built an entirely new platform to underpin this vehicle. A lot of work went into driving manufacturing cost efficiency, and it's built around a 4695 cell. So it's a cylindrical cell, 46 millimeters in diameter, 95 millimeters tall. It's a much larger cell than the 21 millimeter diameter cell that we have in R1 today. And that cell's integrated into a highly structural battery pack. So the battery pack in the floor actually makes up a big part of the vehicle structure. The top of the battery pack is actually the floor of the vehicle. So a lot of these innovations that we're driving into how we build the vehicle are core to us making sure the price point can be really affordable. We'll get to that later. But from a drivetrain point of view, we have a single motor, rear-wheel drive variant. We have a dual motor, one motor in the front, one motor in the back, all-wheel drive variant. And then we have a tri-motor, two motors in the back, one in the front. And in the highest performance variants of the vehicle, 0 to 60 in well under 3 seconds. So it's very quick. And then all those motor combinations can achieve over 300 miles in range. So much of what a Rivian is capturing the dynamics of the vehicle. And we needed to make sure that all the decisions we made in the aggregate, the suspension, the drivetrain, the battery positioning, the packaging of the vehicle, delivered something that drove like nothing else. Something that was exciting on-road, something that was incredibly capable off-road, but had the everyday refinement and usability to work if you're parking it in San Francisco or driving it in New York. And so that focus on dynamics is so embedded in our culture as an organization and embedded, of course, into our products. Now, we talked about the vertically integrated electronics we built that enable this amazing software platform that we've seen in R1. We take that even further in R2. We talked about how the packaging and the design of the structure allows us to achieve really amazing, amazing manufacturability. But we've also focused a lot on sensors and the compute in our vehicle. And this has 11 cameras, 5 radars, 4 radars in the corner, 1 long-range radar in the front, which we couple with our new, much higher compute platform, which will enable this to have a very high level of self-driving. And for us, that represents being able to get on the highway, take your hands off the wheel, eyes off the road, and truly operate it where you get your time back. And that's, to our self-driving team, we're really excited about what this vehicle represents for us. Now, I do want to talk just a bit about how we've laid out the manufacturing system here. And I talked before about battery pack, but every single decision in a vehicle, and I say this a lot, you look at a vehicle in the aggregate like this, and it looks like, maybe there was a few thousand decisions. There's millions of decisions that have to be made across thousands of engineers. And those thousands of engineers making those collectively millions of decisions, we're incredibly focused on ensuring every one of those is not only optimizing for what the ownership experience will be, but optimizing our ability to make this very affordable and very accessible. And so the R2 starting price will be $45,000.
You say 40,000? $45,000. It's not bad. I thought he said 40. I was like, that's pretty good.
And you can reserve one starting today.
I already got mine.
Yes. I love that. I'm so excited about this vehicle. I'm so excited about what it represents for us as a company.
I wonder if it actually
scale,
what does
it represents for us
45K
in terms
get you,
of
or
our
is it like
collective
55?
learning being embodied
after
into
everything?
one vehicle.
It cost $145
as
to make.
the follow product to what we did with our flagship product with R1. But it's important to note, R2 represents not just a vehicle, but it also represents a platform. And that platform, as I said, the performance, the capabilities, but also the flexibility from a manufacturing point of view is really important for us. And I'm really, really excited to talk about R2's sibling.
What?
Which we call R3.
I didn't know about no R3. Did y'all know about an R3? It's gonna be a dune buggy. What the fuck is this ugly piece of shit? Yo, hold on. They just came in with a surpriser. Woo! This looks like a fake Cullinan. What the fuck? Wow. Dang, I think that was unexpected. I think he just surprised everybody with the R3. Yeah, the stock, again, the price for that car was good, but I don't think anybody thought there was a new
So
car,
you'd expect
R3.
that one more thing here.
Hold on.
R3 is, we're so excited about
Hold
what
on.
this
If this thing's
sort of
cheaper than
delivers
$45K, yeah.
beyond what we see
this
in
could
R2.
be very good.
It takes the package of R2 and the platform, it shrinks it, it puts it
It
into
looks like the
our
Kia.
take on
Oh
what is
my
a
God, that looks
crossover.
so ugly.
And it's a
That looks
vehicle
like I
that's almost hard
told
to define what it
Midjourney
is, but
AI, I
it so
said, make
beautifully
me
captures
a
our
Kia
brand, captures
EV
what we represent
lookalike,
as a company.
and it spit out this.
It's dynamically
It looks so
incredible. The
awkward.
shorter
It's kind of
wheelbase, the tighter
ugly and
dimensions,
cool.
really
it looked like
enable
a
it to be something
Cullinan
that's,
Hyundai.
maneuverable,
Looked like a
and drivable.
Hyundai Rolls Royce.
But as tidy as it is,
It looked
on
like a
dimensions on the
Hyundai
outside,
Phantom.
We've put so much effort into making sure
It looked
that
like
the
a
inside
Kia.
feels big.
It looked like a
And,
Kia Flying Spur.
Much like we saw on R2.
I don't even know, man.
There's a lot of
Lucid,
work
I don't
that
know.
went
I feel like
into
Lucid.
everything that you see
I don't
in the
even
rear
know
of the
how this
vehicle,
stacks
the
up.
occupant areas in the front of the vehicle.
Like a Honda Huracan.
But this is all enabled by the platform, and it's about 5 inches shorter, 135 millimeters shorter than what you see in R2 in terms of wheelbase, but leveraging all that same content. So the single motor, the dual motor, and a tri-motor, the beautiful battery pack built around a larger format cell, our network architecture. Really excited about that. Oh, hello. So up front, we have a front storage trunk, much like what we had in R2. And that storage area of the vehicle, you can use to throw all your gear, your bags, and something like this. Wonderful for that everyday urban usability, adventure usability. But I want to spend some time in the back. And we spent so much time as a team
so weird.
thinking about working on how do we create a unique closure experience in the back. And what you just saw happen is the rear liftgate came up. Just like we saw in R2, the first and the second row seats fold flat. So it creates an opportunity for in-car camping, or it creates an opportunity to carry your long gear. But when we close this, there's a second way to get to the back, which we call our flipper glass. And what I love about this is it makes it easy to get things in and out.
Geo
but
Metro's
this
had that.
actuation
I'm not even
can actually go to multiple heights. So if you're carrying something that's longer, that could be a surfboard, it could be stuffed animals, it could be a trombone. You can adjust the height here, and it's a user setting to make it really easy to carry those bigger objects or bigger things around. And as I said, everything as we thought about this vehicle is around making a smaller car feel really big. Now, looking at the interior, a lot of what we saw on the on the R2 carries over here. So the use of materials, the way we think about the sustainability of those materials, how durable they are, and really embodying
I just
that
want to know the
Rivian
price.
feel.
If it's cheap, this is going to be very
driven
good
into
news
this,
for them.
and
It's already
we should all sit in
surprising.
the car right now.
I don't think
But
anybody was expecting this.
Same thing we had with our R2 with the control wheels and a steering wheel. Lots of flexibility in terms of storage. 2 glove boxes. And of course, we still have a flashlight here. Now, we talked about platform flexibility. Hopefully you're seeing that here between R2 and R3. The ability for these 2 vehicles with really common family genes. You can feel their siblings. They look like the Rivians. They feel like the Rivians. Unfortunately, you can't all drive them to say they drive like the Rivians, but I can guarantee you they do. But there's one more thing. One more thing.
One more thing.
And looking at R3, we wanted to take everything that's embodied and put it into an even higher performance package.
So we got
And this is
R4.
something we call R3X.
Have you ever wanted a Honda go-kart? Thought people would judge you for driving around in an electric golf cart vehicle?
new Rivian R3X. They should have played the Tokyo Drift song. Get to the price. Dude, this thing is wonky. It looks like a car from, was it Players Underground?
Thank you, Max.
Remember that? What's that one game? PUBG? This car, it looked like one of them weird ass fake cars from PUBG.
I mean, this is just so cool. This is the vehicle. When we walk around in the studio, everybody sees it and they're like, oh, I want that so bad. And I think that happens for anybody that sees it. But this captures, as you can see, R3, but pulls a level of deep performance capability into it. And there's lots of subtle differences. It's a wider wheel and tire, a little wider stance, more ground clearance.
Yeah, Spy's about to hit a new high on this. You do have Nestor
really
speaking right now.
The capabilities.
Again, I think this was the bigger surprise, though, that they just announced the new car. Again, we're just still melting up. Spy, new high, new all-time high, new 52-week high.
Performance that will get us all very excited. And what you can't see, and I want to show, is the interior on the vehicle is just beautifully laid out. We had a chance to really stretch ourselves. This is an interior combination we internally call rugged playful, because it looks rugged and it looks playful. But the use of materials and the use of how we laid out those materials with cork and with interesting weaves and interesting ways to anodize metal, it feels so uniquely Rivian, but also so unique to this vehicle and to the performance variant. Now, as we think about this portfolio of vehicles, R2, R3, R3X, I can see from the room everyone is excited. We are so excited.
Nobody in the room is excited.
These represent our future. These represent what we've been building to, the brand that we established with the R1 products and positioning Rivian.
It's good they're getting to a cheap car. I want to know how much
make
this
that
is.
more accessible to more people.
Say $25K,
And
everyone's going to love it.
We've been working hard to find ways to pull the timing on these programs forward, to get them to as many people as possible, as quickly as possible. And with that, I'm excited to say that we're going to be pulling the timing in to allow R2 to start deliveries in the first half of 2026.
That's a long time.
And we're able to do that. We're able to achieve that accelerated timing by leveraging our production capabilities in Normal. Using our Illinois site to launch R2 and get that into market as quickly as we can. Now, our Georgia site remains really important to us. It's core to the scaling across all these vehicles between R2, R3, R3X, and we're so appreciative of all the partnership we've had there. But being able to leverage the team, the skill, the passion we have in our Illinois facility to get that into the market, to get that to customers,
Man.
some of those orders I heard over there,
5157.
as quickly as possible, we are just ecstatic about.
How much?
Now, hopefully you see, when we look at our products, when we look at R2, when we look at R3, we look at R3X, every decision, as I said, ties to making sure these vehicles enable and inspire the kinds of things we want to take.
There's no way
photographs
that
of.
car is 70K.
The kinds of things we want to remember.
Why does this girl
20 years
have
from now,
8
30 years from now.
bikes? The fuck is wrong with
And so
you?
we've also developed a set of accessories that sit on these products. Yes. That link to making and building those memories. So we have a tent that's so beautifully integrated that goes onto the top of
for
our
real
2
though,
or
this girl
R3.
got a lot of bikes on this
We have bike
mini
racks
ass
that make the use of
R3.
bikes really easy. We want all of our vehicles to be the easiest vehicle to go biking with.
Yeah, yeah.
And we have a really clever
Emphasis on
way to
biking.
think about a kitchen and rear storage plugging into our storage ports in the back of the vehicle. But ultimately, we as a company, we as Rivian, we exist to not only help transition a world away from combustion fuels and into electrification, we exist to help generate amazing memories in the process of doing so.
I'm refraining from adding my own voiceover because I don't know what's really happening right now. Spy is going up though. You're about to hit a new all-time high. Yeah, this Rivian thing took a little bit of twist and turn here. I think you can see it on the stock. SPY 51513 515789 5158.
Thank you, everyone, so much for joining us today to hear about our future.
How much is the R3? Wait, what? He ain't telling us how much the R3 is? Or did it say it on there? Did I miss it? There's no way. There's no way they just announced this cheap-looking vehicle. Hold on, was it on this? Oh, we already saw this video. It showed us the stickers. Why is it making car noises if it's EV? I'm confused. It's like, "Mrrr." Dude, no. Did he say the price? I don't know. Let me check the website. Well, again, if that's it, then that's that. It was still a little surpriser, though. Not bad. I don't know if Mester is still speaking, but did he not say the? He didn't say the price, right? Rivian R3. Damn. Because that, I feel like that could have gave it a little bit more juice. Because that's interesting. Again, I mean, their SUVs were like $100,000. They were expensive. But for their second vehicle to already have like a cheap one to offer, it's very interesting. It's an even smaller electric EV. Or I don't think there was a price though, sadly. Bro, what is this? They don't even have R3 on the website. That's crazy. No price, not till 2026. Well, that sucks. That would have been the cherry on top for that. But at the very least, a $45,000 SUV, people took that one pretty well. They liked it. Thank you for your time, Rivian. I appreciate you helping us out. Brought to you by Tesla. I know, that would have been good if he had a price. Is Mester still speaking? No?
Was Gabrielle Harding, a graduate of an HBCU pilot program and one of the Hampton Six, a group of United captains who...
Oh, yeah, no more Mester. No more Mester. And SPY still going. Another high, ladies and gentlemen. It is not stopping. 5160. Again, I mean, at this point, you are closer to pump it up than you are further away from it or to the solid level. So there you have it, ladies and gentlemen. Rivian plans for new EV factory in Georgia. More Rivian news coming out. Oh, they're running off of that. So there they are. Rivian, damn. So it's up 11% now. It's up almost $1, I think, since the speech started, or about $1.20. Georgia factory is old news, Chad says. I think it still just could be the car. Again, they surprised. I don't think anybody knew they had a R3 in their lineup. But for the most part, I think you may see some follow-up. They have to make up to like what? I think it's like 1240 or something. Yeah, like 1240. They get back to that like earnings level. And they have a lot. They got a lot more room to go. Rivian savings estimated to be over $2.25 billion versus Georgia. So they're coming out with savings. That's good news. Again, remember, they're down ever since they guided those sales numbers lower on their earnings. MAA, Rivian's still moving up. Meta's up. SPY. Let's take a look at the chips. They're all mostly doing good. Micron's still up. Airbnb was at the high. Value just depends who you ask. Rivian. No, I didn't grab any Rivian, no. We were watching it. It was very surprising, though. It's kind of good. Dude, Rivian's still going now, 12.60. Bro, that just rocketed up 60 cents on all that cost-cutting news. No, Jerome, he said something good today. I think we ignored Jerome. If anything, we reacted a little bit to the ECB, Japan, and then there was good China data in the morning, even though China names went down. Damn, Rivian 1270. Oh, that one took off. Yeah, that's a lot. So, again, I think they're past their earnings level. They got a little bit more that they need to make up. Rivian got lucky. I think Rivian just got they surprised. That's it. Everybody thought it was just going to be an event with only one vehicle, and then they came out with a second vehicle. The price of the first vehicle was good. It would have been nice if they had a price on the other one, but I just think it was a surprise. That's it. And then now they're announcing these cost-cutting measures after hours, or after the event. So all of that's good. But, like, dude, 3 vehicles or 2.5. I guess one's a performance version. But they definitely, like, think about it. When was the last time you had a product meeting and you knew what they were going to announce, and then they announced something new? That would be like going to an Apple event, and then they're like, we also got a new iPhone we didn't tell you about. Rivian surprise call out was on point, baby. God bless you, Metamorphium. I hope you're doing good, baby. Or nah. Good morning. It's still very early, too. Amen. LBPH. Is that oh, it is DraftKings. DraftKings on the high. Interesting. Up 2. Coinbase above 240. SPY near the high. Even Tesla's up today, man. Meta's relaxed a little bit. Apple rocketed up there. No way. Apple actually kind of moved there in the last, 5-10 minutes. Yeah. He finally got to react, huh? He said, hello. How are you? God bless you for streaming. God bless you, my friend. God bless you for being here. Amen. 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 We still got earnings previews coming up here, too. So have no fear. Have no fear, my brethren. GSLC, 52-week high. And then Nugget, GLD still up. Where's oil? Yeah, well, Pump It Up. I mean, we did play Pump It Up last time. We are very close to another Pump It Up. That's like the craziest part about all of it. That is the craziest part about all of it. Chatadonia. It is that time. Ladies and gentlemen, boys and gals, how you feeling, man? Happy Friday, Junior. Wild day. Market's still going up to a high. We're like halfway through the day. We got a little bit more going on, but yeah, it's time for PHILO. So let the market do its thing. Remember, we have data tomorrow morning. That is probably going to move us, but now let's talk a little bit. Let's talk a little bit about life, man. You know, if you don't know how we do PHILO, it's just something we do every day, kind of. It really depends on the schedule. But, you know, as of lately, the one thing I have been shouting out is the demand for PHILO. Every day, somebody asking me for PHILO. Every day, I'm seeing some of y'all, I'm getting emails, I'm getting prayer requests, how people saying, PHILO, help with this. They did with that. And honestly, the thing that I really love about it is just seeing a real-life effect. You know, beyond just whatever we do here and talk about here. And again, we talk a lot about stocks, everything going on. It's good to spend a little bit of time just talking about some other things. You know, the market opens and closes, and there's more to just the market here. So we're even going to do some earnings previews after this. So it's good to take a little bit of a breather, but all in all, man, I just want to give a big shout out to everybody that has held it down during PHILO and who has held it down outside of this stream. And what I mean by held it down is by holding themselves accountable, having personal responsibility, sticking with it and bringing out fruit and living and making there be more to life. Regardless of what you feel about it, finding something more and making more out of it. You know what I'm saying? I hope they feel me. So, Chatadonia, I got a couple of things. It's a quick one. It's a quick PHILO today. Just give you a little one here. You know, Friday, Junior. I'm going to give you a PHILO from Mama. Hey, Mama. I'm going to give you one. I'm going to give you one, something my mom told me the other day. I wrote this one down. I was talking with her yesterday as well, too, but here's the deal. Before I get into what Mama told me, I want to ask you guys something. And what I want to ask you is, what context do you view things in? It's a very broad question. But, like, how do you define what happens to you? Like, if something bad happened to you today or something good happened to you today, how do you define it for yourself? How do you define the things that happen to you? There's a specific answer, but it's a very broad question. SPY hitting a new high. You're going by the 50-60, 51-60, 51-62. Apple waking up now. I don't define it. Just keep swimming. Protagonist, destiny, a lesson, emotional attachment. The world is working against me. Share with them. What about when something good happens to you, though? Celsius on the high. Why me? Good. So, it's a very tough question because I don't know if you would get the answer that I'm about to share with you. But I want to talk about long-term versus short-term, baby. And what I mean by how do you define what happens to you, I mean, are you looking at things in the short term or are you looking at them in the long term? Are you defining whatever happened today, yesterday, last month, last year? Are you applying it into the context of what's going to happen tomorrow, next month, next week? Or are you looking at it for, well, this event happened in my life today that is leading into this event down the road? Or if I'm planning for this and this is where my goals are at and this happened, did this setback really take me away from my goal, or is it just a setback? So this is something I was thinking about. It's actually related to sovereignty and being understanding the will and what you could do and when how things happen. This does incorporate a little bit of amor fati, but there is a big difference between the man who defines everything and views life as very short-term and the man who views everything in a longer sense. So I wanted to remind you with this one because I heard this the other day, and it kind of relates to what we're going to talk about, but in general, I mean, you know, the real reminder of this, it came about looking at the long term. I've been seeing the long term. It's been hard to ignore. I look at the market. We were just talking about the long term today, and it's just funny because out of all the discussions that we've had in the long term, I think this PHILO comes up the most. It's like, you know, whoa, like, should I buy something? Should I sell something? Should I start my long term? Should I sell out? It's like, well, how are you viewing things? Like, how are you defining your goals? And, like, are you viewing this in a long-term sense to get what you want? Or do you see the market going a certain way and you only want something for the short term to get what you want? But that right there, man, how you view things long-term or short-term, whether it's getting the things you want, you plan for, it'll have such a big effect on how you deal with everything on a day-to-day basis. It's not even funny. Again, we could have the same stock. Depending on how it moves in one day, that makes somebody feel a different way. One person will make bank off of it. Somebody could blow up their account. Same stock, move in the same direction. Are you short-term or are you long-term? Are you positioned short-term or long-term? Now ask yourself that on a broader level. So that's what I wanted to start with. But now I'll give you this the other day. I asked my mom. I was asking her one of her like favorite things that she gone over this year. I said, 2024, Mom, like what you been working on? I said, what's been your favorite thing that you got? And it surprised me with what she said because I don't know what she's dealing with, man. I don't know how this letter there. And I said, that's a very interesting one. But she told me this, temptation. And she sat me down and she said, little Josh, just don't ever forget. This one she loved, and she said she'll never forget. There is only 2 types of temptation. Does anybody know what they are? There is only 2 types of temptation. It's funny because we kind of talked about this the other day. Mm-mm. 5163. Still going up. From God or from the devil? Envy and stealing, money and greed, fear and greed, greed and fear, lust and greed, good and bad, greed and lust, guilt and remorse, fear and greed, greed and lust and greed, envy and greed, greed and sin, lust and greed, fast or slow, lust and greed, love and fear. Interesting. Mind and flesh. Buy and sell. Buy high, sell low. Oh, man. I like it. I like it. But someone came close to one of the answers I was looking for. There's 2 types of temptation, ladies and gentlemen. The first kind is age-old. The first one is the temptation of the flesh. That one's easy. It's easy but difficult. Remember, I was just telling you, man, the flesh ain't your friend. That self-denial go crazy sometimes. The flesh is where every single one of you get tempted. Now, listen, I know it may sound very spiritual, and some of y'all get a little nervous and start like squirming when you hear words like flesh and temptation and spirit, whatever. No. Listen to me. Just think about it. The things that are motivated by your like body, like literally like pride, lust. You guys brought them up. Envy, greed. Wanting certain desires for things. Like, this is all just your flesh leading you into problems. Like, you got to really think. That if you say flesh leads into temptation, problems, sin, whatever, a lot of things you could identify with getting tempted with the flesh. It's easy. If you wanted to tempt anybody, if you wanted to convince anybody to do something, you would probably use something fleshly. If I wanted you to do something, I would try to bribe you with something. If I could, I'd try to give you money. I would try to give you this, give you what you want. If money didn't work, I would try to stroke your ego. I would try to tell you how smart you are, how great you are. Wow. You get what I'm saying? You could go down the list, but a lot of it would be fleshly. The temptation of the flesh, we all deal with it. Probably the number one age-old way any temptation, probably ever, anything in life ever tempts you, it's most likely going to be a pull by the flesh. Right? Y'all with me? So what's the second kind? That's the only one somebody got. Nobody said this one. This one is interesting. This one should be our favorite. I like this one because this one, I was like, ooh, I've never heard about it like that. But I like this one. I like this one a lot. The mind, you're close, but not really, no. Close. And I'm not saying that that's like a wrong answer. Just not for what I have here for you today. Not the spirit. The temptation of the flesh and the temptation of the blank. The heart. No, that's a good answer, though. Desire. No, the love. Oh, somebody got it. Somebody got it. Wow, someone got it. Somebody got it. So, Chad, SPY's hitting a new high. There is the temptation of the flesh. And then there is the temptation of the test. Someone said testing faith. We could keep it simple and just call it the test. Oh, y'all don't feel me. I don't think y'all feel me. This one hits, bro. This one hits. I don't think y'all feel me. What is the temptation of the test? Never heard of it. So think about it. You get tempted by things of the flesh, right? We just talked about that. So I'm saying you also, the other big moment in life where you get tested or where you get tempted is when you are getting tested. When you're scraping by, you're one bad decision from everything ending you. How the decisions you make then and how you even get tempted to make bad decisions, that's going to define you. It's easy to believe in positivity and God and this and that. It's all easy to believe in that stuff when things are going good. You haven't noticed? I talk about God. People are like, well, you have money. Well, of course, Josh, that's why you believe that. How dare you? You think you're blessed and other people. So like I haven't been tested. Like I haven't had an opportunity to been able to say, oh, well, you should have seen it when it wasn't like that. People think I can't just because I haven't been tested, or I have, just because it may look like I haven't been. That means something about what I believe. That it means something about who I am. But that does apply to everybody. That does apply to this. Because it just goes to highlight how we look at tests and what you go through to determine whether or not, like, okay, yo, that's legit right now. Or, okay, yeah, you're suffering, you're going through that. Or, again, what's going to tempt you to make good or bad decisions? Like, you don't think I was tempted to make bad decisions? I didn't get tempted when things were going good. You're not going to get tempted to rob somebody if you're making a bunch of money, unless you're Sam Bankman, I guess. You get what I'm saying? You're not going to be willing to give up on your faith until somebody dies. It's easy to believe in God when everybody in your family is still alive. Very hard once you lose something you can't explain. How about you get sick? Do you get what I'm saying? Man, I'll give you the easiest one right now. The temptation of the test. Are you ready? You want it? Are you sure you want this one right now? I'm going to tell you this one right now. It's real. The other ones were very real. But this one especially for you stock traders. Bro, how many of y'all have either been through this or heard somebody say this? You make a trade doesn't work out, and you're doing awful, you're even about to blow up your account. So then you just throw in all of your money on one play and say, well, fuck it. If this hits by Friday, if this does this, then I'll win. Otherwise, I'm done. Yeah. That right there is a great way I think you could understand the temptation of the test. That's the beauty of it. I love it because that's a stock example. Because that right there just highlights it. You could be getting tested, going through. That's why some people just capitulate and they give up. That's why they call it capitulation. Even if things are already doing bad, you're going through it, they just give up. They don't even fight back anymore. When you are going through something, you are tempted to not fight back. You guys, have you not realized that? That's literally what capitulation is. When you are going through something, you are tempted to not fight back. You're just saying, all right, I'll take it. That's it. Nothing's going to change. It'll be like this. All right, I give up on this. I tried hard. I wanted to do it. All right, nope. No, I'm not. That's it. So, Chad, these two things, maybe you got to take a step back. Ask yourself, what's tempting you? We were talking about how you're behaving, looking at it long-term, short-term. And things are getting in your way. I mean, let me ask you, which one do you have to deal with more? Because I don't think you realize I could separate all of us into two categories right now. You know that? I could take every single person in here and I could separate all of us into two teams. I could separate us into team flesh and team test. You know that? There'll be half of y'all. Your actions are motivated by the flesh. Your problems, your anxiety, what you're going through, the issue, your money problems. It's all motivated by the flesh. Some of y'all spending money just so you feel good. You spending money so you could look good. Spending money so you could get high. Spending money so you could do this. Spending that's flesh, team flesh. I could throw the other half of y'all. Y'all ain't spending your money bad. You ain't doing this. You're actually quite good with it. But the test, anytime something bad happens, you give up. Anytime something bad happens, it should have been bad for a week. You let it be bad for 3 months. You turn a 1 month to a 3 month. We've talked about that. Anytime there's an issue, you just want to quit. That's it. You just give up. You good when it's good, but when there's a test, nah. You do great on the practice test. You fucking bomb it when the test happens. Oh, you see what I'm saying? So, Chad, I don't say this to shame you. I say this to take control. Like I told you, my mom, I asked her what she learned. She said this. She said this was one of the best things she learned so far this year. And I said, that's good. I like it. And the main thing about it is knowing. For real, man. Dude, like, even the other day I was driving, bro, and like, dude, you guys, like, imagine the stuff you hear from me on a day-to-day basis. You know what I'm saying? Like, imagine I just start going into voices, then I start talking about a stock, then news, then I answer a question, then I go back. Like, dude, imagine what goes through my head. Like, dude, I think I was driving yesterday, and again, and I was like, oh, the watch list, I was getting late, and I was like this. I had like 100 things I was thinking about in my head. It was crazy. Like, it was nuts. Like, I was like, man, I was laughing to myself because I was like, if any of you ever really saw what goes through my head, man, you know what I'm saying? You guys would be tripping. Like, you guys would be tripping because you'd be like, this guy is crazy. No, not stress. I was having fun, bro. I was enjoying it. It wasn't even like stressful. I was like thinking of the world and PHILO. I was thinking about a little bit of work and where I was going and where I was coming from. But like, I was just laughing because I was like, dude, I am the things on my mind right now, all around the place and so many things. And life is beautiful, but it's nice if you could whittle down a couple of things. You see what I'm saying? And that's what I'm telling you with this PHILO, man. I really hope whatever team you think you're on, whatever, you get out of this, I really, when I give you some of this info, I hope it arms you with stuff so you know what you're going up against. You can't fight an enemy if you don't know what the enemy is, right? And that's why I'm saying, man, let's take a look, man. You got anxiety, you dealing with this. It's funny because some people bring me, you're like, I feel this way about this. And it's like, well, it's like, that's not a stock problem. Like, that's not this problem. It's like, it's probably leaning in from something else. Like, for real, bro. The problem wasn't that you bought something at this. The problem was that you got tempted to buy it. The problem was you got tempted to throw your whole account into here. Your problem was you got tempted to give up right when the moment was about to get good. You see what I'm saying? You can spend your whole time trying to troubleshoot and find, how do I get out of this problem? No. Find the cause. What's causing the temptation? If it's a flesh problem, then you got to figure out what it is. Serious. Sometimes it's easy. Sometimes it's hard. Sometimes it's funny. Sometimes you could just look back and say, damn, I'm doing this because of pride? Because I want money? Because I want this? Oh, I think it'll be cool. And vice versa. If you know it's a test, man, study. Stop getting so emotional. Stop getting so involved in the negative when it's actually negative. Let negativity happen without giving it so much emphasis. But the point is, if you could identify what it is, I really think you could whittle it down and take a little bit more control. So, Chattadonia, this is a little message from Mama for y'all. I hope you enjoyed it. I hope you take that one to the bank. But that is your philosophy, ladies and gentlemen. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. You're on mobile. Press hard chat. X out the chat. Hit the thumbs up button. Second link for the night. You watch this in main channel. First link for the Scream Alerts boot camp and real estate course. I was going to say NVIDIA. Okay. All right. Now you get Uncle. I want Airbnb. I'm playing Airbnb until Airbnb goes down. I'm telling Airbnb going up every single day, bro.
I don't wanna rap that. Yeah. Peasant out, Pluto. Rollie on my wrist. Nah, I don't wanna rap that. Pull up in a bed body, I don't put a tap back. Hit me with the divvy, I don't even need the NASDAQ. Skinny and she pretty, I don't even need the ass fat. Guinea was a freebie, I don't even need a fast one. I was never greedy, I just never fucking had shit. Now I bet that I ain't never fucking going bad shit. Please stop backing, y'all need man skin. Little more balance and a lot of bit of counting. Pull up to the villa, got these motherfuckers counting. Pulling up the Lancho, got it looking like a mountain. When I put them on the motherfuckers daddy. But it's some more fighter, I don't give a fuck about it. I'm still in the game like a screaming athlete. Got a little fame, but it ain't changed nothing about me. Nah, same old J, you smoke more J. Still make dumb plays, but I play less games. Always ready for the war, I ain't playing campaign. But I really need a reason for I pop champagne. Proper for the fall, so I gotta stay safe. Lot of money on the table, boy, that look like bait. I'ma think it before I get it, boy, that look like fate. Either way the story goes, no, I love that fate. Had these motherfuckers hated me before they love me. Now they selling half and they ain't playing with their money. I told them take a tenth and pay yourself, cause that's your money. Put me on the best, cause I ain't playing with you dummies. They ain't gave us nothing, even if they did, no, I wouldn't take it from her. Then we took a shit, but we still try to love her. Got so many wins that I can't trip about a phone. On my wrist, nah, better renting for the scenery. And maybe live the season and keep on buying stats every month. Spread it evenly and shout it out to people that believe in me. I hope you living peacefully. And same thing for the people that don't speak to me. I do this shit for everybody equally. I guess it's just a G in me. And when we done with that, we going back to the reality. Yeah.
I might have to give you another one. I want to get a drink. And then I have earnings previews. They're already done, so you don't have to have a press briefing today. So that's the good news.
Spiritual warfare is much more subtle, and it's much more tricky.
It's a call, baby. Yeah. It's a letter to the people. I'm penning it like I'm Paul. It don't matter about the evil. It matter about the God. It don't matter about the weapons. It matter about how you armed. All that matters is the weather. When weather to bet the farm. I ain't gotta see it to believe it. If it's signing and it's needed, then my eyes don't need a reason. I won't even try to explain it. Let's just say I got a feeling. I'm gonna sing my praise like David, but the king is still a killer. Listen up and go and get the tropes. Hope you know you ain't scared of them, they scared of you. And I know you might be scared to take that point of view. You see them arrows in my back? Yep, son, that's gonna happen too. But the harvest on the way, you gon' barter every day. That means you have to make a trade, either life or it's the grave. The result will not remain, every day will bring a change. Kinda funny and it's strange how the hope will pave the way. You hearing what I say? The only difference between you and them comes down to fate. There's a difference in the man who believes in a better day. Cause once you believe it's past, you willing to wilt away. We was never willing to be the same. We want it all in the long run. They want it all today. My father is really awesome. Don't bother with giving snakes. Regardless, I can't control it. So either way, giving thanks. Yep, you could take that one to the bank. A leader without a rank. A speaker without a face. A people without a race. They eating without a taste. They scheming without a safe. The meanings have been replaced. Another time, another place, we could talk about it. Keep some oil in them lamps, don't get caught without it. Want them once, want them twice, then never talk about it. If you never get a second chance, then that ain't meant to happen. What I understand is you ain't trying to understand. Take 100 grand, then 100 undergrads. Pay them all to make a plan, but they couldn't comprehend what it means to never die, but somehow still be born again. It's a letter to the people, I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. It's a call.
It is a cult. Indeed, my friend, indeed. Indeed, my brethren. Genuinely admire what you practice and teach from the bottom of my heart. Hope I can get out of the position I'm in and facilitate others, man. Amen. God willing, remember, when you start feeling blessed, you'll get blessed. A lot starts in the mind, my friend. At least that's the first place. I can't put a timeline on it, but amen, bro. Coffee on me. God bless. I'll save that for tomorrow. Tomorrow's Friday. You know what I'm saying? We're almost done with the day. We got previews coming up. That's it, man. That's it. Let me send out a stream alert. Previews starting in 2 minutes. The decision on the TikTok any minute. That will be crazy. AJ Mack. Yo, that's 310. They don't know about 310 AJ Mack. What's up, baby? Good morning. Good morning. Wait, did I not send? I bought 3 cookies for 50. Foolish. Welcome to the chat, baby. Welcome, Foolish. The AJ Mack 310. They don't know about that, man. They don't know about that. Now we at AJ Mack 515. What now, son? It's almost 100% on the index. I didn't hear about any $18 cookies. So I don't know if you guys did. Yeah, we do have the State of the Union tonight. That's why I don't know if there was already a press briefing. But I'm sure they were going to discuss that a little. We only have a couple of earnings for tomorrow. I have like what? Oh, I have one. I have an interesting one on BBAI too. But yeah, we'll be good. We'll be good. The CEO of Rivian, yeah, they had an event. I forgot I still have Rivian up. It kind of chilled out, but they surprised. They announced a new vehicle nobody was expecting. There was one vehicle that everybody was, and then they came out with another one, talked about a new facility and cost saving, and then they went crazy. Myrna, I don't really have thoughts on Myrna. I remember it went crazy at the beginning of the year, but I mean, I got Pfizer. Other than that, I haven't really been too focused on Myrna. I'm still kind of surprised they're holding up how they are. That's the crazy part. Market always goes up. Hey, man. Oh, what's up, Zion? Zion, what a name. We're talking smack on Moderna. Moderna. Remember Moderna? I think it was like the first day of the year they were like the best performer. And that was it. Will I be live for the State of the Union? Oh, I might be. What time is it? Because I plan on doing a live watch list tonight. So maybe 6 p.m. Eastern or Pacific. 9 p.m. Oh, shit. I am going to be live for it then. Yeah. 8 p.m. Y'all just gave me like 5 different times. State of the Union time. Address March 7th. Where is he? 9 p.m. Eastern. And that's assuming he makes it in on time. So, yeah, I guess I will be live. That's going to be weird. I'm going to have to compete with Biden because it was supposed to be a watch list, but I guess we could find a way to incorporate both. We could do a little bit of State of the Union live and watch list. We could do some Q&A. Maybe we trade futures. I wish like futures would move with his comments. You know, maybe one day. Maybe if Biden like got active on Twitter. But yeah, 6 p.m. Pacific time. So yeah, I will be live on the main channel. Alrighty. But Chattadonia, it is that time. You guys like tradition, right? I like tradition, man. I feel bad, man, because now we might have to move this into, once earnings is wrapped up, we might either have to keep pricing or maybe we just start doing some of those 11 at 11s again because I like the 11 the traditions at 11. The last about 2 months or so, we have been pricing in options, and that's what we're going to do right now. So it is time for earnings previews. Ladies and gentlemen, if you want to go through these companies that are reporting today after hours and tomorrow morning, I'm going to go over the popular ones. If we have an earnings preview, we're going to go over some of their past earnings results. Then we're going to go over what the option chain is pricing in. Then we are going to go over our strategy, the ghetto standard deviation, and then finding out if there are any cheap plays with a high reward and a low risk. So this is a very great time. Like I said, it's been tradition here for the last couple of months. A lot of people have profited off of it. They've benefited off of it. They have learned a lot. But that being said, none of this is a recommendation. You have to be extremely careful. If you do watch me make plays, the plays that I am going to be doing have a low likelihood of becoming profitable. I am going for the low probability plays, and I am playing with a small amount of money. So if you need a play to hit and you're like, oh, I'm putting all my last money on these plays, these are probably not the one to do it. Do not let this info blow up your account. And ideally, what you should be getting out of this is info about the companies that are reporting and knowing what the expected move is. Once you know what is expected, you could go to the option chain, the stock, and you could play 10 different strategies to be able to make a good play by knowing how much the stock is expected to move in. So it's been very helpful regardless. So apply this to your own strategy as you please. And I got to end it with the final thing, man. The top quote I have heard of 2024. One of the Chads told me this when we were going over it. It's very simple. Are you ready? Money that you need is cursed. So very simple. Money that you need is cursed. Do not put them down any. You need that money for rent. You need that money for the long term. Don't let these tempting plays blow up your account and put in the money you need on these plays. I don't know. I need to do this. I needed to do that. Trust me, it'll get you into a lot of problems, all right? Sound good, Chadadonia? We all on the same page, everybody? We only got a couple today again, but these are some of our last sets of earnings. My goodness, are you ready? Y'all ready for this? Bow now, down, 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 down. Everybody earnings, earnings, down, down. Okay, I'm sorry. I get excited about earnings. The money you need is cursed, baby. Amen, amen. That blew my mind when the Chad told me. I was just a young boy when the Chad told me that, and my life changed forever. That's what it'd be like, man. I'm telling you, that's what you got to do, man. I'm telling you, it hits different. It hits different. DraftKings to launch mobile sports betting in North Carolina. All right, so first company up on the list is Broadcom. Another chip name. They've already had a huge chip rally. They are expecting quarter one revenue of $11.79 billion, non-GAAP gross margin of 75.8%, non-GAAP operating 53.9%, adjusted EBITDA $6.64 billion, EPS $10.40, cash from operations $4.55 billion, free cash flow $4.32 billion. Next quarter expecting revenue of $12.25 billion, non-GAAP gross margin of 76.3%, non-GAAP operating of 55.4%, adjusted EBITDA $7.1 billion. X is getting clobbered. Watch for any updates on them in the pawn. Yeah, X is getting molly-whopped right now. Bow, 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 bow. Adjusted EBITDA $7.18 billion. EPS next quarter expected to be $11.11. Cash from operations $5.9 billion. Free cash flow $5.79 billion. Full year guidance revenue of $50 billion, including contribution from VMware. Adjusted EBITDA 60% projected revenue, implying $30 billion. Since last quarter, December 7th, Broadcom is up 52%. S&P is up 11.9. XLK is up 13.9. Near-term options imply 8.2% move. Last 4 quarters, gain of 2, loss of 5, gain of 3, gain of 6. Revenue has beaten 16 of the last 20 quarters with 1 in line. EPS has beaten 18 of the last 20 with 1 in line. Forward quarter revenue has beaten 12 of the last 20 with 1 in line. Ex-USW says meeting with Nippon yields no progress. So they haven't really moved too much on earnings. Broadcom has not moved too crazy on earnings, still pricing in about 8%. So kind of high, but if they have a crazy chip beat, anything is possible. Damn, they're pricing in a lot. Yeah. 120. Is that 128? 125. We'll go 125. I will just do 128. My numbers yesterday were matching up good. $128 is expected. So one direction, the market maker believes Broadcom can move $128 both ways, either way. That is what is priced in. So that is expected. Our ghetto standard deviation, that leaves us with $256. So add that to $13.97. That is $16.53. And those are going for the low, low price of $1,700. So we're going to pass on that, Bob, and then $200 lower to, what is it? $250? Yeah, come on, $250 is like what, 111, let's say like 1150-ish. I'm eyeballing, but I think these are still going to be mad. Yeah, these are too expensive. I don't think you could play it. If you really got balls, you could play the shares afterwards. Or you can, if you want to play one standard deviation and you have the budget, you can, but I don't think there's any low risk, high reward plays on there for the options. I'm going to have to skip that one. The put expiring tomorrow is only 100. That's a lot for one day. And then remember, they don't really move that much. The biggest earnings move Broadcom has had in the last year has been 5%. So we'll see. A stock split would be good. Again, you might be able to play it after hours, but if they do have but that's the thing. They're like one of these chip makers. They could have one of those beats where they just go insane. So that's the only caveat to this. But I just think the budget is just too expensive. So that is Broadcom, play number 1. Any questions? Any questions on Broadcom? Do 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 do. I can't type. Costco. All right, no question. I'm not playing it. Yeah, no play for Joshua. Too expensive. All right, next one is Costco. They've been on a tear. I mean, the stock's up, almost 50% on the year? Kind of crazy. Since last quarter, Costco comps related to monthly December 9.9, January 4.5 as previously reported, February 7th. Revenues expected to be $58.84 billion, gross margin of 10.6, SG&A 9.1, operating margin of 3.5, EPS $3.58. Quarter 3 revenue, total company comps expected to be 5.0, revenue $57.42 billion, gross margin excluding fees 10.7, SG&A 9.0, operating margin 3.7, EPS $3.61. Since last quarter, December 14th, Costco is up 20.4, S&P is up 8.2, and XLP is up 4.6. Near-term options imply 4.9% move. Last 4 quarters, gain of 4, gain of 2, gain of 4, loss of 2. Revenue has beaten 15 of the last 20 quarters with 1 in line. EPS has beaten 15 of the last 20 with 2 in line. Costco. So this one, they're not pricing in a lot, but they have also moved a ton recently, and they don't move a lot for earnings. So remember, the problem with Costco is that they give like a quarterly or a monthly update like before their earnings. So like they kind of already reported, if that makes any sense. So let's say 25 plus 24, 49.30, 41.50. We'll go with $50, $50 priced in. So less than 10%. $50 is the expected move either direction. That is what the market maker and option chain is expecting. You double that up, that's 100. So literally 884 would be the number you'd want. And that's $300. Wow. And then 684, $80 as well. Kind of the puts aren't bad. The puts are very tempting, but that's just because they ran up. Remember, they had special dividend and a couple of other things. It's there. Again, only way is if they have a big move. The options aren't priced too bad, but Costco's just not a big earnings mover. So no play for that. Any questions? But not the worst. Any questions on Costco? D D D D D D D D D D D D. Richie, welcome, baby. Coming back with the peach, baby. Let's go. All right. No questions. Then we move on to the next one. Marvel chips. So they've recently ramped up with all the other chip makers, but they're expecting quarter 4 revenue of $1.42 billion versus guidance of $1.42 plus or minus 5%. Non-GAAP gross margin 63.2 versus guidance of 63.5 to 64.5. Non-GAAP operating expense 434.8 versus guidance of 430. Non-GAAP operating margin 33.7. EPS 46 cents versus estimate of 46 plus or minus 5 cents. Cash from operations $612 million. Guidance next quarter expected to be $1.38 billion. Non-GAAP gross margin 63.8. $1.8. Non-GAAP operating expense $453.3 million. Non-GAAP operating margin 31.0. EPS 41 cents. Cash from operations $569.7 million. Since last quarter, Marvel is up 42.4, S&P is up 12.3, and XLK is up 13.8. Near-term options imply 11.5% move. Last 4 quarters, loss of 5, loss of 7, gain of 32, loss of 5. Revenue has beaten 17 of the last 20 quarters with 1 in line. EPS has beaten 14 of the last 20 with 5 in line. Forward quarter revenue has beaten 11 of the last 20. Forward quarter EPS has beaten 8 of the last 20 with 4 in line. So, yeah, they're pricing in more than they've moved on the last 2 earnings, but it was about a year ago. That was like they got one of the first big runs off of the AI stuff. So they are part of the AI chip stuff. Yes, this is not Disney's Marvel. This is a chip company. So 84. I'm looking at 1010, 1050. We'll go with 1030. 1030 is priced in one way. So more than 10% is priced in on the stock right now. So 2060. Jeez. So $104, $105 would be 2 standard deviations to the high side. Whew. Still 130. Those are kind of pricey, my brethren. Yeah, those aren't cheap. That one might be better with shares, honestly. Let's see. So the puts, we said what? 2060? Be 64, 25-ish? No, 64, 63. Damn. The puts are not bad at all, Habibi. Those are worth more. It sucks because these are only weeklies. Oh, I grabbed that at 14. All right, I'm going with one put. I'm not going with the calls. I do think they could do really good, though. If they've come out last time, because last couple earnings, they just didn't have good guidance. If they have good guidance, I think the stock could move like 30%. It's still pricing in a lot, but it's expensive for that. Might as well go with the continuation. But I went with the put. $64 put at 14 cents. Like Batman. All right, that's Marvel. Any questions on Marvel? No calls. That's MRVL. They report after the bell today. Any questions on Marvel? Next week. Next week contract. Anybody else? Do 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 do. Oh, daily double. Okay, I'm sorry. All right, next one is MongoDB. So they're expecting revenue of $437.2 million versus guidance of $429 to $433. Non-GAAP gross margin 76.2%. Non-GAAP operating margin 8.6 versus guidance of 8.2 to 8.8. EPS of 46 cents versus guidance of 44 to 46. Ending deferred revenue $377.4 million in revenue. Billings $494. Cash from operations $30 million. Free cash flow $31.1 million. Total customers 47.37 million. Next quarter expecting 452.2 million. Non-GAAP gross margin 76.1. Non-GAAP operating margin 11.7. EPS 62 cents. Ending deferred revenue 363.4 million. Billings 437.5. Cash from operations 62.3 million. S&P is up 12.3. Hold on, ADM popping. Archer Daniels with a pop, kind of decently big. ADM, that one I'm going over is MDB. Wait, ADM to release fourth quarter on March 12th. So they're doing earnings next week. So remember, I think they had a delay. Wow, yeah, so they're moving on the news that they're actually going to file. So Mongo, this is the one we're going over now. So since last quarter, December 5th, they're up 1.2. S&P is up 12.3. XLK is up 14.3. Near-term options imply 11.7%, 13.7% move. Last four quarters, loss of 11, gain of 3, gain of 28, and loss of 8. Revenue has beaten 20 of the last 20 quarters. EPS has beaten 20 of the last 20. Forward quarter revenue has beaten 18 of the last 20. And forward quarter EPS guidance has beaten 10 of the last 20 with 2 in line. Wow. So just pricing in a ton. And it's an expensive stock. I don't know if we'll be able to make a play. But they are underperforming, which is interesting compared to the SPY on the quarter. 410, 30, 60, 95. Whoa. I guess there's a wide spread. 30. I'm getting $60. We'll go with 60, make it easy. So $60 is priced in one way. That's more than 10%. 10% would be $41. So 120 is 2 standard deviations. That'd be 530. That's going to run you a cool $400. So a little too pricey for me. And then 120 to the downside. It's like, what, 290? 96 cents. The 280s aren't bad. 67 cents. Oh, and they were there from that last earning. They just got to give that up, though. That one could go both ways. Calls are expensive. Puts, if you're willing to spend that much money, it's all on you. Is it a sympathy to snow? If that's the case, then those puts maybe. Because the puts aren't priced that bad. We did go over Broadcom, yeah. Yeah, 290 would be the downside one. All right. Well, I'm going to skip that one. It's not bad, though. Next one, we already have a play from a while ago. Any questions on MDB? Any questions on MDB? Costco, I don't know. I haven't made a play. Only one I made a play on was Marvel. I grabbed a Marvel put, I believe. So any questions about MDB? Do dee 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 dee. Come on, Buckaroo. Any questions, Buckaroo? No? Okay. Well, next one is DocuSign. Yalla. So they're expecting $698.3 million in revenue versus guidance of $696 to $700 million. Non-GAAP gross margin 81.3 versus guidance of 81 to 82. Non-GAAP operating margin 22.9 versus guidance 22.5 to 23.5. EPS 65 cents, cash from operations 124.9 million, free cash flow 92.8 million, billing 762.7 million versus guidance of 758 to 768. Revenue next quarter expected to be 700.5 million in revenue. Non-GAAP gross margin 81.5, non-GAAP operating margin 24.3, EPS 68 cents, cash from operations 215.8 million. Free cash flow, $189.9 million, billing $683.5. Since last quarter, December 7th, DocuSign is up 12.9, S&P is up 11.9, and XLK is up 13.9. Near-term options imply 9.7% move. Last 4 quarters, gain of 5, loss of 4, loss of 2, loss of 23. Revenue has beaten 17 of the last 20 quarters. EPS has beaten 17 of the last 20 with 1 in line. And forward quarter revenue has beaten 17 of the last 20 quarters. So they're kind of pricing in a lot, but they have had one big mover. I do like their chart, and then they have all that buyout news. So they're pricing in 615, 605. We'll go with 605. We're not quite there. So 605 is priced in one direction. So a little bit more than 10% is the expected move on the stock. So 1210 would be 2 standard deviations. That'd be 65, 66 bucks almost exactly. There's literally no $66 contract. Well, that's weird. It's cheaper than the price of this stock, which is kind of decent. And then 1210 to the downside is like what? 43, 41, 41.80. Puts are cheaper, still kind of juiced. I don't think I'm going to make a play on that. I have an old docu. So you guys remember we made those like buyout plays? I think I got like a yearly. So I'm up on it. I have an old play. I'm up like 30% on it. I have an old January 100 that I bought for 44 cents. So I already have this one. Not just from all the buyout news, but other than that, I don't have anything. So I'm just going to hold that one. Call it a day. That is for DocuSign. Any questions on DocuSign? Any questions on DocuSign? We're going through the list, baby. We're going through the list. DocuSign. Wasn't the buyout price at 70? I don't think there was a price on it. I just have an old call. I didn't make that play anytime soon. I just have an old call I've been holding. All right. No call. You did miss Broadcom, unfortunately. So the next one, I don't even have it up. The next one is IoT. Samsara. So they're expecting quarter four revenue of $258.3 million versus guidance at $257 to $259. Non-GAAP gross margin 73.1. Non-GAAP operating 2.0 versus guidance at 2.0. EPS 3 cents versus guidance of 2 to 3 cents. APR $1.08 billion. Cash flow from operations $4.9 million. Adjusted free cash flow $1.59 million. Deferred revenue $55.1.6 million. Billings $306.3 million. Next quarter revenue expected to be $267.1 million. Non-GAAP gross margin 73.6. Non-GAAP operating margin loss of 6.1. EPS of a 1 cent loss. APR $1.14 billion. Cash from operations $7.1 million. Adjusted free cash flow 4.2. Deferred revenue $564 million. Billings $285.1 million. Since last quarter, November 30th, IoT is up 30.4, S&P is up 12.3, XLK is up 13.8. Near-term options imply 19.2% move. Last four quarters, gain of 26, gain of 13, gain of 28, gain of 15. Revenue has beaten 8 of the last 8 quarters. EPS has beaten 8 of the last 8 quarters, and forward quarter revenue has beaten 8 of the last 8 quarters. That one's insane. That one is absolutely insane. They're up 30 on the quarter. They're pricing in 20%. Their lowest earnings move in a year was 13%, and they've beat on guidance, EPS, and future and revenue on every quarter for the last 2 years in a row since they've been around. So they actually got a good track record, and they have been just going nuts. So IoT, 33.5. 720. I'm pricing in a lot higher. That's a lot higher. We'll go with the 680s. So 680 is priced in one direction. That's like literally 20%. So 1360. That is 2 standard deviations. Leaves us with 47.35 to the high side. Habibi. Yeah, those are kind of pushing it. Those are kind of pushing it, man. Because it sucks. Even if you get those played, those are only weeklies. And then to the downside, we said what? 1360. Oh, wait. I did the wrong number. I did 33. Yeah, the number is 47. Yeah. I did that wrong. Is it 1360? $20. I think limited downside. Not worth. I kind of like the calls, but I think Samsara might move. I think this one just IPO, great track record. It's pricing in a lot. I don't think the options are that good, but I think the company is going to move. So, I mean, take that as you please. All right. Yeah, no play on that one. Maybe shares, honestly. I'm kind of down for shares, but we're just going to risk, what's it called? You're just risking, what is it? $13? I'm kind of down with shares, actually. What do you guys say? This one's going to either die or not. Actually, what are the puts at? Hypothetically. Shares, just a risk, but I like, because again, I like them. They have a good earnings history. It's a new IPO. They're either going to kill it or they're going to die. Shares plus insurance is expensive. I was just looking at those. That's why I'm looking at the dailies. It's kind of like really pricey. It's pricing in how many? We said $13 or no, $6. Yeah, no. That's only it's pricing in 20%, but that's still kind of small. So $600. 20% is 13. So yeah, if you're risking what's priced in, $600 either direction. That's for IoT. Samsara. It is near all-time highs. The options are just overpriced. Options are good because then you get limited downside. But I don't think any of those options will really hit. It just all depends. We'll come back to that. I'm considering shares. Now this one. Any questions on IoT? So PBR is tomorrow. I don't have the earnings preview, so we're going to skip that one. I mean, it's pretty much state-owned. And then the next one is Big Bear AI. BBAI. Is there any questions? Yes. All right, no questions. Time for BBAI. Are you guys ready for this one? I feel like a lot of people are excited about this one, no? You guys don't like BBAI? I feel like a lot of people got money riding. This could be like Sound. This is one of those hype AI plays, bro. So here's the deal. I don't have a preview, but I have this. I have a price target of $4. This was an analyst who made a report on them. I could read you this, but I don't have any like earnings preview. Would you guys like to hear from the analyst who has a $4 price target on BBAI? So revenue outlook improves visibility, should excite investors. Big Bear is scheduled to report earnings results. We expect to show meaningful sequential improvement from third quarter 23, while important that fourth quarter results demonstrate both revenue growth and improvement in profitability. We believe investors will be heavily focused on management commentary, including 24 outlook, which would reflect the pending acquisition of Pangiam Intermediate Holdings, which should add $40 million of annual revenue at gross margins of 30. In closing, we believe cross-selling opportunities, improved economies of scale with fourth quarter operating results, additional color on the Pangiam transaction. We believe investors should be able to extrapolate the path to annual profitability, which could occur as early as 24, we believe. In addition, we believe the company is likely to provide an update on the current sales pipeline as well as previously announced partnership with L3 Harris. All in all, we expect optimistic tone to call, which should drive investor optimism for 24 and beyond. We recommend investors accumulate BBAI ahead of acceleration in revenue growth in 24 and more defined path to profitability. Remain buy rating with $4 price target. Operating expectations, we expect the company to report fourth quarter and currently modeling revenue of $41.6 million, slightly below forecast of $42.8. Our gross margin estimate is 28.1. It's up meaningfully from third quarter, 24.7, but below the 29.2 a year ago. We believe there's significantly room for further gross margin expansion, potentially exceeding 30% over time, which could be aided by the recently acquired Pangiam Holdings. as sequential increase in revenue as gross margin are only partially offset by higher operating costs. We model adjusted EBITDA of $400,000, consistent with $0.5 million on the street. We believe a second consecutive quarter of positive adjusted EBITDA is likely to be viewed favorably by investors and suggest the company could potentially generate full-year positive adjusted EBITDA as early as 24. We will wait for the deal closing and fourth quarter results before adjusting our model for the inclusion of any Pangian updates. Yeah, that's BBAI. So we'll see what's priced in. AI, I think it's going to play like sound, honestly. So if you wanted to play sound, that was all you, but I think they're going to trade the same, probably be priced in a lot too. It's pricing in 94 cents. That's more than 20%. That's 30% priced in. Yeah, 90 cents. So $1.80 would be 2 standard deviations. That'd be like what? $4.60? Very pricey, even on a daily, bro. Yeah, that's expensive. I'm not down. But afterwards, and they'll probably get an upgrade if they beat, again, I think adjusted profitability and EBITDA, adjusted EBITDA actually becoming profitable. I think that's a big deal for them. Dormant BBAI? No. Alrighty, that's Big Bear. And then the final one. Because, again, I don't even think there's any cool companies in the morning. I believe this is our final one. The final one is Gap. Kanye's former stomping grounds. Gap. GPS. So they're expecting comps a loss of 1.1, revenue 4.22 billion, non-GAAP gross margin 36.0, non-GAAP operating expense 33.7, operating margin 2.5%, EPS 23 cents. Since last quarter, Gap is up 43.3, S&P is up 13.2, XLY is up 8.9. Near-term options imply 14.5% move. Last 4 quarters, gain of 31, gain of 7, gain of 12, loss of 6. EPS has beaten 14 of the last 20 quarters. Revenue has beaten 11 of the last 20. And short interest is 13%. Wow. They're pricing in a lot. Just literally, I didn't know they moved like that, the last one. So literally last earnings, they moved 30%. That's quite a bit. So Gap is pricing in 1924. 270? Yeah, that's what I'm getting. 270. So they're pricing in more than 10%. They're pricing in a lot. 270 is priced in for one direction. That's 540 for 2 standard deviations. That's like what? 2460? 16 cents. It's actually cheaper than the price of the stock. That's the only thing that's good for them there. And then I think the puts are limited. This is for a 40% move. I don't think the puts are worth it. This one's not as bad, honestly. So most of the time it's pricing in like 40%. It'll cost more for one option than a share. In this case, it's not. Gap, it has good upside. I don't know. If you really wanted to throw 18, I'm not against the call. I wouldn't grab the put, though. I do like Samsara shares as I think that just has the most potential to just go nuts. That thing could also die too, though. It's just IPO mode. That's the scary part about it. But yeah, I like gap calls. I don't think I'm going to play them. I think only play I made so far was Marvel put. Are you thinking short Samsara? I'm thinking long on there. Just off of earnings beat. They've been kind of pinned. But then I'm kind of scared of that downside with shares. But then the weeklies are really expensive. It's an expensive play to insure. Yeah. Yeah. All right. No play on the last one. I think that's it. There is SPR. I'm going to come back to Samsara. I'm just trying to find a way to play that. Or I can go small. That would be the simple way to play it. But I want to play with a decent size. But then again, I'm like, the downside is really, really bad on that play. Unfortunately. Oh, there's Smith & Wesson. I don't have a preview for them. Let me price in PBR for you. So PBR's after the bell. They're pricing in a lot. Literally 68 cents. 65 cents. 65. Oh, $1.06. So they're pricing in 5. A little bit less than 10. A little bit more than 5. So then $1.20. 17.90. 17.90 would be too standard. I mean, again, it's kind of cheap. Upside only is what I would do. Consumer credit just came out, 19.49 billion versus 1.5. Estimate was 10 billion. So SPY's dumping on that. I don't know. Very strong consumer. But remember, last time it was really bad. Everybody had a really weird reaction to it. But yeah, $1.20 would be 2 standard deviations on PBR. You said the next one's Smith & Wesson. I don't have a preview. Looks to be pricing in $1.60. $1.60 one way, a little bit more than 10%. $3.20. So 16.60 is 2 standard deviations. 15 cents for the 17. It's not bad. Again, upside only. I don't think I'm going to play that, though. That flush was off consumer credit. Consumer credit was almost double expectations, but I'm kind of scratching my head why we dumped. Again, last time it came in weak, I do want to say we ripped. So, but I would take it with a grain of salt. Remember, we do have data tomorrow morning. That will change everything. Bro, I think I have a Samsara in my house. I think Samsara is how I hook up my blinds to the remote. But I don't know. So that's the only one I want to play. I don't have a play on it now. I'm thinking shares. It is also power hour. Yeah, right on the dot. Like 2 minutes ago. Their cousin works there. I swear they don't do shit. I'm trying to make sure it's the company I think it is. Their cameras. I think they just make like sensor devices. All right. I did 300 shares of IoT. 33.86. I'm going to hold those for earnings. Marvel, I only went with a put on Marvel. That's it. It's going to move 10%. That's it. I think if anything is going to move 10% up or down by today after hours, even tomorrow, it'll be this. I think they have upside potential beyond that. Who was the other one? Marvel's going to move after the bell. Costco's already moved. I think Marvel, MDB, and then IoT. Maybe Docu and Gap, too. Yeah, that is greedy long type beat. I like the pin, but the downside is real. That's why I'm still... I'm going through the option chain. Like, you could grab... You gotta get, like, the 28s, but it's still, like... You're going to spend, like, $300-$400 to protect it, and then there's still, like, a gap. No BBAI, no. I think that's going to move like sound more so than anything. Costco, I don't think Costco is going to move that much. I think Costco has already had earnings. So if you're not, like, Costco gives like pre-updates and they've already been moving. They gave an update on like February 7th. So usually like Costco earnings don't really bring in anything new. And CCJ, that's been up in a good day. You sold Costco Premium? Ooh. That kind of sounds like a good idea. Very tempting. Don't bet. I think I would just sell premium on it. Marvel, the puts were the only ones with a good risk to reward. The call, I think Marvel can do if Marvel comes out in this earnings, they actually do good, it's going to be amazing. But the puts are the only one worth the price. I think I only spent like 15 or 20 bucks. So not bad. We only made a couple of earnings plays. So literally Marvel, I bought it for $14. And then I'm doing 300 shares on IoT. And I think I'm going to be risking like 1,000 to 1,500 on that with the shares. But that's it. Those are my only earnings play. And then besides that, I made a HPQ. But we are done with that. Astra Space halted, news pending. ASTR. All right, Chad. Well, it's Power Hour, 52 minutes. Earnings previews are done. A little uneventful. It's Thursday. There's still big earnings after the bell. Again, Broadcom and a couple of others. I will be here after hours. I do got to get going a little quicker again today, but I'll have some time with these earnings. And then we'll go from there. How bizarre. How bizarre. No? Okay. But on that note, I don't know. Can I go to the bathroom? Follow me on Instagram at the Trading Fraternity. Am I telling you all of this too soon? What is CNBC's?
Time in Europe.
Oh, Powell.
We clearly need more evidence.
Okay, I'll be right back.
More data.
And
we know that this data will come in the next few months. We will know a little more in April, but we will know a lot more in June.
June. So now 2 days of testimony by the Fed chair, multiple central bank speakers, and a bunch of data. The market is pretty much where it was, a 1 in 4 chance of a May cut and a 3 in 4 shot at 1 in June. And Mike, I think there might have been some concern going into all this that Powell may end up a little more hawkish, but he did not.
He did not, for sure, Steve. And I think any hawkish turn that might have been anticipated would have had to be a total change of the story and the framework that they've been using for a while, wouldn't it? I mean, they've been sort of pointing out the fact that just on paper, their policy's restrictive based on where inflation's gotten to, and the normalization process can be slow and measured, but it should probably start before too long.
Yeah, and all of that is predicated on the data behaving the way it's going to be. I really like the way Joe said that the risk is not necessarily going to be in the economic data. Of course, we have the jobs report tomorrow. That's supposed to show a step down from that really unexpected 353,000 in the prior month to around 200,000 this time around with a low unemployment rate. But the market, I think, is really interesting. It is fine with what has happened, which is this extension of when the Fed will cut. And also, by the way, a decline in the number of cuts you're going to get there. And the market has kind of shrugged its shoulders at it. Of course, maybe it wants a little bit more, but it also doesn't want the other side of this, Mike, which is the idea that if the Fed is cutting and cutting fast and cutting strongly, it's doing so because the economy is weak.
Yeah, that's for sure. Steve, appreciate all the color. Thank you very much. And, you know, that's something we've talked about, Cameron, which is a slow and kind of grudging rate cutting cycle is usually, based on history, the best kind for stocks.
Yeah, we saw that 95, 98, 2019, all times when the Fed cuts rates by 3 times, markets continue to rally, hit new all-time highs by the time that the Fed was done, effectively saying no recession here. The thing that's really interesting, though, is that in each of those times, there were recession fears. PMIs were declining. We had this overarching fear that the Fed needed to do something, even though it didn't end in a recession. This time around, we're seeing PMIs start to reaccelerate, start to bottom. So I do wonder if the data really is going to work in their favor to cut by May or June as the market is expecting, mostly as we continue to watch things like gasoline prices moving higher. They're up 10% in the last month and a half.
There have been a lot of these mismatched subcycles, you know, over the last few years, right? I mean, you saw manufacturing go into a tailspin. I mean, one of the cleanest reads on what the market has been pricing is that we had the recession. It just really didn't register fully as one, or it was an earnings setback, but barely. You had the 2 quarters of marginally negative GDP, and then that's all you were going to get, at least for now.
Again, it's an excellent point. 2022, you had a hard landing for risk assets. Why? Because the market did its job looking into the future and seeing the earnings recession. And I think the place that we're in now is where the market is actually leading the economy to a certain extent. I don't see it's that the economy is leading the market. And just in terms of what we were receiving from Chairman Powell today, I mean, this is as dovish as you were going to hear the chairman since, well, December, right? When he was extremely dovish. He just didn't indicate that rate cuts were coming. He talked about Basel III, which was a major surprise. He also suggested that the Federal Reserve would contemplate moderating the duration on securities. So he even touched on the balance sheet. I mean, he really gave the market everything that they were looking for today.
It's true. I think it all does knit back, though, to where the market has reached at this moment when we've gotten this broad acceptance that everything's working and everything's favorable. And NVIDIA is not the whole story. At least it's trying not to be every day, but it's kind of skyscraping in terms of its technical position, its market cap. And everybody seems to be willing to say, yeah, but it's not that expensive because the earnings keep going up, right?
But look how loose financial conditions are. It'll be really interesting next week if Powell has to answer the question about broad financial conditions. They're easier than they were when they started hiking rates. That's not just because of equities, but it's also because credit spreads are really tight, which just means that this is not a market that necessarily is sending you a signal that the Fed is too tight today and needs to act.
That is true. I do think, though, that the targeting of financial conditions to me is like this bank shot where they have to use it to hope inflation does what they want it to do, or jobs do what they want them to do. Whereas if inflation itself is managing to head in the right direction, we don't need to play around with the other side. I don't know. I mean, look, we were at an all-time high in 95 when they did cut for the first time. So it's not that strange.
And let's remember, generative AI helps the Federal Reserve because it's disinflationary in its nature. I had a fellow money manager say to me the other evening, why are you worried about Apple and Alphabet? Right now, it's the semis that are building out the generative AI, and the story will evolve into Apple and Alphabet delivering to the consumer the ability for generative AI to elevate productivity.
I mean, is that because GPUs aren't in the CPI basket? I mean, basically, it's somehow a disinflationary thing today in the here and now. Yeah, it's a question. I mean, we got the productivity numbers today. I think on a near-term basis, it's hard to put a lot of weight in a quarterly productivity number, but they're helping at least.
And look at the different paths between semiconductors and hardware. So that's where you're contrasting something like NVIDIA versus Apple. Eventually, the trade will be go into hardware, which is unloved and oversold, and go and leave semiconductors, but we don't think the time is for that yet. There's still likely upside to the semi-cycle, even though you've seen this move so far so fast. Short-term digestion, but the reality is we're still probably a little bit away from this being integrated into the hardware.
Which brings us actually to Broadcom, which is going to report today after the bell, and it's been caught up in this whole move. Obviously, it's more expensive than it's ever been on earnings. It's being given credit as an AI play, Joe, even though, what is it, about a quarter of the revenue are really AI? They bought VMware. 15%. It's a roll-up of a lot of other things. So where does that leave this field position-wise?
Well, the growth on this company has been in decline for the last 2 years. 85%, as you cite, of the business is non-AI oriented. And remember, last earnings report, the stock was down nearly 4%.
Thanks, CNBC. They gave me I'll keep them on for a little. I'll give them till commercial. They've been giving me a good break here. I'm looking at these puts for IoT.
Generative AI is really going to begin to grow as a percentage of our overall revenue. So, it's going to test, I think, maybe the resiliency of the AI story. Look, the healthiest thing for the market would be a correction. I'm not afraid of a correction because I think a correction will be met with the response that we had on Tuesday. But Broadcom, AMD, NVIDIA, they are the center of the universe right now in building out this generative AI infrastructure.
I mean, I guess really the question is the market's hunger for the next play, because it looks as if NVIDIA's gotten away from a lot of people, and Dell last week, just absolute afterburners as soon as it seemed like it was in the mix. I guess where does that leave us?
I mean, that's what will eventually separate the men from the boys. NVIDIA is such a unique story because its earnings estimates for 2025 have gone up by 4x in the last year. You look at Broadcom, they've gone up by 25%, which just means a lot more of the upside in the stock is driven by valuation re-rating. So you need to see earnings estimates to keep going up to make sense of that valuation. Eventually, earnings estimates will peter out. You'll see some loss of momentum, and then we'll look at the whole landscape and have to say who are the areas most exposed to D-rating because we've put multiples up too high.
Sure. Would a 7% move in either direction tonight surprise anyone?
Oh, sure.
No. Because that's what the option market is actually suggesting, which is not as volatile as you might think.
Well, no. I mean, what would that bring you back to last week prices if it went down?
Grinder on the high.
Yeah.
Grinder,
this
fourth
is
quarter revenue,
it's kind of where it's a sort of a
72
higher
million.
metabolism economy and market that we have found in 2020.
They came out with earnings early.
All right, good to talk to both of you. Appreciate it. Thanks, Mike. All right, let's send it over to Christina Partsinevelos for a look at the biggest names
Grindr
moving
earnings
into the
out.
close. Christina.
Well, talk about a plunge. Victoria's Secret shares are heading for their worst day on record after the company warned of weaker demand, especially in North America, even as the company did beat its latest earnings report. JP Morgan cutting the stock down to weight and slashing its price target
came out
to
earlier.
$7 from $15 a share. And you can see shares are trading at $17.94 right now. Analysts over there cite the increasingly cautious economic backdrop and expect margins to remain constrained over the next year or two. And that's why shares are down a whopping 30%. On the other hand, though, Burlington is at its highest level in more than a year after improved inventory levels and higher sales. The discount retailer's guidance also came in ahead of estimates, with CEO Michael O'Sullivan expressing confidence in the year ahead, despite uncertainty in the economy. Despite the uncertainty we just heard from Victoria's Secret, Burlington shares are up 8%.
Margin in 24.
Mike?
All right, Christina, thank you
That
very much.
sounds good.
Speaking of
All
the
of it
consumer,
sounds
up
good.
next, countdown to Costco. The big box retailer trading at all-time highs ahead of reporting results in overtime.
Alrighty. Again, Grindr just had earnings released 40 minutes before the bell. And then they were talking Broadcom. Everybody's kind of focused on that. There's still a couple of other ones. We made all of our earnings plays for now, but Chad, the day is almost done. We have less than an hour. Remaining. What's Grindr? It's okay, man. It's okay, man. I know you know what Grindr is. You're not gonna throw me off the trail. You're trying to throw the scent off the trail. It's okay. What's Grindr? Oh, I don't know what Grindr is. You acting like Meek Mill right now. Yeah, Meek Mill on Twitter, like, oh man, what's that? I don't even know what that stuff is. Come on, that's pretty funny. It's pretty funny. It's okay. It happens. Marvel 60 Warren told. I think at Marvel, they had a good earnings a year ago. So in their last couple earnings, their guidance hasn't been hot. But if they come in with a hot guidance, I do think Marvel can move. Unfortunately, the contracts are expensive. You say Meek Mill buys Grind? No. Said someone's acting like Meek Mill with Grindr. Like, what's Grindr? FBI agents delivered grand jury subpoenas to current and former ADM employees in Illinois this week for accounting investigation. And then they said they're releasing earnings next week. And then those Krogers are up 215. You're in the money on the Krogers. We get 1 week in the money, or you could walk away now. Up to you. Is ADM going down on that? Yeah, ADM is starting to flush off that. No news on SPY. There was a lot to take in, though. I mean, we had the ECB. You had Japanese stuff. What else did we wake up to in the morning? There was one more. Jobless claims was in line. China data was really, really good. And then we were carrying over from all the data yesterday and then a little bit of the pre-earnings hype. And then the chips taking over. People still kind of worried about Apple. And then the Powell comments. People liked what Powell was saying about Basel. He didn't really say much here today, too. And then all just getting ready for the data tomorrow morning. Yeah, ADM, they were already clapped off that again, and then people were getting excited they were going to release earnings there a little bit ago, but then they all came down. Till the sun comes down. Airbnb, where do you go, Airbnb? What time for what? Tomorrow we got pre-market 1 hour before the bell. I should be live tomorrow morning early. Non-farms, we usually go live, so I'll be here before the bell and before the data gets released. I will go live. But tomorrow morning, there will be data. Tomorrow's data is significant only as far as it doesn't come in line. So if it comes in line, then that's it. We're just back to the plan. Me and my mama hopped in that stolen U-Haul van. You know, you just go back to reacting how we were. Some people won't like that. Some people might complain and cry about it because then the market just going to go back to this all-time high mode with nothing getting in the way until Tuesday CPI. But for the most part, should be if it moves outside of the lines, should move. But then again, I say that so cautiously because it was your boy, the last non-farms. It was huge, man. It was like absolutely huge, and the reaction was all over the place. So just all depends. Just all depends. Carvana's still dropping. I was jumping. Or no, Carvana's on the high. They were dying earlier. Wait a minute. I read that wrong. And then SPY getting a couple candles down. Let me see. You're saying the charts are screaming downside. Well, walking, man. Can you just like calm down in the chat though with the chats, you know? Post your plays, post your ideas. Stop getting into arguments. It was like 5 hours ago you were threatening to blow up Wall Street, so I need y'all to work. Y'all need to work it out in the chat, man. I don't want anybody banned, but can y'all just like come together and just post your play, post your idea, and that's it, man. That's it. And just ride with it, but like, you know, all day is a lot. I read both of the chats. That's how we got here. And then how much time? I got 30. I'm looking. I have one more play I'm looking at. But that's why I'm so quiet. Till the sun comes down. I see you in both places. I do. My goodness. VSCO, they had bad earnings, and I think bad guidance. I only played the upside on IoT shares. I'm up $10. I could even, I mean, maybe if it does one of those stupid, like crazy pre-earnings pops, I could get out of them. But we'll see. But that one's a pretty risky play. That one just, I think there's going to be dollars there to move. Same thing with a couple of the other ones. I'm kind of down to, honestly, though. Wait a minute. Now that I think about it, why not just trade Marvel for shares? It's a little bit more expensive. It was just at $60. That's the part that sucks. See, at least IoT has been pinned. But this one's pricing in a lot. Yeah, you're about $1,000 of risk on 100 shares. It's expensive, but it's the same idea. If the options are too expensive, and you are even, but they're both near highs. So I don't know. But honestly, maybe even shares on Marvel wouldn't be too bad of an idea. Again, the cheapest of the calls. But these have already gone nuts. Those are new. We picked up shares. Yeah, I like the shares. It's not that bad. It's just Marvel may have already had its earnings move. That's the thing that sucks about it. I don't know. Yeah, there's only 30 minutes left. Today has flown by. Marvel calls. Marvel calls. You're gonna pay a lot to be out of the money. I just think dollar for dollar, you want to move. The out of the money's on Marvel. If they guide up really good, then they might hit. But in general, though, I think Marvel can move $10, $15, one standard deviation either way. So that's the one thing I'm thinking about. But if I make that play, then I'm either thinking average on Vanny, or I could go put it towards a Marvel play instead. Because I can still wait to average on Vanny, but then again, I don't know. Vanny or Marvel. But Marvel's really scary just because it moved up $20 recently. Marvel is MRVL. You guys don't remember Marvel? They had that one. It was like right when NVIDIA first had their monster AI earnings. They were the second company to run up. Do you guys remember that? They moved from like 30 all the way to like 60 that first time. And then everybody got like really, really hyped off of them. So that's their part, but then ever since, their earnings hasn't grown the same way. That's why it's like if they come out with good guidance, then this could actually end up being huge. They guided down with China news, yeah. They're chips. $94. If it does good, they just need a good earnings. And then if they don't do good, they're going to get destroyed. Marvel by buying one of the puts. No, I'm looking at them. It'd be hard. You're just going to have a gap. So you could buy you could protect yourself to like 70, but the stock's at 84. So you're still going to take like $1,400 of risk. I'm just thinking I'm eyeing Marvel. Marvel or Vanny. Or we just go home and call it a day. Keep our risk on IoT. I just don't like the straight vertical on Marvel. That's the only part. That one earnings. Oh, I guess they kind of went vertical into it. U.S. House Committee approves TikTok crackdown bill on 50-0 vote. Watch if Snap gets a bid off of that. They approve the crackdown bill. 50-0. That's crazy. Snap and Meta. So does that mean, are they going to actually force the divestiture? That would be insane. Snap, it's moved. That news just came out, though, 50-0. So I don't know. Sounds like they should be banning it. You tell me. You tell me. All right. And then Spy's still holding up. We got 30 minutes left. Honestly, today's been chill. I mean, it felt a little aggressive with the new highs, but, I mean, most of the day you look at it, everything just kind of made one move and held. No Costco earnings. No. No Costco for me. Is Broadcom market cap big enough to move 2030? Maybe. I like that one lady was talking. Broadcom is more linked to its valuation. So they're at 650 billion. I mean, it's already pretty big, so they could still go up a lot, but you would need like the earnings to kind of reflect that. Like I think Marvel's still 72 billion. So they still got room to grow too, but they're already kind of big. Damn, IoT's even 18 billion. What is this? Yeah, Qualcomm low-key been a subtle ripper last couple days, hitting new highs. STZ. And there's Marvel. All right. I think we're going to skip them. I'm still tempted on the Marvel. I don't know, though. Maybe I need to just go to the bathroom, think a little, get a sip of water, look out at the trees. I want it. Broadcom will hit 500. Oh, my gosh. Kroger. You got your Marvel 110s. I might be down to play it after hours. But then again, I'm thinking either I still like the Vanny average, but Marvel is not just, if I knew the future, I would definitely play it. Because that's the one, if it breaks out, bro, that one is going to get everybody hyped. Otherwise, it's already moved enough off of the hype that if they don't come in with anything, then that's it. Flip the gold coin. Wow. I'm kind of down. Take the coin. Take it to the coin. I'm taking a risk. Dude, the other day I took out the JD. That's why I'm nervous, because I don't want to make it a habit, because I'm like, oh, hopefully I'm not going off of that one. But, dude, you guys, yesterday I murdered the JD. I absolutely murdered it. So that was a big earnings risk play compared to all the smaller option ones, but I would like the Chad one. JD was great. Dude, JD was fire. It sucks because I had so many losses on it. So, I only got to make, $2,000 net, 2.5. But that was like a $6,000-$7,000 total trade. So, most of it was just making back my losses. But, my goodness. So, they're good when they work out. But that play, too, that's the beauty of just never averaging down until the last minute. So, we'll see. Snap. I don't think that TikTok news got it moving yet. Let me go to the bathroom. Let me go to the bathroom and get the gold coin. We'll see. Rotor-Rooter. They're on commercial. More CNBC. This will be the most CNBC we've listened to in a day. 157. Nope. Nothing. Nothing. Rotor-Rooter. It's fun to say. CCJ keeps climbing. That one's good. Again, even the market. How much time we got? 20 minutes? 20 minutes remaining. And then the Celsius is, I'm going to push those till next week. You can get out of the Celsius now. You would walk away with what? $200 profit? Actually, wait, no, that's 1,000%. Oof. Hold on. Even after you could close the ghetto spread out now for 1,000%. 200 net profit between the plays, or you could push till next week and make an additional 200. Pretty much if the stock just stays up here. I think I'm going to close it. I'm going to close it and get the, I want to take the 1,000% though. I didn't know it was up like that. I was just saying I wanted to hold it. Well, I'll take 1,000. I'll leave 500 on the table, 200. I closed out of the Celsius. So normally the play was up 1,400%, but since I ghetto spreaded it, I didn't make 1,000% till it hit 1,400. So I'm out of the Celsius. All right. How was all? All right, I'm gonna go to the bathroom now. Wait, they're gonna do that thing where they come back and then they go back to commercial again. But I sold out of Celsius 5160
at an all-time high.
Okay, I'll be right back.
Follow me on Instagram. Phase 1 trial results
18 minutes left.
Experimental weight loss medication. The new drug is delivered in pill form and appears more effective than the company's blockbuster injectable weight loss drug Wegovy. Those shares now up nearly 9%. And Chemours is having its best day since last June, as the chemical giant says its preliminary results won't be impacted by its internal review. The probe found that top executives, including its CEO, altered some payments and deals to meet certain financial targets that were tied to their incentives. Shares fell more than 30% a week ago when the company put those executives on leave. Now, despite today's gains, the stock is still down around 11% from that initial drop. Mike?
Oh, quite a month. Yes, Pippa, thank you. Still ahead, new money, new management. Former Treasury Secretary Steve Mnuchin stepping in with a group of investors and $1 billion lifeline for New York Community Bank. Hear what he has to say about the company's future. Closing bell. Be right back.
Man, that was an awful time. Right was I just started to get flow, too. I was like, wow, this is great. But nah, they just did me like that. They did me like that. TMO on the high. All right, there you go. There you go. Perfect.
For our stock of the hour, a closer look at Novo Nordisk, quite frankly, the stock of the year. Shares of the drug maker soaring on the news that Cigna struck a deal with the company that aims to widen coverage of GLP-1 treatments. Abigail Doolittle joining us for more on exactly what's going on here. Is this why the stock's at a record high today?
It certainly is a piece of it for sure. I mean, we have AI and then we have the weight loss drugs. And so this is, of course, in that weight loss drug coverage area. But they are really the victim of their own success in some ways because it's such a big market at this point. This stock, if you can believe it, up 256% over the last 3 years. The bulk of their revenue, nearly $200 billion by the end of this year, is these weight loss drugs. That the demand is so strong for it that the prices have skyrocketed to some extent. So this is an attempt to cap that. So their PBM, Evernorth, that's the old Express Scripts, they basically will be offering their clients, basically employers, health insurers, a 15% increase cap. Now, what doesn't make so much sense to me here, and I don't understand, maybe you guys do, is they're saying they're going to achieve this in a number of ways, including helping people with obesity and coaching. But I thought the whole point of these weight loss drugs was that it's, well, I know it's not a pill, it's a shot, but it's something that you don't really have to take the tough measures of, say, exercise or eating less. But apparently that's a piece of what this is. So
well, I think you're supposed to. I just
you're supposed to.
Well, I think it curbs your appetite.
It does.
So then, therefore, like from that perspective, it does help. So, but what's so interesting, if you do the pill, in some ways you could argue be much more accessible. And
there is a pill by now?
They are working on it. So one of the reasons why we're looking at a record here is because a potential pill. They showed some new data.
You gotta like exercise and work and stuff. No. Fuck all that. She said, hold up. Wait a minute. Let me put some power in it. Rate cuts I'm recommending. I ain't been in this spot. Oh, okay. All right, man. This is E-Trade Pro, what you're looking at. So, Chad, I thought about it. I'm telling you, like, I get my moments of clarity in the bathroom. I didn't even take a shit. I just had to go pee. You know, I have a nice window in my bathroom. It's kind of weird because I'm like, do people watch me when I go pee? But they don't. But like I have a window. I stare outside the window and I look. I see the weather and all of that. And so I do want to play Marvel, but like here's my problem. I came to the realization that I don't want to wake up down $5,000 tomorrow because I'll be like, that would be a shitty way to start Friday morning. You know what I'm saying? But here's my plan. I was thinking 500 shares minimum because I was like, this is though with all the FOMO. I could put the options, but then if I hit the option and then I hit it and then I'm wrong, but I hit it, you know, that's what I was thinking. It is no bueno, but based on my intention, my desire, or the appetite I have for it, it would be a big play. So it's, yeah, I don't know. If I do the options though, I could still lose like $2,000 and then still be wrong. But then again, if it did really rip, I don't know. I am chasing at this point for sure. I should have just done this at $60 and then let it sit there. But this is right ahead of the event. So you're paying like a 3% premium on top. It's going up a little bit. I'm going to regret. Well, if I regret, then I'll really get FOMO because then I'll just be chasing. Or I could just play it after it reports and then hopefully we get lucky on a big candle down and then it's actually a good report. That would be the best way to do it. So, yeah. I don't think I'm going to play. I think I'll play it after. I'll wait. If I get my moment, my little window of opportunity, I'm going to play it. But if not, I don't think it's too much. Going to call. If it hits, it's going past 110. Contracts are 80, 90. Yeah, I could probably put a small one down. But then again, if it does, that's the thing though. If it doesn't hit, this thing is going to go down 10, 20 bucks. Or maybe not do anything at all. But even then, all of those will get killed. Play. I think I'm going to play it after. If it didn't, you'll lose 80, not 5. It could be, but it's what's it called? It's not like the $80 appetite. I'm not like, I don't like it. Cuz I'm like, yeah, I could play the earnings play, but like the whole idea here is like, bro, this could move 20%. That's what I'm saying, even on like a decent amount of shares, if you could get a bigger gain with the right leverage on this one, if you get the right move, you're going to be great, but the question is, do you want to deal with the problems? And that's where I'm like, I kind of don't. I'm kind of cool with not dealing with the problem. And then deal. But then if it does report and gets one of those like little hiccup candles, that would be it. But then if it reports, kills it, and then there's no coming back, then there you go. Marvel, we're talking about it, but I'm thinking we wait till after the report. My gut's just telling me this is going to be part of the movers. Again, I still like the IoT, but like this is just Marvel. That's it. Marvel has the ability to take over headlines tomorrow and then also at the same time be nothing. Does that make sense? It's one of those names where if they get put on the list now and they come back to what they did last year, those are going to be insane. But then also, too, if they just report in the line, they lose that hype. It could go down a lot, but it's also not. It's just not going to do anything. Let's see. Yeah. Wait till after hours. 10-minute rig. No way. Bro, the days have been flying. The days have been flying, my brethren. My goodness. Market on close, $1.4 billion to the buy side. My goodness. We have any news for tomorrow? Yeah, the non-farm payrolls. And then the Samsara is going up. We got 9 more minutes. Let's see. Will we stream early? Yeah. And then today I'm going to be streaming live on the main channel for the State of the Union. I was planning on doing a live watch list, but it just so happened to fall on the date of the State of the Union. Remember post earnings? Yeah, I think I'm gonna wait Marvel post earnings. If you really got the FOMO, you could go for the option or 100 shares, but I think we're going to wait. I think it's and then IoT is the one I'm putting it on. So IoT, I have risk. Unless I want to sell out IoT and then move it to Marvel, but I do think IoT is going to have a little bit more moves. The main channel is called the Trading Fraternity. So it's second link in the description of this video. But if you go to youtube.com/tradingfraternity, the trading fraternity, you'll see, damn, NVIDIA 925. My goodness. My goodness. They're both kind of, yeah, Marvel's running, IoT already ran up. Some of them already had a run up. IoT was more pinned, but even then that had a little bit of premium. I mean, dude, Marvel's already up like 3-4 on the day. Marvel's up 4.5. My goodness. The hype for Marvel, man. NVIDIA. AI parts. Broadcom, too. Broadcom's just expensive. But that's up 4. Again, Marvel's up 4 point. Literally, Marvel's went up almost $1. $2 since we've debated this play. So that's what I'm saying. It's going to move dollars, bro. That's insanity. Bullish Marvel. I think it'll be a good one. I think good one just in terms of excitement. It'll be a big story. I'll find out on the next episode. No creative way. You could do spreads. The only thing is, I mean, Marvel, again, those like 110s for next week. If you really think it's going to have a crazy blowout, those would be the ones you'd want to go for. Or you go for the Aprils for 90 cents. Yeah, I don't know. Those have been there. Yeah, Aprils are, but those are far out. But that's what I'm saying on shares. If you want that type of move with options, if that shit actually hit on shares and it really went crazy, you're going to make 30, 40 grand in a day. That's why I like the high gamble plays on this one. So it just all depends, baby. It all depends. All depends. Final 5. Well, here it is, Chattadonia. Here it is. Earmuffs, we are getting close to it. Yeah, so Chattadonia, I hope you guys are having a wonderful day. I hope you are feeling blessed. All righty? So enjoy your time. Enjoy your moment, but we are about to get into earnings. The day is about to end. So I want to make sure you guys have a great end of the day because you have been such an amazing audience. So when I say earmuffs, that is your warning to mute your speakers because it is about to get excessively loud in here. It gets so loud, people have reported issues. They've unsubscribed. They'd have to go see a doctor, a BBB specialist, herpes specialist. A lot of people, it gets really bad. And honestly, this is all a result of being sensitive to loud noises. So just in case that's you, I want to make sure you're protected. I want to make sure I see you here tomorrow for the big data. So when I say earmuffs, that is your moment to mute your speakers and protect yourself from any of those loud noises or negative effects that may occur. All right? Sound good? Sound good. Great. So earmuffs is the key word. That's our safe word here, and you'll be good to go. You'll be good to go. You'll be good to go. All right. I think we're almost there. All right. Earmuffs. Earmuffs. It's that time. Protect yourself. Okay, I'll BRB. Or not, I'm not going anywhere, but yeah, okay, earmuffs. All right, ladies and gentlemen, we're making our final approach. As we make our final approach, you guys are holding on to any bags. Please throw them in the overhead bins above or firmly beneath your seat. We'll be coming through the aisles with a trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal description. That's going to be your nightly watch list and main channel layover around 4 p.m. or 6 p.m. live tonight. And then we're going to be taking out promptly around 6 a.m. out of sunny San Diego, California. As we make this final approach into San Diego International Airport, it's about 62 degrees, partly sunny, depending on where you're at. Otherwise, looking like a good day if you just bought the dip on anything that is reporting has AI or is just the general market because it won't go down. But good news is we are no longer under COVID guidelines until the election, so no masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys in business. If you're interested in your Call Rapid Awards program card, please flag down their flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the Colt, and hopefully have a wonderful evening. Chattadonia. It's time to bring it home. It is time to wrap it up. You got earnings after the bell. You got a little bit of time. You have the State of the Union tonight, youtube.com/The Trading Fraternity. We're going to be live for that. But other than that, you got the data in the morning. You better make up your mind. Are you going for the Marvel? Are you gambling afterwards? Are you going IoT? Are you going Broadcom? What are you going to do? You don't have much time left. You have 1 minute. Go, 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 go. Ladies and gentlemen, boys and girls, it's time to wrap it up. Bring it home. Finalize those plays. Speak now or forever hold your peace. Are you playing the data in the morning? If it's an option, you got to wrap up that play now. Shares, futures, you got more flexibility. If you're playing in earnings, you got to lock in that play right now. Everything changes after the bell. Everything changes before the bell tomorrow morning. But you got to wrap it up and bring it home. You have less than 10 seconds remaining. Let's go, baby. Finalize those plays. The home stretch. 5, 4, 3, 2, 1. Ding 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 ding. Horna. Let's go, baby. Oh, Chattadonia. We did it. We made it. I need a GG in the chat, baby. Let's go. Let's get the earnings. Once right when Marvel comes out, I'm going to stop. We'll see. I don't know if we get movements, baby, but that's it. I need a GG. It don't matter if you made money or lost money. I know you in the game. I know you learned something. Everybody that contributed brought something to the table. Plays, news, vibes, info, personalities. Good questions, baby. Way to hold it down. Hope you know we stronger as one. Way to hold it down, Chattadonia. And listen, without a GG, you're more likely to get banned. You better drop that GG now. Before the earnings come out, you better drop that GG. That's all I'm saying, baby. Hold it down. It's bigger than you. It's bigger than you. It's bigger than sportsmanship. It's for everybody. Let's go, baby. Good game. I see you too, Twitch. Way to hold it down. Members, non-members, stream alerts. My positive people contributing, baby. Anybody sending in a dono, you didn't have to, but you did. You showed love. Way to hold it down for the chat, baby. That's what I'm talking about. That's what I'm talking. That's it, man. Listen, hey, I gotta get these all ready. Gotta get these ready if we want to do these. That's it, man. Alright, I love you, man. I'll see you tonight, 6 p.m. Main channel. Now we wait for earnings. I need me to rock. You won't see me a lot. Monday through Friday, you need me, let's talk. Huh. All right, man, that's it. Oh, Airbnb? I might let this play until it comes out. Where's Marvel? So here are the expectations. I'll get up IoT expectations too. And then we'll go from there, baby. I don't see anything moving yet. I don't see anything moving yet, baby.
Pleasant out, Pluto. Rollie on my wrist. Nah, I don't wanna rap that. Pull up in a bed body, I don't put a tap back. Hit me with the divvy, I don't even need the NASDAQ.
Sucks, I do gotta go soon, man. We'll try to wait for these earnings, but I love you, Chad. That's the day. Thank you for being here. We're waiting on the earnings now. All we're doing is waiting on earnings, baby. So let's see what we got. Let's see what we got. Thank you for liking the video. Thank you for holding it down. I'll see you on the watch list tonight, baby. And tomorrow morning, bright and early.
Got a little fame, but it ain't changed nothing bad me. Nah. Same old J, you smoke more J, still make dumb plays, but I play less games. Always ready for the war, I ain't playing campaign, but I really need a reason for I buy champagne. Pop before the fall, so I gotta stay safe. Lot of money on the table, boy, that look like bait. I'ma think it before I get it, boy, that look like fate. Either way, it's so it goes, though I love that fate. Had these motherfuckers say to me before they love me. Now they selling half and they ain't playing with their money. I told them take a tenth and pay yourself, cause that's your money. Put me on the bench, cause I ain't playing with you dummies. They ain't gave us nothing, even if they did, no, I wouldn't take it from them. They was took a shit, but we still try to love them. Got so many wins that I can trip about a fully on my wrist. Nah, rather get a B&B and rent it for the scenery. And maybe live the season and keep on buying stats every month. Spread it evenly and shout it out to people that believe in me. I hope you living peacefully and same thing for the people that don't speak to me. I do this shit for everybody equally. I guess it's just G and me. And when we done with that, we going back to the reality. Yeah.
That's it. No, it's not out yet. It's not out yet. I was trying to play some Uncle to kill some time. Usually we get something. Give it like 2 more minutes. We'll probably get everybody. But IoT is not out yet either. We are waiting on that one as well. I don't got nothing. But Marvel already moving pre-mar. That's the jitters, bro. That's the jitters on these big earnings. It usually be moving like that. You've seen it before. IoT's up. We could sell out of IoT right now with 180. You're in the car. Don't worry, baby. Don't worry. We'll see the move when they come out. We will scourge. We'll be scoundrels. We do have Costco coming out, too. All I care about is Marvel and then IoT, though. Again, Costco, unless Costco really surprises, but Costco I do think is going to be somewhat of a dud. We will find out. Yeah, Samsara's not out yet. IoT. Broadcom, too. That's going to be the other one. And I have the numbers. Oh, MDB, they're moving. Did MDB come out? I don't have the numbers yet. So 45 seconds, 105. A lot of companies decide to release around there. So good luck. IoT kind of gapping, but nothing out. 30 seconds. Is Docu, they're already moving. Again, take a look at the wire too. Oh, there's Samsara. I think IoT. That a pop and lock. I don't have the data out yet, though. Luminera, Porch. Come on, Luminera. All I see is Porch. Gevo, Onsi. IoT is not out yet. IMMR, I think that was a runner. Oh, whoa. I think IoT came out. I saw Samsara. Samsara just flashed across here. MongoDB out. Oh, Marvel. Hold on. Let's get to Marvel before any of them. That's going to be the one we want to see. So, again, they're already down 9%. They announces accelerated infrastructure, $3 billion stock buyback. Revenue was $1.427 billion, up 1% over a year ago. So they beat, I don't know where guidance is. First quarter expected to be 1.1. They guided lower. So, no, they guided lower off that one. Yeah, so I don't know. They're in line, but their guidance really isn't that hot. GAAP gross margin expected to be 44.5. Ooh, that's GAAP. I don't know about non-GAAP. Non-GAAP expected to be 62 to 63. So that's still lower. Their guidance is pretty low. Honestly, yeah, I don't know. Marvel wasn't that great. I don't have BBAI yet. I'm not looking there. I don't know if Samsara came out. But, yeah, they beat on this earnings, and then they missed on guidance. So Marvel's kind of tough. If Wall Street just wants to be crackheads and buy it up, a big beat and then really, really soft guidance. And then now it's literally, it's like right back down to where it was a couple of days ago. Docu's going crazy. So let's see. Well, I'm glad. I don't know. That Marvel might even be hard to play there. Yeah, Docu announces fourth quarter fiscal results. Total revenue $712, increase of 8%. Billings were $833. I don't have the easy numbers yet, but I think they beat. They see full year revenue 2.92 to 2.93 for Docu. Oh, they're up 15. Damn, son. 2.92 to 2.93. I don't have full year guidance. Oh, yeah, they killed it on this quarter, though. Yeah, Docu did good, and I think they guided up. But, yeah, their revenue beat by like 10, 20%, I think. Broadcom, I don't know if Broadcom's out. Marvel already starting to pop. Did IoT come out? I swear I saw that one come out. A lot of things happened. Samsara. No, I swear I saw Samsara come out, but it didn't. They had that pop and lock. No news on Broadcom yet. Marvel coming up. Again, Marvel beat, but guidance was really weak. Again, it's been like a solid year since Marvel came out with good guidance. The Marvel did do, what's it called? They did a $3 billion buyback. But yeah, the guidance was pretty shitty. Cook is out. Lumo. Broadcom. I don't think Broadcom's out yet. We're waiting for IoT now. And then Broadcom. Yeah, Marvel was kind of a dud. Just beat and then guide lower. So take that and then big buyback news. It's coming up a little bit. And remember, it had a $20 move in the last couple of days. So either conference call is going to run this up or the crackheads are going to buy it up. But honestly, that's what I was saying. The hype is there, but if the hype don't materialize, you're like just as easily clapped. BBAI, is that IoT trading lower now? Yeah. Damn, we're still green on IoT? Oh, that's because the bid and the ask is just tripping on IoT. Broadcom not out yet. Oh, Samsara is out now, I think. No, it's not. MDB did come out, I believe, yeah. Let's see, MDB. Yeah, MDB, they were 86 cents EPS versus 46 cents estimate. So they did very good. Revenue 458 versus 437. Quarter one guidance 34 to 39 cents. Estimate was 62. And then revenue 436 to 440. Estimate was 452. Full year guidance 227 to 249 on EPS 3 versus 327. And then revenue 1.9 to 2 versus 2.0. So they missed and then they beat and then they guided lower. And then full year guidance is pretty whack. They're down. They beat, but then their guidance was pretty bad on MDB. I'd say guidance very weak on there, actually. And then Marvel's still down. Broadcom hasn't came out yet. IoT has not been out yet. Come on, IoT. Dude, IoT is just tweaking out. Docu 65. I'm glad we have those yearly contracts, so hopefully we get lucky on those. All right, IoT's moving, but I do not have the earnings. Whoa, 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 whoa. 37? Did it come out? Releases, top logistic. Oh, financial results. Yeah, 276.3, ending AAR 1.1. I have it. So, they beat by 20 million. They beat by 10%. 1.8 thousand customers. Hold on, where's that at? How much do I have of that? Yeah, I think they beat. They're kind of coming down here a little bit. I don't know what their guidance is, but yeah, we're up a lot on the play for now. Let's see. Samsara sees 25, 1.19 to 1.2. Estimate was 1.7. Yeah, that's good. All right. Well, it's not letting me make a move. Very, very widespread. 20 cents. Come on, Samsara. Total 271 to 273. Estimate was 267. So that's not as good. All right. Where is it? All right, I sold out of Samsara, $1,400 profit. I had 2,000, but it wasn't filling me. But not bad. I sold out of the Samsara IoT. So that one at least hit, and then we saved ourselves the pain on the other one. Coin, big candle. There's nothing going. I mean, the market's closed. All right, I'll take it. I think we're about to go break even on that. And then where's Marvel? Marvel's still dropping. So we'll see again. Marvel guidance was pretty whack. Costco pop a little bit. I don't know if Costco earnings, again, I think they're going to disappoint for the most part. We'll see. IoT at 40, good. I was trying to get them in at like 40, 41. I got 39, so not bad. Again, we bought those at like, what, 33? So pretty good. I didn't do an MDB play, no. I didn't do, all I did was, honestly, wait, I forgot. All we did was a Marvel put, right? Oh, shit. I didn't even think about that. I was so caught up in if I was going to play the shares or not. So, yeah, I waited on I'm glad we did. So, IoT worked out. We got a nice profit on that. I totally forgot. We got a Marvel 64, though. So, we might still be out of the money. 64, another $10. Yeah, and then IoT's climbing back. So watch out. IoT might be able to run again. How much percentage is IoT? So that's already 19. Oh, shit. IoT's going. Oof. Hold up. Yeah, IoT, and that would have got me. I had $2,000. I only walked away with like $1,400. That one would have been fire right there. Just another minute. Marvel. Back to where it was the last couple days. I'll give that a second. Give Marvel a second. Broadcom dump. A little bit. Let's see. Broadcom. I have the results. Revenue of $11.96 million. Let me get the estimates. NVIDIA Big Red. Well, Broadcom came out. It was 11.96. They came in above on revenue. Cash from operations, 4.81. They beat on that. Let me see their guidance. First quarter, fiscal year, revenue guidance of approximately $50 billion. So I think that's where they're at. And then adjusted EBITDA of 60%. So they came in line on their guidance. I don't think anything was too crazy. Gap is starting to go. Oh, I told you those upside gaps might have been it. Yeah, IoT ran. That one's good. You'll have anywhere between $1,500, $2,000 profit on the shares. I already sold out. I took $1,300 or $1,400. Yeah, honestly, Broadcom's guidance seems to be in line. It seems like they beat and then they guided in line. I don't know why they're down 4. I mean, again, Marvel dropped off something similar, but yeah. Well, I told you, Gap has upside, and a lot of these retailers have been going crazy. BBAI, they're down. They're down 14. They may have reported. Remember, people were looking at their EBITDA. Again, Broadcom's down 4. Broadcom's not even down that much. Remember, Broadcom was pricing in more. But again, Broadcom beat and then just like at in line for the most part. Yeah, everything. Even Marvel's just hugging the low. If Marvel flushes again, I'm going to buy it. I want to kind of buy it here, but I've been here before. If you buy here and it flushes, you'll be down 10% before it finds a home. All right. But other than that, I'll stream alert it if I end up buying Marvel. I'll give you guys the update on the State of the Union. We'll have the chat of the Union, but that's it, baby. We got to wrap it up. It's time to go. It's time to go. That's all there is. Broadcom beat, but in line. Marvel beat, but then guided lower. IoT beat, and then I think kind of guided up, but we hit on that. Honestly, our plays, IoT long side, Marvel downside. I mean, we're kind of doing good so far, but I don't think Costco came out yet. I'm not too sure, but that is it. I got to get going, you guys. I will see you tonight, live channel or youtube.com/The Trading Fraternity, 6 p.m. We will be there, but thank all of you for your time. Thank you for being here, giving me the opportunity, showing love to the Chads, making this a fun place to be, participating, interacting with me. I love and appreciate y'all, so God bless you and thank you. God willing, I will see you here tomorrow, bright and early, so be on the lookout for that, but that's what we're expecting. Go read the books, Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. And don't forget why we're here, why we keep going, why that faith, hope, and love ain't ever going out of style, baby, and why whether we are tested through the test, tempted through the test or the flesh, we will always prevail, baby. Why, baby, why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. So, Chattadonia, I love you. God bless you. Have a wonderful evening. I'll see you tonight on the live Watchlist. And peace out. Horn. Hey, Horn. You mean Joe. Go, Joe. Yeah, I'm waiting. I'm getting Marvel a little. I want to do it now, but I'm going to wait. I'll send you a stream alert if I end up doing it. Otherwise, you got to wait. I don't want to go too early. You have a good night, all right? I'll see you later. Have a wonderful day. Bye. I'm leaving. 6 p.m. Pacific time. State of the Union. I'm going to be on there. Come on. Vote for me. All right, peace out. Now, Joshua. Exactly. Before you get going, Joshua, can I read you this? Joshua, have you ever read a book called 50 Shades of Grey? Does that sound familiar? Have you ever heard of a book called 50 Shades of Grey, Joshua? Can I read you an excerpt? He proceeded to beat me across the face as he was undressing me. Does that sound like the people you want in charge of your financial system? Now just tell me, true or false, pal? A sex tape was filmed in Congress. True or false? That's all I'm looking for. Just true or false. Very simple. Exactly. I reclaim my time. Have a wonderful evening. Goodbye.